What's up, Tasty Nation? Welcome to the show. Good morning. It is Thursday, August 13th. We just got some numbers that hit the wire. PPI, E-minis and NASDAQ were higher. NASDAQ just sold off, being up 20, 30 points to being down 20 points. My name is Mike Butler. I'm here with Jermal Chandler. Join us on the YouTube channel if you haven't already. We're streaming live there. You can throw in your trade ideas, questions along that right-hand side chat, or on the bottom chat if you've got your windows a little too small. Depending on where you're at. But
yeah, right.
Jermal, how you doing this morning?
Doing well. Like you said, some numbers just hit. I'm looking at them right here, and PPI and jobless claims both hit at the same time. Jobless claims 9,000. They're up 9,209,000 in the August 8th week survey of 204, so a little bit higher. But PPI was in line. Is there any surprise? CPI was in line the other day. These numbers mean nothing. The market is going higher. It's the read-through. It doesn't really matter right now. Everything is fine. We're in the dog days of summer. Things are calm. Volatility is low. Resume the trend. Resume the trend.
There you have it.
That's
people.
it, Mikey.
Yeah. Market's just like doing nothing right now. It's really frustrating. Crude oil down $1.50 though. That's interesting to see. But yeah, I think keeping our eye on what's going on with crude, which is not too much. Flat curve here all the way through December, and then we kind of trickle down into the low 70s. But that trade seems to be done for now.
Yep.
But we've seen this thing pop and reverse many times. So keep your eyes on that. But yeah, as of right now, E-minis up 10, NASDAQ down 20, down the Russell are up, and we are kind of just chopping around. We did have earnings after the close, a few of them. Cisco, really depressing chart for my trade because if you zoom out in the 1 minute, you can see we got this big rip up to 130, 135. And I was saying, yes, here we go. We got another win on our hands. And immediately after, sold back to flat and then dropped about 5 points. And that's where we've been trading ever since. So Cisco down about 7 points. It's not the end of the world for my position because I went out to September to buy that those two options for the double calendar spread because the premium was low in September and I was able to afford the 130, 135 long calls in September with the shorts against it in the 1 day. Just because the short options for the 1 day cycle was like basically the same premium relatively. 1 day to go, $200 for the 130. 36 days to go, $450 for the 130. So plenty of cost-based reduction. These options were reduced by 50%, these long ones. So I'll just probably leave them on. I doubt we'll have any premium to sell against the longs going forward, but who knows? Maybe they'll give us a little premium in the 8 day or 15 day, but this lower-ish implied volatility will probably prevent us from doing that.
Yeah, who knows? And again, I'm in the same boat as you. I mean, I did the same strikes. I did one extra further up strike using the 140, and we'll see what happens. I mean, again, one of the charms of these trades is that if it doesn't work out right away, we are, in this case, long September. So got some time. Maybe the stock ends up rallying back. We'll see. But they had a nice runway to end up making this be a really good trade. Given that yesterday we saw some move to the upside after NBIS and LITE and some of these other names had earnings, and it just didn't work out. It looked like it was going to be great, but oh well, these things happen.
Yeah.
But CBRS also had earnings, and that one tanked after earnings. Again, this is another name that was an IPO very recently, and that one also missed the dunk on earnings. So couple of names there, but in general, these earnings are kind of dying down.
Yeah. Silver lining is the CoreWeave triple calendar spread is actually going to be coming in nicely today with CoreWeave down in sympathy with the rest of these other stonks down to 105. And we've got the 90, 95, 100 triple calendar spread there. And we should get a nice green print after this little sell-off today.
Yep. Speaking of today, let's quickly run through the list of things we got going on. We have the opening bell at 8:30. We got 8:45 live trades with TP. We got 9 a.m. live from the trade desk with Q. Trading Charts with Tim Knight at 9:20 a.m. Central Time. We have Tasty Research with Julia Spina at 9:30. 10 a.m. Confirm and Send, Chris and TP. We have Risk and Reward with Errol Coleman at 10:30 Central Time. We have a special guest, Rick Rule, on the network at 11 a.m. Central Time. Then we have Trade of the Day starting off at 11:30 a.m. We still continue to hear good things about that. I kick it off at 11:30, followed by Mike 15 minutes later, followed by Errol 15 minutes after that, followed by Chris 15 minutes after that, followed by Ilya 15 minutes after that. But right now, it's 7:35 a.m. and Chris is joining the show. What's up, Chris?
Gentlemen, how are you this morning?
Whoa, no glasses. Holy.
No glasses, no facial
What are we
hair?
doing? Oh, my God.
New
I
man.
know.
This is a new man.
You know, I couldn't get the lighting right in here. The glare was, I looked like Elijah Wood in Sin City, you know, with those glasses. And it's like, that's
Actually, you
not
look like
the look
Elijah
I'm
Wood
going
right
for.
now that you said that.
Thanks. Gotta go.
He's getting ready for NFL season for the Jets. He's getting ready.
I have the Hobbit feet for it, so it all fits, I suppose.
Jets
You
are the
look great.
fifth
Good.
most valuable
You look
franchise. How do you feel about that?
That doesn't make any sense.
It doesn't.
You know,
It's crazy, right?
to think you could be getting them at a real discount right now while they're in the longest streak of no playoff appearances for any team in North American sports, I think.
I mean, can we talk about just what a sham it is when we talk about valuations with these teams? I mean, everybody's valuation just went up because of whatever just happened in the Lakers situation, which we're not going to dive into, but they just got bought for $12 billion. That means everybody's valuation goes up. And that happens every time one of these teams get bought, right? Like you get bought, all of a sudden everybody's valuation goes up. I mean, that's crazy how that works.
Yeah, if they can do it.
And nobody can, and no, there's nothing, like, there's no commission or anything. Like, it's just what it is. How crazy is that?
Jermal wants to put this on the platform so we can earn a commission on it.
Man, don't get me started.
I want to buy the Lakers. What's the ticker for that?
I really like Geno Smith. I hope he pulls through and gives you something to root for.
Oh, you do? Why?
Because he's just one of those old guys that can turn it around. Like he almost did it in Vegas.
Old guys. I remember when he was a rookie and got punched in the face in the locker room, and that caused a big problem.
Yeah,
like, what do you mean, old guys? You're making me feel like Matt Damon at the end of Saving Private Ryan. You know?
Well, he's
It's like,
old for
come on.
football.
I have a lot of references today.
What is
He's
he,
old
like,
for football.
what is he,
Yeah,
35, 36?
basically dead.
Probably,
Yeah, that's exactly right. But yeah, we'll see. We'll see if they can get some wins there.
There you go. $13 billion. I mean, wow. That man, the Warriors are $11 billion valuation? Get out. Wow.
Got to be more than that now.
Really? I mean, I guess. Yeah. Yeah.
I mean, if I'm Jerry Jones, I'm selling now.
I saw yesterday.
Yeah, no. If I'm Jerry Jones, you got to sell right now.
Jerry Jones is one of the most frustrating people to ever live. Literally, I have some friends from Texas that are just like, he is going to drag this team into the ground. Although he did, you got to watch the documentary if you haven't watched it.
I watched it.
The one from the 90s. Like where they talked about the 90s Cowboys.
Oh, yeah.
And they talked about the run up that he had. He basically like risked his whole family's life to get this team.
Yeah, that's why he acts the way he acts. Yeah, no, he definitely did.
Really?
Yeah.
There he is.
This guy.
There he
Oh my
is. Yeah.
The documentary is pretty good. I mean, again,
We had a Jerry Jones B-roll ready. That's incredible.
Yeah, I know, right?
They're quick.
The team, they love them. They love them.
They're quick.
Yeah, it's a trip. I mean, again, those guys. I mean, it's crazy. Him and Jimmy. I mean, they had magic. They could have kept it, but this dude wanted so much claim for what was happening on the field, which you didn't have any. You didn't do anything of that, man. Like,
yeah, that was the big fallout.
Yeah,
with the head coach and him.
Yeah, my head coach, Jimmy Johnson.
There you go.
Hurricanes, baby.
Oh yeah, there you go.
That's right.
I didn't see the documentary, so my memory of the Cowboys in the 90s, I think, is Homer Simpson being disappointed that he gets the Denver Broncos instead. I don't know. I don't have a good frame of reference. I was more into Power Rangers back then.
Fair. Well, there's a Power Rangers in the news too.
I was deep into the NFL that
see the guy?
time. Huh?
One of the Power Rangers used his skills he learned on the show to rob like 20 houses.
No, I didn't know.
That was the headline I saw yesterday. I was like, what is going on here?
That's great.
In
Power Ranger uses show skills to rob elderly couple. That's the headline you saw.
I promise you, if you type that into Google, it'll autofill for you. I promise you.
All right. Okay. All right.
But
We're in the dog days of summer, Chris,
Yeah,
man.
this is where we're
Are
going.
we?
Hell yeah, we are. But that's okay. That's fine. Look, I mean, first of all, it's clear that this is not going to last, I don't think. And we've also had a crazy. I mean, I was talking about it with Errol the other day. We've had like 3 years in one already to this point, up to September this year. Like it really has. I feel like each quarter has been a little bit different.
It has. It definitely feels. What's the Lennon quote? There's some years where nothing's happened, and there are some weeks where years happened. This is definitely one of those like weeks where years are happening kind of periods, at least in my view. But you say dog days of summer here. I mean, we just got PPI this morning, and the market can barely flinch. We've definitely seen stronger reactions out of the gate from PPI, for example, and yet even after CPI yesterday, the market's kind of just falling flat. So where do we sit then for the next week or so? Pinning? We're just going to be quiet here. The next big catalyst is now NVIDIA on Wednesday, the 26th, not even next week. So I would not be surprised if we get a little bit less enthusiasm and excitement here moving forward. I know Ilya is going to point to something like retail sales tomorrow as the next big economic catalyst here. Maybe that actually helps drive some individual stocks that are more consumer-facing. Retail sales is one of the few, if only, economic data reports that actually reflects companies' real-time balance sheet information, as it were. So maybe you get that, but I don't know. It feels like it's summer right now. Overnight, it's basically all semiconductors. It's what's happening with the Kospi in Korea, and then that's filtering through to what's happening here. Beyond that, it's earnings, and then oil is not. Does oil know there's a war going on? That 5 ships passed through the Strait of Hormuz yesterday? 5. Okay, so no one's paying attention to anything.
Yeah, it's even on the PPI this morning, I thought the market would just move higher, and then 3 seconds later they whacked it. And the NASDAQ is now chopping into red territory. But yeah, crude oil leading the way to the downside in the CME watch list here for the futures, and some other random products we don't trade all too often, but live cattle down 1%, corn, silver, gold. To the upside, nothing over 1%. Like this is the third day in a row, I feel like, where most products are within 1%, or there's a few that are just outside of 1%, nothing crazy.
Yeah, it does feel that way. Can we talk about the SPX before all the vol disappears again then?
Sure. Yeah.
Because like we have right now at the edge of the expected move in the 0 DTE, we're talking 5-point wide strikes, 77.10, 15, 77.80, 85. Short iron condor, $1.50 in credit right now, risking 350 to make it $1.50 here. Mike, I got to route this now. And you got to route it now because the past few days when we've seen the market open, that's gone from like a 30-point expected move to under 20 in a blink of the eye.
Yeah.
And while the market's moved around a little bit through it, if you try to put the trade on too late and when the vol was sucked out like I did earlier this week, I got in like an hour after the market opened. The market settled right 1 point below my short strike in the put spread side. But if I had gotten it on earlier, I would have had another 25 or 30 points of leeway. So executing this now is more important. And I know that when we're on the platform here, I'm using the desktop. So if you go to the bottom right, it says session, regular, or global hours. We're not in regular hours right now. So going to try to push this through. Yep.
Global trading hours enables you to trade these pretty much around the clock, which is really nice for SPX. If you're an SPX trader, we've seen a lot of activity there in the pre-morning session and overnight as well. But yeah, I think it's a good call out. And we did this a couple days ago where we just threw on an iron counter in the 0 day. The market didn't do anything on the open, and they just zapped ball. Because this 31-point implied move kind of reflects the open more than anything else. Because this will drop to sub 20 10 minutes after the open.
But like, let's go to August 14th. Let's do the old classic thing we used to always look at. Let's do the $5 wide around the expected move, just to show how low vol is and why you shouldn't be going $20 wide. I don't think.
Yeah.
And why and do the iron condor. Sorry, just for the for tomorrow iron condor around the expected move. We used to do that. We used to look at those every day, and we used to be like, oh, we get $2 for that. And now it's like you're getting $1.70. You're not getting what you would normally get because obviously implied vol is 11 for tomorrow, and it's very low. So this is not the environment to go wide on the iron, $20 wide on the iron condor, thinking that the market is chill, because that is the literal definition of picking up pennies in front of a steamroller right now, when VIX is below 15. So you just don't want to get too carried away with these. You don't want to size up because you're trying to collect more. You just don't.
Yeah.
And the data shows, and I did put in the request to the research team to update those slides that we had from a while back. But when the VIX is below 15, you have higher daily volatility, average volatility, and lower returns when you're simply like short a straddle or a strangle in the market. You just got to be effectively long in some form or fashion. That could be short a put spread. It could be long an at-the-money call spread. If you're adventurous, go out a little bit more in time and maybe reach for a call spread. But you're not, the compensation and the risk that you're taking isn't necessarily there just to be simply short vol when vol is this depressed. Mm-hmm. It can stay depressed for a little while longer too. So let's not, just because it's a 14 VIX doesn't mean that it can't go into a 13 handle or 12 here during the summer months.
Right. And so it begs the question, how do we trade? I mean, I don't know about you guys, but it's been a lot more calendars, diagonals. I told myself last night, I got a lot of call diagonals because that's just the way I like to trade. That's my bias. I like to trade from that side. But I told myself tomorrow, again, we do trade of the day. I might end up finding a put diagonal in something today, believe it or not. Just to have something like that on. I don't necessarily like to buy puts anymore. I don't necessarily like this situation. I don't like to do, hey, we're at VIX below 15 and market's on all-time highs. I want to try and play to the downside. I've played that game before. That game doesn't really work for me. I'm not saying it's not going to work, but I just don't like to try and predict when we're going to crash. I don't think that just because, consumer credit is really high right now and because there's possible midterm elections coming that I'm going to try and guess when the next real big time high vol situations go. I don't know. I have no idea. And I don't want to spend, all this money in puts thinking that that's when it's going to happen soon. I've lost a lot of money doing that in my past. So I just like to clean up things in the book. I like to get my buying power down low, which is at 23% right now, by the way. I got the war chest. I'm ready. I'm ready to go. But at the same time, I'm finding little small trades to do that can benefit me in this environment. And it just so happens to be, situations now we're possibly going out to October and possibly doing diagonals being short September. That's probably the way to play.
Yeah. I think these markets and these low VIX environments, low volatility environments are the perfect time to throw on some hedges and downside trades just in case things go haywire. And we've been layering into those with SPX and NDX downside butterflies that are really cheap right now. Mm-hmm. We've been getting them on for $3, which is crazy. But I do have this super bear that expires today that I put on yesterday. So I layered on, instead of doing another 0-day trade, I went out into the 1 day and I did that expect to move iron condor. So I got the $1.55 credit, 5 points wide at 7,700, 7,800 for the shorts with $5 wide wings. So we'll see. This could come in 20, 30% just today if we get another nothing burger for an open, which has been the case for the last couple of sessions here. But yeah, I think this will be...
I actually got filled on that SPX, thankfully. Nice. I didn't want yesterday's problem, but if it's a quiet open, right? Yeah, so $1.50 credit for a position that's an 82% probability of profit. I'm usually content with you're going to give me a third of the width of the strikes, and you're going to give me a 2-in-1 shot, 67%. I'll take that every day. So the market here, once you get to that open, Mike, I think you're spot on. If we don't get big movement, maybe go for a walk.
Yeah, go for a walk, come back.
I know the producers hate when it's don't tell folks not to trade, but we have to be honest with people.
Yeah,
right. If the market if the market is just freaking paint drying, don't force yourself into things. If you're going to do things if you feel compelled to trade, I want to do something, do it in an area where you're not putting more eggs in the same basket. And so maybe yesterday's trade of the day ideas that I put on would be a good example for this. It was rolling a position in Kimberly-Clark that has nothing to do with AI. Toilet paper's not being displaced by AI anytime soon. It was putting on a position in CSX, short iron condor, railroads, that has nothing to do with AI. And then also looking at something in Travelers Insurance, which is a wide market, but the insurance companies have been really strong. They're having a little bit of a pullback if it's Chubb or Progressive here. Again, not really being touched by AI in terms of displacement right now, but perhaps helping with profitability, better liability who knows? It doesn't matter to me. But looking for uncorrelated bets to everything else I'm doing right now. So while I'm putting new things on, I'm not chasing stuff or forcing things in crowded corners of the market right now. And I'm just trying to find the opportunities that, if AI goes sideways for the next 2 weeks, are the railroads going to take it on the chin? Probably not. And by doing so, I'm bringing down beta-weighted deltas of the portfolio.
Yeah, that's exactly it, Chris. And then we're all saying the same thing. And yeah, we're being honest with the crowd. I mean, look, this is just not the environment to be laying on a whole bunch of risk. Like I've said, the last few days, I've taken off a whole lot of risk. I'm at 23% buying power in the portfolio right now. It's pretty low, and I love it. And look, I've made a lot of money in the last several weeks, and so it was also just a good time. And the market is giving you this opportunity to clean up your book, because the fall is not going to be like this. The next earnings cycle definitely won't be like this, right? It's going to be wild. I don't know how wild, if it's going to be wild as what we just witnessed, but it'll definitely pick up again. But this is just one of those quiet times that, honestly, this is the quietest time I feel like we've seen for this extended period. It's been like a solid, almost week now. This is the quietest time that we've seen in probably a couple of years.
Yeah. Jermal, let's paint can we paint a picture for folks, by the way, with all this?
Yeah.
You say the fall's not going to be quiet next earnings season. This earnings season was July. They happen every 3 months. So we're going to get to the middle of October, and right now, 3 months from today will be November 13th. And in the middle of earnings season, we're going to have midterm elections. Mm-hmm. If folks think that what's happening now is going to continue in perpetuity, I know that the more experienced folks who've been through more than 1 or 2 market cycles don't know that. But if you're a newer trader, this is the first time you're listening in. Don't presume that what you see more than 4 or 5 inches in front of your nose is what exists there. The market is going to change dramatically in the fall. I think most of us expect that.
Yeah, and you can
which not to be a contrarian. That if everyone expects that, then it's not going to happen. But okay,
there's no way it cannot happen.
No, I mean the vol market's pricing that in. We have the U at 1790. First time I've seen a sub 18 handle there in an active contract, and then it spikes to 1950, and then it's flat in the latter half of the year at 2020. So the market is pricing in that increased vol too, which is good to see.
But it bears mentioning, I mean, that V contract is October. That's 30 days forward looking. So it's basically looking at November, around that time period, around those elections or whatever. So, it's going to pick up. And again, I've been thankful for this, because I was telling Mikey the other day, I didn't realize how many positions I had on. Like, I had a lot of stuff on. Really did.
I've got a ton of stuff on right now. 1, 2, 3, 4, 5.
I had way more stuff on, and I had to,
I may have 50. I may have 55 positions on right now.
I had to. I don't know if I had 1, 2. 3.
I mean, yeah, Jermal's been closing stuff left and right. You can see this here.
Well,
the closing action, almost all. This is between us 3, but a lot of these are closing orders versus opening orders.
Yeah, I mean, this next little run here that I'm going to be doing through closing, I think is going to be, a decent little. So SPX, we'll see what happens. Cisco was the double bull, or Super Bowl as you guys call it, the short one. No, sorry, that's ASTS. Short 112, 113, long 133, 135. Now, I'm not too worried about the 133, 135 ringing the bell today. But the 112, 113, listen, we're still above the short strike. I'm going to want to get out of this right at the open if we're trading around 115, but I still like this setup a bit. I want to see how we settle today, but I may just take this position and restructure it and push it further out in time. Because Cisco still seems like an interesting setup. ASTS was a short iron condor we did earlier this week, the 61, 62, 82, 83 for their earnings. It's currently trading at around $73 pre-market. We held it after earnings because there could have been a little bit more decay, and it looks like there's going to be a bit of a bounce here. So that's going to come off now that it's more than 50% profit. Rocket Labs as well. That was a 72, 73, 97, 98 for their earnings. We're currently trading at 79 pre-market here today, so there was more decay. It's now past 50% pre-market. We're going to take that off. And then TSM. TSM is interesting because this is still, for me, that's all the stuff that's expiring this week. But TSM for me is expiring 8 days from now. When I'm taking a look at the position pre-market, it's a $10 wide strike. And if this is accurate now, it's decayed to 71 cents, which yesterday it wasn't past my 50% threshold, and now it would be. I like the TSM chart here. So I've been talking about diversification and putting on new bets that are uncorrelated to anything else I'm doing. TSM is already something I'm doing. So this would be a roll candidate as I look around the corner. And, I probably roll it today or tomorrow. I don't need to wait for any more time here. We've now decayed like 80% of max value just by spot checking with my eyes from where I entered. That's good enough. And so I like the structure still, just like with Kimberly-Clark. I'm going to keep the position on. I'm just going to change the duration, as it were.
Yeah, I mean, when I used to work at a trading firm, we used to have like every, once a quarter, we have risk management days. Everybody hated it. Like nobody wanted to do it. Nobody wanted to take those hard looks in your portfolio. As a matter of fact, what would happen sometimes is you'd have to give your portfolio to somebody else for a day, and they'd look through your positions and kind of give you suggestions on things that they think, that they would close. It's a hard look, man, but it helps. And honestly, over the last 7 days, we've had 7, honestly, it's been quiet the last 7 days. These are basically risk management days. These are opportunities to clean up the portfolio, fix a few things here and there so that when things happen again, who knows what this next quarter looks like. First quarter, we had gold and silver going absolutely nuts. Second quarter, we had the war kind of basically really happening and the oil stuff going like crazy. This past quarter, and all of these last 3 quarters, we've had all kinds of crazy stuff going on with these tech names. What is the fourth quarter going to bring? Who knows?
Who knows?
I do like
Who
that.
knows?
I think that's a great way to hedge the potential egos that could be floating around.
It was
like
a trip.
Or it could fuel the fire.
Jermal, if you had done that for me in January with gold and silver, and granted, I gave myself the tap on the shoulder, and I was very public about this, how I was starting to idiot-proof myself because I felt myself on tilt. I took some money off the table, made sure it went to my kids, right? So I can't touch that and screw it up for them, all right? But that's, it does help. And really, it was coming into the office, and you guys are like, oh my God, Chris is on tilt, and saying it to my face, and that interaction, it's like, okay, they don't know what I'm trading, what size I'm trading right now, but the fact that I know these guys well enough and I've been working with them long enough, and they're like, oh man, you're really over your skis. Wake up call. So maybe that's why it's a good thing when we say tastytrade.com/refer a friend, grow your trading community. Having other people that can be objective observers of what you're doing, who, if they're approaching the market in a similar way to you, shouldn't you guys come to similar conclusions? Mm-hmm. Then, it never hurts. And that's why I say, truthfully, and I've said this on air a while, every quarter I try to do a whole comprehensive review of everything I've traded, what's working, what's not working. Because if something's in my process is broken, I'm not going to be arrogant enough to think that the market's going to come back to me and my way of thinking. I clearly have to change. So, tastytrade.com/refer a friend.
Mm-hmm. Yeah. Couldn't have said it better myself. And I think that's the nice thing about posting trades to the follow page too, because people are looking at them. Some people are following them. Some people are doing the exact opposite. But either way,
public accountability.
Yeah.
And I see people do this dunk on folks on Twitter and Reddit for posting their their lost porn, as they call it. No, it takes big cojones to go out into the world and say, yeah, I just lost 87% of my. There's a guy on Twitter right now who ran an account from 1.5 million to 30 million over the course of 2 years and received all these emails from Fidelity. You're losing too much money, and now it's back down to a $2.5 million balance. So who's the guy on Twitter? Heisenberg. Imagine running an account from $18,000 to $270,000, and it's now back to $23K. That's the equivalent of what's happened in a short time span. But he's out there bearing his wounds and letting people see his mistakes. And so if you take anything away from it, it's don't do that. Mm-hmm. And that's more transparent and helps people more than just posting W's all the time, which I see that all the time.
I know,
it's
right? Incredible.
Some of these influencers on Twitter who have 100% win rates for all their trades.
Yeah, right. I know, right? They just always seem to be on the spot and right. That Heisenberg guy,
it's so easy.
Guy. I used to follow that guy. I haven't seen in years. I forgot about that. Sidebar, my wife and I are kind of rewatching Breaking Bad a little bit. Well, she's rewatching it. I just step in every now and again. Great show. Phenomenal.
Incredible. Same with
Tuco Salamanca is Better Call Saul might be better.
Yeah.
Honestly.
Yeah. I mean, he had the benefit of already doing one to kind of make that better. But I mean, the characters I think are bar none in the first one. There's just so many.
Character development in that series is incredible.
And the follow-up, so they did a movie on Netflix, El Camino.
El Camino,
which
yeah,
kind
it
of
keeps popping up because we're watching that. I'm like, I don't want to watch this shit. Really?
No. You want to watch it.
All right.
It's pretty good.
I'll check it out. I never watched it.
Yeah.
It ties up Jesse's story.
Yep. Well, Chris, appreciate you. See you a little bit later.
This wasn't a family show.
I'll go put on a beard and glasses.
This wasn't
so
a family show.
scared.
Just to do it, I would just say Jesse's catchphrase to you right now, but I'm not going to do it. It's too early. Lovingly, of course. Lovingly.
Science. Okay. See you later.
Adios.
Later.
E-minis catching a bid here, up 18, NASDAQ up 30. We're going to take a quick 90-second break. Join us on the YouTube chat if you haven't already. We'll see you on the other side of this break. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everyone? Welcome back to the show. We got E-minis and NASDAQ catching a bid here. Everything's green for now. Crude oil down 2%, but everything else is within that 1% threshold, which means the market is doing nothing, really, which is surprising considering we had the PPI, little micro shock, and then a little flattening of that, and now we're back up, 0.25% in E-minis and NASDAQ.
Yeah, it is quiet. And quietly, I'm sort of rooting for the market to just keep drifting ever so slightly higher. My trade of the day yesterday was a Super Bowl in SPX. You don't care about the short put spread. All you care about is the long call spread, and it's the 7,800, 7,815. That's always the real fun part of the bet, right? So that's the play. We'll see what happens.
I like it.
Yeah.
Yeah, this is...
And it's for Friday.
Okay.
So my idea is like, by the end of the week, what's going to happen? You know what will happen? Is if you see the at the end of the week, like CNN and all the news outlets are like, the S&P 500 is now at an all-time high of 78.15. It's like, we did it. Just know.
There it is.
Just know. We
Yeah.
did it.
I got filled on a one-day Iron Condor, just playing for continued chop with these markets, but 100-point range between 7,700 and 7,800 for the shorts. Picked up $1.50. And then for today, I have this super bear that is at the 77.75, 77.80 for the risk side of it. So we'll see if we can avoid having that go in the money. But yeah, quiet day, playing for some neutral chop. 31-point implied move for the rest of the day. That will likely drop to the teens if we don't get any kind of movement on the open here in about 25 minutes. But Cisco selling off a little bit more than where we were talking about it earlier, but this will be The short options for our calendar spreads will be winners in the sense of we will be able to capture all that value, but the overall position will be a loser. Probably just going to leave the long calls on. But yeah, we'll see what the value is that we can get out of the 8-day or 15-day. If it's not $1 or more, then I won't sell anything against it.
Yeah. It had a chance. It really did. Interesting. I haven't even looked at what they said after the earnings came out that caused this reaction.
Yeah.
But who knows? It is what it is. I would have thought they would have been saying something positive. You know what? Good time. Let's queue up, Ben, these some of these charts that we were talking about. Let's queue up the tech leads guidance raises because, again, a lot of the tech names have raised guidance. Let's look at this. This is share of companies raising guidance this earnings season. Utilities, obviously, nobody pays attention to utilities earnings, but energy up 3% of those have raised guidance. Financials 5.2%. Com services 5.7%. Materials 9.9%. Consumer discretionary 10%. Consumer staples a little bit more. That's fascinating than consumer discretionary. The median here, as far as all stocks, 15%. Industrials, real estate, but yeah, technology. I mean, 30% of technology stocks have raised guidance during this earnings season. I don't know if they were one of them. I kind of really don't care. Cisco's not one of those where I really needed the read through. I only do the read through as far as earnings or pay attention to the call for Mag 7 or whatever, right? Like not really something like this. Let's queue up stocks making new highs. How about that? What we got here? Okay, sectors, 4-week versus 52-week highs, and comp services. That's Amazon, I think. Consumer discretionary, 13% of those are at 4-week highs versus 6% being at 52-week highs. Energy. I mean, again, this shows you what the oil situation has done to a lot of these energy stocks, where they're at 4-week highs, but not necessarily even at 52-week highs. So mostly because we saw oil higher and we saw those stocks higher earlier this year. But I think it's fascinating to see ones that are at 4-week highs, but also at 52-week highs, right? Like healthcare, we've seen a lot of days where Lilly and AbbVie and some of these other names were moving higher. And a lot of those have, again, 34% of those are at 40% of those are at 4-week highs. So those have been kind of ruling the roost recently, along with technology. And we've seen that ebb and flow on a lot of days. But yeah, real estate, utilities. I mean, I don't know about you. I don't know the last time I traded any of those, honestly. It's been a while. I typically haven't traded a whole lot of them in general, but this is the landscape that we're seeing, right? Like it's really been a lot of tech and a lot of healthcare names that are hitting 4-week highs and sometimes 52-week highs on a lot of those names.
Yeah, I think it's another way of breaking down the 4-day E-mini chart that we've seen, or we just had that gap higher and then just chopping around flat. But I think when it comes to utilities and real estate, to your point, I haven't really traded any products in that realm because they're not typically high IV products. They're not typically super liquid.
Right.
So it's just like unless you really have a directional assumption or a bone to pick with some kind of stock in that realm, there's just nothing there to do. And strategies are limited when you have low liquidity, low implied volatility, and lack of expirations if it's not a highly traded product.
We had a solar eclipse.
Yeah, I think there is some stuff going on.
Oh damn, I didn't know that. No, we just had it didn't come for us. It was Wednesday, August 12th. Path of totality: Greenland, Iceland, northern Spain, and a tiny corner of Portugal. 2 minutes and 18 seconds.
Crazy.
Wow.
That'd be wild to see.
Yeah.
In real life.
Well, the next major one is coming on August 2nd, 2027. Not for us, though. Not for us. Spain, North Africa, like Morocco, Algeria, Tunisia, Egypt, parts of the Middle East. So we won't get it. Maybe the strait will be open by then. Maybe can stand on the strait and look at the next solar eclipse.
That'd be crazy.
I don't know.
Yeah, I mean, I would definitely go and travel to go see it. I will eventually. It's got to be a bucket list item.
It's only like 3 minutes, though.
Yeah, but you could imagine those aliens.
Yeah.
Aliens come at that point. I gotta be there.
SpaceX will be trading $350 again. By
Speaking of SpaceX, SpaceX had the biggest rally it's seen since inception, really, outside of these 3 days. But ever since that time, yesterday we had a big rally in SpaceX. It was up like 14 points at one point in time, and this Super Bowl was coming in nicely. This had gained into that rally. This was up like $700 yesterday. So we're getting back a lot of value. The short put is now net profitable. It was taking a lot of heat, but this long call has gained a ton of value too. This long call was at one point trading for $1,000. It's trading for $1,800 now. And the short put is now net down from when I sold it. So it just goes to show like those long-term trades, they're still going to move aggressively because you're selling a put to buy a call. Both are directionally similar. They're both bullish trades. And even though it's out 500 days, like your put's still going to lose value and your call is going to explode in value if you get velocity moves to the upside. So I'm excited for this position. And if we get a move in SpaceX from 150 to 200 and it eventually goes beyond the recent high of 225, if we get a quick move above that, this will be, I would guess this will be like a $5,000 winner.
Yeah.
You can see it too on the curve if you just do the analysis. Theoretical, and then even without changing the date, but let's change it to the end of August. Let's just say there's a 2-week rip higher. If we zoom out and you look at that Theo P&L up to 225, the previous high, it's a $4,000 winner.
Mm-hmm.
So, and that's just because your short put's losing value, your long call is exploding in value. And this is one of those products where into a rally, you would likely see implied volatility expand. And that's where you'd want to live. If you're trying to maximize that, long call by itself, no spread, and then short put to finance it is the way to keep that high probability neutral trade on.
Yeah, I mean, and that's the great thing about a trade like that. It starts off as a vol play, and I mean, after a while, it just becomes sort of this directional play that happens to be, vol adjacent, if you will, but because you get the move. And again, a lot of it has to do with sentiment. There's very negative sentiment around the name for several weeks after the IPO, and we saw all the charts. That's all we kept seeing was all the charts of recent IPOs and how much they were just terrible in the beginning, and then eventually there's somewhat of a turnaround. But things change.
Yeah. Anything going on in the YouTube chat? Any chatter in that YouTube chat?
It's fairly quiet.
Yeah, that checks out.
Pretty quiet. Did you see that short recently? There's like this short on YouTube with Larry David and Obama. It's pretty hilarious, actually.
I have not.
Oh, you gotta check it out. Yeah, it's pretty.
I do love Larry David. It's funny. I talked to some people and I'm like, Curb Your Enthusiasm is so funny, and they're like, I can't do it. He's just so annoying. Like, that's the point.
Yeah.
That's the whole point.
Yeah, no, that show's great.
I love it.
Fantastic.
But yeah,
pretty quiet out there
for sure.
But they're saying what's up to us though.
That's good.
The old combination name, Jermike, is back.
Forgot about that. But yes,
we do have one question.
Okay.
How to trade highly volatile commodity like crude oil? Well, you got to watch Trades of the Day for sure, because we've definitely detailed. I'm sure that has been mentioned a couple of times. We talk about it, but get it. We're getting new viewers all the time. Thanks for watching. We appreciate it. We've done a multitude of strategies, but maybe we can talk about it on the other side of the break.
Yeah, let's do that. Let's take a quick 90-second break. We'll break down crude oil trading strategies on the other side of it. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Every time he explains something to me, I ask him the same question.
He always asks me the same question.
What's the trade?
I'm not always sure that's the right question.
It's the only question. Retail traders don't have a thesis on in their portfolios, they have positions on.
And if you don't know why it's moving, the position is a good guess.
And if you never get to the trade, the reason has no meaning.
Same market.
Different question.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
What's up, everyone? Welcome back to the show. My name is Mike. I'm here with Jermal. We're going to break down some crude oil trading strategies for you. Thanks to the viewer in the YouTube chat. So pop in those questions. We'll get to them throughout the day. Since this market isn't giving us all too much to trade here pre-market, but how to trade a highly volatile stock like crude oil? Well, there's a number of different ways. I think if you're trading crude oil specifically, the CL contract, the big contract, it's too big to do undefined risks for us. So we're just doing defined risk strategies there. The most recent would be iron condors that we've thrown on. Just covering a wide range. Like the last one I had was a 70.95 and I picked up $200, bought it back for $100 a couple weeks later. So just chopping around that range. You could do calendar spreads, things like that, diagonal spreads in CL. But I think we normally trade MCL.
Yeah. When I want direction, when I feel like let's just say oil is moving $80 right now. Vol's a little bit higher. We're seeing it move like a couple of dollars a day. If I want a direction, I actually go with call spreads, and I usually do them maybe $2 wide. Like let's just say I would go in this case probably let's say 85, 87. It just really depends. I usually try to find a spread where, and again that's a $2,000 wide like spread, right? Mm-hmm. And so. This is a good example. Like I would, this is a somewhat good example, I would say. Again, this is near term is 4 days, but I usually look for something like 11 to 15 days. In this case, let's just say I thought oil was going to 85 or whatever, or I should say higher, to say to 88, and I'd go like 85, 87. That's a good example. 86, 88. I'm looking for something like this. I'm paying $300, $400. Right, for a chance at that. And these are lower pop trades, I get it. But when oil is moving like it was a month or so ago, we have a shot at these type of trades. And so that's usually kind of how I'll look when I really want direction. When I want the vol play, like Mike said, starts off usually in MCL. If vol gets really crazy, then that's when we go really wide with maybe iron condors in CL. So it just really does depend. But I'm trying not to spend... a lot of times I think I'm trying not to have more than less than $1,000 in risk. I would say a lot of times in crude oil. I feel because again that $1,000, if you're doing bigger trades, it can evaporate quickly. The amount of risk that you're putting on because it moves so crazily when it's really volatile. So I think more than anything, it's about thinking about how much risk you have at hand, and usually I try to pay attention to it being maybe less than 1,000. I would say.
Yeah. And we've been doing super bulls, super bears all the time too. You could do that in crude oil. It's no different. Selling a put spread to buy a call spread. And you're just playing for that rip to the upside in this case. But yeah, to Jermal's point, if we're trading crude oil in the big contract, we're probably waiting for a big vol pop and then selling the iron condor. Like this 70-95 range that I sold the iron condor in was when oil was picking up heat. And I was able to set my lower boundary at 70, which is down here. And then my upper boundary at 95, which is above the market. So that is a way to capture implied volatility and capture this whole range where crude oil has been trading in. But MCL is 10 times smaller, $8,000 notional. So this is where we can go to just sell undefined risk. So that's where I'm at. I have a straddle here. And if you look at my order chains here, initially started with a short put that was in the money, slightly in the money, just playing for a bullish move, didn't get it. So I rolled out to the 21 days from the weekly cycle, added a short call and turned it into a straddle, picked up another 255. So this is when crude oil was at like 70. I had a 76 straddle with $6 and change or $5 and change of premium. And then nothing happened, rolled it out a month, picked up another $3. Nothing happened, but I had to roll to a new contract. So I went from the 76 to the 78 to force a credit. So I wasn't paying a debit there. And then just recently rolled the 78 to the new contract at 80. So I was just rolling out in time, moving it up closer to the current crude oil price, picked up another $3 there, ended with $11.75 in premium. And now I'm sitting right at the money in this V contract with $1,100 in premium. And it's a $200 winner right now. So that's how you can do it if you're undefined risk, is you can just trade MCL like we have. And then last but not least, USO is one of those products that benefits from the backwardation in crude oil. And it is at the mercy of contango in crude oil if the crude oil futures are in contango. Right now, they're in backwardation. They've been in backwardation basically all year. And backwardation is simply when the near-term contract, the 4-day, is a higher price than the next one. And this has been the case all year in crude oil. So USO has had a really good year in terms of returns, especially when the war picked up. You had a 15-point backwardation at one point, and that was the only reason USO had the ability to go from 70s to 150 in a month. And it's been chopping up and down. Like this trade we put on a couple of weeks ago, when USO dropped back down to 100, it was when the war was ending, the backwardation had to come out of it, and we said, not so fast, maybe this will pick up steam again. Put on a USO diagonal spread to play for a re-backwardation in crude oil and an increase in price. And that, again, is the only reason that USO has the ability to go from 100 to 150. And then we did the same thing down here. When it was back down to 115, I threw on another diagonal spread. It's up $100 right now, the 120, 135, just playing for continued stress overseas. And as long as that continues to happen, USO will creep higher.
Yeah, and USO is one of those reasons. USO ETF is one of those reasons why we always try to talk to you guys about being aware of what's in an ETF. Because to Mike's point, USO has about 45 to 50% of front month contract of the front month oil contract at all times in its ETF, and so that's the reason why it moves the way it moves. So just be aware of that. Next question was pertaining to SPX, I believe. Yeah, with Mike's 1 DTE SPX strategies, is there a specific stop loss and profit that you wait for? And this kind of dovetails with another question I think that was asked about your super bear from yesterday expiring. So in general, let's just make this in general about 0 DTE or 1 DTE SPX strategies.
Yeah, so in general, I have no stop losses. I don't think it doesn't make sense to me to use stop losses in 0-day and 1-day stuff. We showed that yesterday with the research that Julia presented, where if you're using half credit received, like if I pick up $200 and I have a $100 loss, you're stopping yourself out so much. And a lot of those, half of those stop losses where you are booking losses would have turned back into winners, historically speaking. So I don't use stop losses in 0 days or 1 days. I just make my risk more narrow. So my risk is almost always $500, sometimes $1,000 if I'm doing further out of the money stuff in like the 1 day. But the 0-day stuff, almost always $500 or less in risk. And I don't use the stops because there's a situation where the market could be up at 77.80, 77.85 at 2 o'clock, and I have a max loss on my hand. And then at 250, there's a 10-point sell-off, and that max loss turns into a max win. So I don't like using stops. I want to give myself all the time that I can get for SPX to move in my favor. And if it's a loser, it's a loser. I come back to it the next day. But for profit targets, I think it's somewhat dependent on the strategy. But like for a super bear or a super bull, if a spread goes in the money, it's not going to trade for more than half the width unless you hold it all the way to expiration. So like for this trade, if SPX were to reverse right now and this market were to sell off 100 points, this 76.90, 76.80 10-point wide spread that has a max profit of $1,000 is probably going to be trading for $500, somewhere around there. So in that case, if we get an in the money move, I'd probably just close it, because an extra $500, I would need to hold it all the way to expiration, and I can lose that $500 on the table with just a 10-point move. So if we get an in the money move with the super bears or super bulls with that debit spread side, I usually just close it and call it a day.
Yeah, I mean, if you're entering any 0 DT or 1 DT position with, if the thought scares you that you're going to lose the amount of premium that you're either paying or collecting, I mean, you shouldn't do the trade, in my opinion. Like, yeah. It's just too short a time frame. It's not really volatility, unless you're, selling an iron condor. That's volatility, I would say. But look, it's just there's the move. Nobody knows what the move is, even though there's an expected move that nobody knows what's going to happen. And so you just really do have a chance of losing whatever you're putting up. And I think you just have to be aware of that. You have to be comfortable with that in any one of these trades, especially in such a short time frame. So again, like Mike, I don't have stop losses. I don't think about it in those terms. I think about it in the term of, a Super Bowl that I have on for Friday. Like I collected, I think 90 cents for that. I know what I wanted to collect. And if I somehow that short put spread ends up in the money, then, I'm comfortable with the idea of losing. I'm not thinking about that day and night, and I'm not worried about that over the next 24 hours or so. I mean, I made that decision when I put the trade on. I think that's how you have to think about it. When you put that trade on, you have to be aware of that. If you're not comfortable with that risk, you should move further out.
Yep. And some of these happen really quickly too. So we talk about how if you sell a regular 45-day trade and it's like a strangle or whatever, and you're expected to get 50% profit at about 21 days or around there. If you get 20% profit in a day, then you're well ahead of your profit curve, and it makes a lot of sense to close it, especially with trades that are defined profit. So same story here. Like I've had super bulls and super bears that I put on, and I closed it for $200, even though the max profit was $1,000 or more on one of the sides. I still close it for a couple $100 if I get it in 10 minutes on the open. Like it makes a lot of sense to just book the win, take the risk off, because these markets can reverse pretty quickly, as we've seen time and time again. So yeah, I think if you're trying to hold on to trades, especially like Super Bowl, Super Bear, if it goes in the money and you're at half the width of your profit potential on the long spread, I think it makes sense to close it. So you're not playing with that, now a 10-point move can erase all of these gains at the end of the day. And then if you get a quick move on a CPI or PPI report, that's a good win too, and a good reason to take it off. So, but the iron condors are slower. You're gonna have to hold them much longer, but they should still be sized correctly to where you can hold it the entirety of the expiration. Like this one day iron condor that we put on this morning, 5 points wide, totally comfortable with it. If we get a move down to 7,700 or up to 7,800, I have another day for the market to reverse, and that loser that I would see today could be a winner tomorrow. So that could be another thing. If you're uncomfortable with the 0-day stuff, just do 1-day stuff. 1 day leading into the next day. You do have overnight risk, which is not something that everyone wants to have, but at least you have another day for it to work out.
Yeah. With almost 30 seconds to go to the bell here, let's pull up real quick the PPI graphic we have. Again, that's been part of the story this morning. PPI was just released. We had CPI yesterday, inflation reports hitting here in the middle of August, and essentially no change to some degree. Kind of similar. It was in line, and same thing we saw with CPI was also in line. So apparently inflation is not that big of a deal, which has ebbed and flowed a lot with oil moving around quite a bit. 5 seconds to the bell.
Yeah, let's see how these E-minis react to the open. Ooh.
Off to the races.
Off to the races. Love to see. Ooh, little sell-off here in the E-minis and NASDAQ too. We'll see if it holds. But yeah, I think it's going to be another choppy day. But we'll take a look at that Iron Condor. The 1-day Iron Condor, I would be interested to see if that thing comes in nicely, especially with this choppy market not really moving all too much. Interesting to see this 1 minute bar though, market selling off from the highs that we trickled up to leading up to the opening bell. But yeah, let's take a look at these earnings trades. So Applied Materials, look at that. Up $6. They have earnings tomorrow.
Tonight. What is it?
Oh, today. Yeah, it's Thursday.
Right.
So they have earnings today. So we'll check. We'll keep that on. I have a 600 strike calendar spread there. But
I feel like most days I come in and Costco starts the day up and then it like goes lower.
Yeah. Costco is.
We did a Costco shop the other day. We got some steaks, man. My son cooked them last night. They were great, bro. Oh my God, so good.
Costco's great. Costco's amazing.
And you know what? I had no issues with them. They didn't create explosive diarrhea somehow or another. It feels like everything is creating explosive diarrhea. Do you see jalapenos are creating?
No.
Oh my God. Got to watch out for jalapenos now.
Damn.
Lettuce, jalapenos.
Getting attacked.
The market is so boring that people are reporting that lettuce prices are down 16%. I saw this yesterday. I had to tag onto this guy I know on Twitter. I'm like, really? We're talking about lettuce now? That's how boring the market is? Yes.
Oh, yeah. Yeah, Cisco, as expected, down $10 here. These double calendars are losing for sure, but there's no reason to even look to see if there's premium to sell because the 130 and 135 in the September cycle are trading for less than $1. So that tells me there's absolutely no way that I can sell anything worthwhile in the August cycle or anywhere after it. So we're just going to lean long with these calls, and 2 weeks from now, 3 weeks from now, we'll see where we're at. But if Cisco reverses this move, these cheap options will become a couple $100. And really, all we need to happen is these remaining long options, the 130 and 135, to total a value greater than $395, and we'll be at a scratch. So plenty of time for that to work out. But yeah, unfortunate to see that sell off after the initial run up on the earnings announcement.
Yeah, I mean, the thing about it too, what's funny, I didn't even exactly, we were sitting here talking about Cisco having earnings. I just slapped on a couple of calendar calls without, but I'm just, I think, so clued into like how I trade and what we do. And so when I looked at it at the end of the day, I was like, oh wait, how much risk do I have on? And it was like about $600. Okay. A little more than average, but I feel like a lot of times on earnings, I usually have about $500 to $600. And again, kind of getting back to the point of 0 day or one DTE trades, I'm usually comfortable with that. About $500 to $600 in risk on an earnings play is fine to me. Again, I just know it's such a binary event, so I don't want to get too carried away. But that usually works out fine, and it doesn't dominate my portfolio the next day. Trust me, I've had those happen in the past. When you're so excited about an earnings play, you put on a decent amount of risk, and before you know it, it's dominating your portfolio the very next day, and you're only paying attention to that name and not the other thing. So I think that's something to keep in mind. When you play earnings, just be aware of how much risk you're putting up.
Yeah. And there is something you said about trading. We're waiting for an earnings announcement. Like, let's say you were bullish on Cisco and you got the bullish move for earnings. Great. Maybe you see a continuation there. Or maybe you get a sell-off in Cisco like this, down 10%, and now you can throw something on with much lower implied volatility. You can see all these implied volatilities are getting crushed here, closer to the low 40s. And I would expect that to continue. But even like with this new price point of 111, long the October 110 call and short the 120 call in September, like this is a 10-point wide diagonal for $5. That's a great return if you get a rally back up to 120 and they just erase this move. So, yeah.
Yeah, and that October is really not that expensive vol-wise. Like it's in the 40s.
Yeah, low 40s is low for any equity.
Especially a tech name. That's
right. E-minis picking up steam here. Look at this. The initial sell-off was just a head fake.
It's going according to plan, Mike.
Up only. Microsoft up $5. Love to see it.
Yeah, what's going on with the Mag 7 today? Oh, it looks like they're all positive. Now, you know what? Netflix has been kind of quietly moving 1% to 2% recently. Some days here. Got software names look like they're positive today. Dell is up 3.5%. Not sure why. Probably some kind of news.
Dell.
Yeah.
Oh,
Actually, it's
Dell.
generally green on the screen so far.
Yeah, sick.
Healthcare names are up. AbbVie, Johnson Johnson, Lilly, Merck, positive. Like we said, Mag 7 names are generally positive. Semis are generally positive. Interesting.
Yeah, Cisco is the only one that's down big, down 10%.
Cisco's a down name too, isn't it? Or it used to be. I don't know if it still is.
Good question.
It is, yes. It is in the Dow, is in the NDX. It is also in the S&P 500.
Triple threat.
Yep.
And everything else, kind of wild to see. This is down 10%, and then the next one is only down 1%. EMR, ConocoPhillips down a little bit too, but to the upside, a lot of green. And the upside has a lot more, over 1%. Netflix, to your point, AbbVie, Qualcomm, Palantir, Oracle, Altria. Yeah.
Altria.
Big moves. AbbVie, Biogen. AbbVie and Biogen leading the way to the upside. What are we missing here?
I don't know. Altria, didn't they change their name because Philip Morris was like they had that big lawsuit? Isn't that why they changed their name? Isn't it crazy how companies do that?
Yeah, I don't remember.
Yeah, I think that's why. I believe so.
I don't recall.
Altria name origin.
But yeah, this is...
Yes.
We're taking some...
The name primarily originated in 2001 when the tobacco giant Philip Morris chose its fabricated corporate rebranding name. Exactly. We just changed the name.
Yeah.
And, people will forget that we had Camels on a pack of cigarettes and lots of people lost their lungs.
Mm-hmm. That is actually probably a solid strategy.
1 year later, companies do it all the time.
Where'd that company go?
Companies do it all the time, man.
Yeah. Taking some heat on this 0-day Iron Condor here, but again, not going to close it. Similar to what I was talking about with long call spreads or long put spreads that are in the money. This is only trading for about half of the max loss. This could be trading for $500 by the end of the day if we still stay elevated here. But right now, still trading for less than max loss, about half of the width there. So same story with short call spreads as long call spreads. And then, this Iron Condor is a longer term one. We'll see if we can get out of the woods there. But naturally leaning bearish now in SPX into this rally of 35 points. NASDAQ up 170.
Look at what we got here.
Crazy.
This is it. Just drift. Ooh, my SK Hynix call spread. I had a call spread that was left over. If anybody remembers, I sold I don't even remember which put I sold. Actually, I can look. I sold the October 120 put spread to finance buying the 150-170 call spread for last week for SpaceX earnings. Did not work out. SK Hynix fell. No problems. Rolled that call spread to the next week. Closed the put spread. Rolled that. Well, actually, I kept the put spread on. I rolled the call spread to this week, 150-170. And eventually I closed the put spread by Friday. And now the call spread is working. I might need to close this thing. 1 day to go.
150, 170, yeah.
Yeah, $700 call spread now. Paid $875 for it. Still losing $140, but overall, I think I did I win? Well, let me see. So I sold that put spread.
Close. But yeah, SK Hynix catching a bid here. What else we got on the NASDAQ watch list? Let's see what's pulling and pushing that one. CoreWeave, Netflix. CoreWeave. This thing was down. This thing was 10 points lower. Now it's up, leading the way.
How about it?
Pain. Triple calendar spread to the upside and you have a loser? Come on. But this thing is up like 1,000% in 2 days. So what are you going to do? From 90 to 120 almost.
Wow.
Crazy.
Things going again. How about it?
But yeah. Netflix.
How does Cisco not go in this environment?
Good question. Max Payne. Wrong side of both trades somehow. But that's what happens. That's why you keep these earnings trades small.
Yeah.
You just never know. When you would think that these would be moving similarly, they're literally in the opposite poles of the NASDAQ 100. Crazy.
What's moving in the Dow? Said nobody ever, but whatever. What's moving in the Dow? Cisco is the worst. And Microsoft.
Yeah, not too much.
Diz.
Yeah, I think this is just another inside up day. What can we say? What can we say?
Bob Iger, he didn't use his own money to do this Lakers thing, right? They clearly got they probably got they have a holding company or something. And they probably got a loan at some ridiculously low rate.
2%.
You know what I'm saying?
Yeah.
Rich, stay rich, man.
Yeah. Well, there is an interesting thing. So the uber rich or the semi rich, you can actually buy shares of SPY, for example, and then take loans out against your shares for 2%.
Mm-hmm.
And that's just free money.
Mm-hmm.
With a 2% rate, you can beat that with a CD. Crazy.
I know, right? These are the things that you don't hear about until later. Well, we've heard about it, but it's amazing. This is how the rich people do it, guys.
Yeah. Buy shares of SPY, get the dividend SPY, take loans out against your shares at a rate that's
collateral,
basically equivalent to your dividend. Yeah, it's collateral. It's quite nice.
Yeah.
Anywho,
SanDisk up 28 points. Come on, get over 1,400. Just do it already. Just do it.
Yeah, SanDisk up $30. Let's see. Is there anything? There's I want to be placing bullish trades in this market, but there's just nothing. There's nothing down other than the things I'm already long.
Yeah.
So not great. But yeah, there's nothing to really do in this portfolio. Maybe close Coinbase. Maybe.
I know. I told you I was thinking about it last night, and I said, what am I gonna do when it comes to trade today? I'm gonna try and put on a put diagonal in something, but I just don't, like you said, I don't know what I want to do it in. But I'm gonna try and find one. Yeah. That's my thought today.
Well, you got AMAT. This will be. I'm already in it, so maybe not. But they have earnings after the close, so that could be an idea for you.
Yeah,
could be it.
It's possible one.
But yeah, normally what I do for those trade ideas is if I don't have one that's at the top of mind, I'll just go to the NASDAQ 100 or the S&P 100 and just look at price extremes for the day.
Yep.
And then place a trade based on that. Because that's generally what I do anyways.
I think that's probably almost as equally as interesting for people, not only our trade, but our trade idea generation and where we get it from, right? Because that's actually the real sauce right there.
Yeah.
Where do you find a trade?
Maybe that's where you do the trade of the day, but just be
maybe I'll do it in
blank
CoreWeave.
Canvas. You do a blank canvas trade of the day. Find it together.
I know, right? Yeah. I know, right?
But yeah, CoreWeave, Cisco, both moving crazy. I think Cisco could be interesting, especially if you don't have a trade on that you're bullish in. Cisco has really low IV, so you could set up stuff. But AMAT earnings after the close today. We've got a special guest on the line, Mr. TP. TP, how are you trading these markets this morning?
Well, yeah, getting whacked on this Cisco move down. So what I have going on, Cisco, I'm short the 15-17 put spread in there, expecting a rally up, and it was looking pretty good after the close last night where they came out with a number, and then they just crashed.
Yeah.
And they dropped, looks like about another $4 or so right on the open here. Interestingly, it doesn't seem to be carrying over to some of the other symbols. So let's say Intel's up, for example, and I'm just thinking about other what do they call them, guys? The networking physical parts of the internet, like Cisco has. And so the other thing too is SMH is rallying still. I am short a put spread in there already. I'm thinking about going back in, selling some premium in SMH. The problem right now in the market with the rally going on, S&P is up $35 or whatever, is they're just crushing the VIX. So the broader market volatility is the way I want to show everybody is I'm going to look at the basis. The basis between the AUG and the SEP VIX futures has exploded. So let's do this. Let's sell this, buy this. The 16 puts in, sell the 16 calls, buy the 16 puts in August. Go down to the SEPs. And 16, buy the 16 calls, sell the 16 puts. Right now, that basis has jumped up to $2. And not so surprising, really. Remember, they were down in not quite single digits, but you saw that basis around 30 cents, 40 cents just a couple of weeks ago. Yesterday, it went up to $1. I saw trading for $1.80, then $1.90. Now it's over $2. So going back to the idea of, volatility is cheap. The front month volatility, the August, is just getting crushed. And that's why I'm looking at some individual stocks like NVIDIA, like even SMH isn't an individual stock, but higher volatility products are in the individual names right now.
Yeah, couldn't agree more. Well, TP, good to see you. We'll let you take it away for the rest of the session.
All right, guys.
Sweet.
Better.
So the question is now, when with this VIX, when you want to switch over to the next expirations. So if you change this, let's push this out to, and this is the easy way to do it. Click this, advance the expiration to the October, and then change this to, let's highlight this. And by the way, we don't need 60 strikes. Let's go down to 10. And then go to this one and push this out to September. Did I do that right? There it is. So again, the September, October, the 1 month basis, in the VIX futures is still trading for, did I get this right? I don't know if I got it right. Oh, the September 2nd. No, sorry, I wanted September 16th. Let's do this. There it is. Okay, so now the September, October basis is trading about $1.52. So that's about more average. The point about the front month going up furthest and fastest in the VIX is absolutely true. So, if something happens, if the market decides to crap out, it's going to be the August VIX that rallies up most. But for now, that thing looks dead. And that's why I'm looking at some individual names today. For the earnings, AMAT is coming out. AMAT is, let's check a chart on that. Really hasn't done much over the past few weeks. Past couple of weeks. So they're going to be looking for this number. You look at the implied volatility. The implied volatility of AMAT actually has been coming down a little bit. And this is just because the stock price really hasn't moved very much, but still 69% overall IV. That's pretty steep. So I'm going to be on at 1 o'clock to do some live trading. I think I'm probably going to enter an AMAT trade at that point. If we go out to just 1 day and we look at the expected moves here, again, the markets are very wide right now in some of these options. We'll see if they tighten up throughout the day, but that's AMAT. I'm looking at a couple other stocks. Like I know BN, I don't think BN trades. NU, new holdings, hard to have a short put in there. I am short the 13.5 put in there, losing a little bit of money on that. But since I already have a position on that, yeah, I mean, there's not a lot of premium in these options to be worth adding to. I'm just going to hang on to the short put I have in there. For the SPX, now that it is 8:49, let's go in and do the 0 DTE trade. Let's go to the two, again, something generates about $2. Well, here, let's go down here. Sold off a little bit, $25 away, this one, and then again, this one right here. Let's do this one, give myself a little more room in the upside. $2.50, let's ship it. Let's try 255. 255, let's ship it. Filled. So once I do that trade, and this is just the mechanics of how I trade these 0 DTEs, you could certainly tighten this up, sell, closer to the money, calls and puts. Got no problem with that. I take a fair amount of risk widening out the strikes like this, $25 apart. You could tighten those up too. But the big point is I'm going to go in here, activity. I sold it at 255. By the way, now I'm going to push this, see if I can get this to work. Publish to follow feed. Yes. Okay. Yeah, go ahead. Okay. Well, you should see that at some point. So now what's half of 255? About a dollar, 26 or whatever it is. I'm going to route a closing order for this. Let's say $1. I'm going to be greedy and go for $1.25. I'll buy this back and try to capture a 50% profit on it. We'll see if that happens. Nothing, obviously, you're not going to get that. So going out, I want to sell a call spread in the yen. The yen is rallying today. I'll go out here, and this is just talking to Chris Vecchio yesterday and thinking that this, whatever the quote unquote intervention that's pushing up the yen and weakening the dollar, it's bounced a little bit, but I think that influence is probably over. The volatility is relatively high in the yen. So if we go out and, again, 22 days, I'm going to stay relatively close with the SEP futures here. If I sell the 635 call, buy the 64 call. So the ratio there, it's not bad. $112 max profit versus a $434 max risk. So the buying power effect. Max risk is 512 because there's $625 a point in here. So, or $1,250 a point in here. So that's not bad. If I tighten it up, 62. No, that doesn't really change much. I'm going to route this one. I'm going to try this for 9 cents or 9 ticks. Ship it. Filled. So that's my bearish trade in the yen. The other problem child here is stub. So yesterday, or last night, Stub came out with earnings on yesterday's show at 1 o'clock. I sold a put in Stub. I actually doubled up on it just to see if I could get filled in between. I had a fat finger mistake. I hit the bid in my first one, which I didn't want to do. And just to see if I could get filled in between the bid-ask spread, I routed another one at 22 cents, got filled. That's why I have to. I don't double up on trades like this. This is just a mechanical thing. So my net costs about the dollar cost average of that stub put is about 21 cents credit. So right now I'm up a tiny amount of money, even with the stock down. Stock is 12 cents away from my short put. I'm going to hang on to those. I have 1 day, obviously. I have no interest in taking delivery of this stock, but that's what I have going on right now. Let's go into the Intel. I have an iron condor in Intel that's actually, or a short put in Intel, excuse me, that's actually working out pretty well today. I'm going to have to maybe take a look at taking that off. The other stuff, CoreWeave is dead to me. CoreWeave, it's huge surge up. Robinhood, my short put spread right now is 53% max of my max profit. Let's get this done. Close position, 29 cents, ship it. And then my wheat trade up here, in this account is 50% of max profit. So he's got long wheat, sold a put spread in wheat. Let's buy this. Did I do that right? Let's buy that back. Come on. There it is, close position. Let's buy this back for 62 cents. Ship it. Ship it, nothing done. The other problem I have is my short call spread in ZN. I sold the 109, 109 half call spread in the 10 years out to using the D's futures. So I'm in the September expiration. Those are priced off the D's futures right now. Those are trading at about 108.23, up a little bit. If I do this, does it give me the quote for it? No. What I have to do is do this ZN-Z6. And I actually get the price for it. So right now it's trading at 108.23. And remember, these are in 30 seconds. The options trade in 64th. That's a little detail. So I'm about 25, 25% away from the 109 calls. I'm going to hang on to that, but that's what I have going on right now. Let's see going out with the SPX. SPX up $45 right now. And let's see what I just get. I just filled my wheat, working on everything else. So that is, let's go into the watch list. Sure, let's see what the active, if we have anything active here. Top equities, so it's the typical usual suspects: Apple, Amazon, AMD, Bloom Energy, CoreWeave. Everybody's trading this stuff. SpaceX is coming back a little bit. I have in SpaceX short. I sold an iron condor in SpaceX right here and short the 142 calls. It's right there. So if it settles right here, if it goes down a little bit or even stays right here, I'll be profitable on the trade. I'm gonna buy this back, buy this put spread back, see if I can get filled on it. But that's what I have going on today. I'm going to be looking for some individual names, like I said, individual stocks. The VIX itself up 5 cents right now. Yeah, and don't read too much into this. This is not, oh no, S&P's up, VIX is up. Don't try to figure that one out. It's just people buying, people bidding up the out of the money calls and puts in there, maybe expecting a little bit of a bigger move in one direction or another. This is not doesn't predict impending doom for the S&Ps. But if I had a bet, and what I've been having a fair amount of success with late in the day, is just buying at the money put spreads in the SPX, just getting short deltas into the close. So we'll see if we can get that done. I will be back at 10 o'clock with Chris Vecchio, talking about some additional trades we can do then, and answering confirm and send questions. If you have questions, please send them to research@tastylive.com. And I'm going to kick this back to Jermal and Mike.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Every time he explains something to me, I ask him the same question.
He always asks me the same question.
What's the trade?
I'm not always sure that's the right question.
It's the only question. Retail traders don't have a thesis on in their portfolios. They have positions on.
And if you don't know why it's moving, the position is a good guess.
And if you never get to the trade, the reason has no meaning.
Same market.
Different question.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It's time to trade smart, post-PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
What's up, everyone? Welcome back to the show. It's been a crazy 15 minutes. Who would have thought that the market would be ripping higher? E-minis up 55, NASDAQ up 325. We got a very special guest in the room. I got to bring him in with the...
We really got to work on that.
No, it's perfect. It's perfect.
What's up, fellas? How's it going?
What's happening? What's going on?
Man. I mean, the market. You know what we do on the trade desk every time we see a big move in the S&P, we all go, oh, spoos.
Yeah.
Spoos.
Yeah.
Been doing that a lot today.
Yeah.
I mean, spoos up 55 and change. I mean, that's just crazy. Crazy market that we're seeing.
I mean, it was nuts because we had this initial reaction at 7:30. It's funny how small this is now on the chart here, but had this initial reaction. If you can pop over to my computer, E-minis chart here, 7:30 Central, had a big pop to 77.90. It sold off immediately to 77.78, and then just an immediate rip higher. And then right here at 8:30, something else must have come out at 8:30.
No, it didn't. It just said it's open. Let's buy them. This is what happened.
Yeah, it was insane, absolutely insane. But here we are, up and away.
It seemed like we were pausing with these inflation reports, but it seemed like now that they're out the way, people are ready to buy them.
Mm-hmm. Yeah, it would make sense that we would hit new highs in the E-minis and NASDAQ. NASDAQ actually is not at all-time highs, but E-minis sure are. And
that's the way I thought that chart was going to play out. That's exactly the way I thought it was going to play out.
Yeah, we'll see if it holds. Could be the biggest head fake of all head fakes, but yeah, the VIX is, if I could type, the VIX is in the 14 handle. So nothing to see here. Market goes up every day.
Slightly positive.
Yeah, I mean, the VIX is just volatility premium, absolutely just getting decimated. And I see like a lot of the 0DTE guys that we talk to as well, they're like, the premiums just aren't there anymore on a lot of those condors. Like sometimes multiple entry condors that they do as well, leg into it, do the put side first and then the call side or vice versa. So some interesting strategies out there, but a lot of decrease in size from a lot of those players we've seen just because the vol isn't there anymore like it's been. I mean, volatility has been so high, like since the 0DT options came out in 2022 when they first started getting really popular, and now that like it's getting decimated, it's coming a little bit more difficult to trade. And when there comes to like those difficult times to trade, the low volatility, we see a lot of like different strategies that get used as well. So now it can be a more creative time for traders as well.
Yeah, we've been using Super Bulls and Super Bears and SPX, just selling a put spread to buy call spread, and then vice versa for the downside. To your point, I mean, the S&P has a 19-point implied move, like we said, and half an hour into the market opens, you just get a decimation of the vol, but the market's up 60 points. So it's like iron condors are losing. You got to have some kind of creativity, some kind of directionality if you are trading this super low vol environment. Some of these expirations are single-digit vol now in the S&Ps, which is crazy.
Yeah, I always found like the Super Bowl and Super Bear very interesting because it's kind of like the death before debit mentality, right? Where like I would never just buy an outright spread, an out of the money call spread or out of the money put spread. And so, you know what? Let me sell some premium on one side to then collect and then use that premium to buy the option spread. So I've always found that interesting, But yeah, I mean, if you were using the GTH hours, for example, this morning, and you did a little Super Bowl, that would have been looking very nice right now, especially with vol getting decimated too. That call spread should be trading probably, closer to parity than you would think already, for such an early time of the day.
For sure.
Yeah, I'm glad you said what you said about the players are not like sizing up the way they were. We were talking about that this morning, actually, and it's the valid point, and that's just where we are in the market. But don't worry, it'll return. It'll return at some point. But right now, it's just not the time to be like slapping on, $20 wide iron condors and doing 10 of them, like just to try and recoup the amount of volatility that you're not getting normally. It's not the time for that.
Yeah. Well, we've got some symbols.
Oh, yes, we do.
Top 20 symbols. Where's Tesla? That's the question. Where is Tesla today?
Yeah, we'll see. Let's get that pulled up here. Top 20 symbols going through the system and their IVR. At number 1, NVIDIA with a 29, Cisco with a 41, Tesla 1, SpaceX 12, Micron 32, NBIS 47, CoreWeave 23, Robinhood 35, AMD 32, Intel 42, Netflix 23, IREN 34, Dell 76, Oracle 67, Apple 34, SMCI 42, SNDK 31, SOXL 48, Meta 29, and Microsoft 29.
Love it.
You know what I love is how differently him and Marty do this. I mean, I love it. It's great to me. You know what I mean? Like he does it top to bottom. Marty likes to go bottom to top.
Yep.
Well, because I do have a reason for why I go top to bottom is because the top is like kind of always the same, right? And so like I like to get those out of the way and get to the more interesting ones, sort of like that 15 to 20 range, and leave what I would think is the best for last. I would say those are actually some really common names that we see from 15 to 20 right now, but surprised they're actually that low. I feel like the 5 to 12 range is what's pretty interesting, even 13 with Dell on this list today.
Yeah, Dell being up like 5% today, I think. At least it was at one point. Not sure if it still is. It's faded some. It was up 5%, but now it's faded some.
Yeah, Cisco's trying to catch a bid here. Had a big intraday range already from 115 all the way down to 110-ish, chopping around 114 now, but not a great earnings report, at least digested by the market. And then on the other side of the coin, you have CoreWeave. That's impossible to say fast. Up $5, continuing its rally from 2 days ago, and it just seems it's up and away for the rest of the market here.
Do you think in the Cisco offices they play Thong Song all the time, just like as a way to motivate the troops? I was curious.
I finished Hawk yesterday, and he references Cisco like multiple times in that show, multiple times. So yes, I think they do play that song.
Meanwhile, he was like, "What the hell are you guys talking about right now?"
He was like, "Who's this Cisco fellow?
And what is this Thong Song?" Yeah. The 90s are wild, man. I'm telling you.
Okay. Yeah, because I'm not too sure what you're talking about.
Okay. When you get back to your... Well...
No, you probably shouldn't.
That's safe for work.
It's all right.
It's safe for work.
Turn off the whatever
just ask Jason, hey, what's the Thong Song?
Okay.
There you go. But yeah, NASDAQ 100, Cisco leading the way to the downside, down 7.5%. Pindodo down 3%. SpaceX down 2%. But yeah, just a massive upside move here. Look at all these stocks that are up over 2-3%.
Yeah, this is surprising. This is a pleasant surprise, actually.
Yeah.
This move.
Yeah. Netflix, interesting. Quietly picking up some steam here. But yeah, I think when it comes down to this market, you got to be careful with the neutral stuff and the sizing up when you have a 14 VIX in a market that's ripping. This is literally, we're now up twice the implied move today from the beginning of the day. That started at 30 points. Now it's only 19 points, 18 points, crushing every single second as we speak. But yeah, crazy move today.
Hell, even MicroStrategies is positive. I mean, that you can get that name to go positive.
Yeah.
Wow, you're doing something.
Any other interesting tidbits from the desk?
No, but I do want to give a big shout out to Frankie Walsh, just because he always sends me like all the earnings every single morning and like the CBOE updates and stuff like that. Get a Teams message from him every single morning. And so shout out to him, keeping me nice and informed.
Yeah.
You know.
Yeah.
He is great.
Yep, he is great. He sends it to me too. He's awesome.
Yeah. Well, Hugh, appreciate your time. And yeah, we'll see if this market can hold up here. Up 56, NASDAQ up 350. But yeah, lots of interesting names on that top 20 list. So check those out. See if there's any trade ideas coming your way. But yeah, we're going to take a quick 90-second break. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Every time he explains something to me, I ask him the same question.
He always asks me the same question.
What's the trade?
I'm not always sure that's the right question.
It's the only question. Retail traders don't have a thesis on in their portfolios. They have positions on.
And if you don't know why it's moving, the position is a good guess.
And if you never get to the trade, the reason has no meaning.
Same market.
Different question.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
What's up, everyone? Welcome back to the show. We got E-minis up 60 now. NASDAQ up 360. I'm sitting here like, why am I showing so much losses in these MES and MNQ positions? It's because I did not make those adjustments yesterday. And now the market's up twice the expected move for the day. So it's time to make some live adjustments here. First things first, 7,800 straddle. This is the initial position in MES. Strangle with 11 rolls. Order chains feature on Tasty is one of the best things that retail traders could ask for, honestly, because it keeps track of all your rolls along the way, gives you the real-time cost basis, your real-time P&L. You can group by order chains at the top of your positions tab. If you're not doing that already, then I think you're making a mistake if you're making a bunch of adjustments with your options positions, because order chains is the only way to see the holistic view of the total position. But
I made that change like a year ago.
Yeah.
So it changed my life.
Yeah. It's great. So yeah, let's roll this position. So 7,800, this is the strangle with 11 rolls. I won't take bearish delta on this thing. This market's just moving higher. I'm much more comfortable just continuing with rolling up and out, and we can force a credit here. We're now in the money on the call side, 35 days out. Let's take a look. So if I move to the next contract, which is moving into the 36 day and beyond, If I didn't want to do that, I could just roll this up, right? I could just buy back the 7,800, roll it to the 7,900. Actually, I'd have to go a little bit further in the money to force a credit by picking up bullish delta. Could do that. It doesn't really help me in terms of extrinsic value. You can see I'm actually giving up extrinsic value and I'm replacing it with bullish delta within the money options. So let's not do that. Let's go out to the next contract. We'll buy back this September 7,800. And then we'll go to end of month, September 30th. So we'll push it out to the 48-day. You could also go to the 64-day, but let's go to the 48 days just so I have some more flexibility if I need to roll from the 48-day to the 64-day. So I should be able to roll. First of all, I need to mention 78.30 and then 78.96. We've got the position here where I can roll up 60 points. So let's move it up to the 48-day 48-day cycle and up to the 8,000, 7,900, 7,950.
Just making sure you collect the credit, right?
Yeah, just make sure I'm collecting a credit and not giving up too much extrinsic value. This contract is currently trading at 78.95. So yeah, I think this is a fair roll. So let's roll to the 79.50 from the 7,800, pick up 43 points, just continue to pile on those credits, and we'll see if we can get this filled. 43.50. I'll let it sit there for a little bit. So that'll be the first one. And then the next one would be the 7,400, 7,900. So this is another one where if I wanted to stay in the same cycle, I can just roll this up. So taking some heat on the upside, the downside is out of the money. There you go. It's filled on that one. So I could just buy this back and then roll it up to the 7,800, 8,000. So this one I can just keep the same if I really wanted to. And this is an example of getting rid of bearish delta and shifting the whole thing up. So moving it from the 7,400, 7,800 or 7,900 strangle to the 7,800, 8,000 strangle. It's a little bit more narrow, but I have plenty of premium here. I could move this up even further if I wanted to give up some. But let's just lean into this rally and push that call in the money, to the 8,000 strike, which is inside the expected move, still picking up 45 points. Adjustment there. Let's let that cook. And then last but not least, let's do the MNQ, 29,000, 30,000. This is a position that I could do a very similar adjustment in. So getting rid of that bearish delta, I could move the put from 29,000 up to 30,000 or even like 32.50 and then just sell something against this for a credit. There you go. 32.50, 37.50 for $49. So almost all these are around the same premium. Let's make that adjustment in the same cycle. Just get rid of that delta. So there you go. I can always roll to the next cycle if I need to, but I'll stay in this 35-day for some of those.
Nice.
Long-winded way of adjusting those positions, but we'll push those to the follow page. We got Tim Knight on the line. Tim, what are you looking at this morning?
Well, I'm looking at bear death right now. There's some things going on that we've been watching that have transpired that I think are worth noting. And so I've got some charts ready, if we can thumb through those a little bit.
Let's do it.
The first one is the ES. So we've been talking about the past 6 trading days, the 6 days preceding this one, just grinding away. Well, the grinding stopped. I don't know if the PPI did the magic, but for whatever reason, we're at lifetime highs on this of about 60 points. And the energy that's been pent up from this quagmire is being released. And, new highs, as I so often say, beget new highs because just simply stated, everybody is a winner. And it just becomes a game of like, when do people stop buying? Because it's not because they're trying to shrink losses or get flat or anything like that. It's just like everyone's prospering, so it just kind of feeds on itself. It's like this virtuous cycle. And without commenting on that one specifically, I also want to note that the NQ, although it's not at lifetime highs and has not exceeded this rather gentle trend line, it has pushed above this multi-week level here that I've got in red, which also is releasing that pent-up energy from that little tiny little rounded bottom that we've seen over the past 6 trading days. And so we're seeing a lot of green on the screen. What's saving my bacon today is my metals shorts and also good old China. I'll get to those a little bit later, but I'll just shut up for a minute and let you guys chime in on that stuff.
Yeah, you're right. The metal shorts is kind of interesting considering that the dollar is down. Not really sure what the deal is there, but to that end of the market, I mean, we talked about this coiling that's been going on for the last 6 plus days or so, and now you're seeing a little bit of a breakout. So I think it's an interesting point to layer in some. I know you're going to say you're going to not believe this, but it's an interesting area to start to layer in some shorts a little bit at a time here, I would say.
Oh my goodness! Well, I want to mention something. I'm going to use SpaceX as a way to make a point, very generally. So let me first do my SpaceX thing, then I'll make my point. So as I've talked about here, we've got kind of a new range on our hands, which is about 104 on the base and then 150 on the top. And the reason I say 150 is because that had been the base back here during these tumultuous days. We blasted higher, fell really hard, and seemed to find some flooring there. And when it finally broke that floor, it was just day after day after day of falling. And so that level of about 150 is pretty important and true to form. We got up there just about, and even with all this green on the screen, especially with tech stocks, SpaceX is actually down almost 3%. But the point I want to make to our viewers is this, and you fellas may have experienced this yourself. We archive these videos, we put them up for people to see later, and out of necessity, there's a very brief kind of nugget about like what was said. And sometimes it's not deliberately misleading, but sometimes it's kind of a bite that doesn't really tell the whole story. And it's important people watch the whole thing to kind of get the nuance, because a couple of weeks back, I had made some comment that given the earnings were coming up, if they were a shocker, the stock could easily go to the double digits. But I countered that by saying the paradox here is that this unlock that everybody's been talking about before the IPO, but this unlock that was going to take place, paradoxically could create a rally because all the fear was sort of already baked into the price, and people sort of knew that everyone was going to be selling from the inside, and that it would actually rally exactly at the time people thought it would collapse. And that is what happened, because we did get the unlock, and lo and behold, we went up like 45% in just a few days. The YouTube clip said something like, Tim says double-digit SpaceX after earnings, which it was all these conditionals around that. So just everybody know that in this business, there's a lot of things going on, and kind of listen from the beginning to the end to kind of hear all the data instead of just grabbing that one 5-word nugget and saying, that's the conclusion.
Yeah, I think lots still to unpack with SpaceX, but good to see that it caught a bid. For our positioning at the very least, which is long-term bullish, with some longer-term positioning there. But yeah.
Well, I was curious it's great that it's rallied. I'm delighted, but I was wondering what was that surge yesterday all about? And I mean, like we talked about yesterday, they always have to trot out a reason. Like yesterday's reason for Apple was like the Apple Pay guy. And the reason for yesterday's rally ostensibly was that Elon released an all-hands meeting on Twitter or on X, in which he declared that their AI revenue would exceed their space revenue starting next month or something, which is interesting. But like I say, we finally reached the point where there is a mass of people who did buy at these levels and would like to get out without too nasty of a loss, and they started to do that yesterday. So the day will come when there's some event or some news so good that it punches through this 150 and reverts its role once again to support as opposed to resistance. But, that could be a ways off. I mean, very long term, I think it's going to do great. But at the moment, I do think we've got this very wide range on our hands.
That's fascinating. I didn't even know he released that. But I'll tell you what, that means he's aware of timing, because to me, it seemed like yesterday that it was just basically pulled up with a lot of those names that were moving. And he had earnings from CoreWeave, from NBIS, from LITE, Lumentum, name you brought up a lot on the show. Mm-hmm. And those names were moving up And a lot of other tech names moved up yesterday as a result after 2 days where they were just like nobody was interested in them. So he is obviously aware of what's going on in the market and just hey, let's release a little positive news on the day where all these other names are getting bought. Oh yeah, well now we should buy SpaceX too because of this news. So it's fascinating. It really is.
It reminded me of an anecdote I hadn't thought of in ages. So back in '92, I founded a company called Profit, Prophet, Profit Financial Systems. And it became Profit.net. And by 1999, we had a company from Texas that was really interested in buying us. This was a company that was very successful and was really wanted to establish something that is, they wanted to do back in 99 what's kind of happening today. They wanted to commoditize internet traffic, just like right now, Jensen Huang and I guess the CME want to commoditize compute. Very innovative, very rich company. They wanted to buy us. They flew me down to Texas. We had the meetings and so forth. I decided not to sell to them. That company was Enron, which I think is kind of interesting because there are all these parallels being made today between NVIDIA and Enron, which I think is, obviously a little overstated. I don't think anyone's saying NVIDIA is a criminal enterprise or anything like that, but some of the circular financing and the hype and so forth. So I was reminded that I still have the business card from the vice president that came out to buy my company. But luckily we said no thanks and didn't take a bunch of Enron stock for what I had built.
God.
I was going to ask you, after meeting and declining the sale, did you short Enron?
I was too busy running Profit to monkey around with trading. Funny enough, after that, ultimately led me to Tom because InvestTools wound up buying Profit 6 years later, and then merged with Thinkorswim and da. So this whole saga to it. I bullet dodged with Enron. Let me talk about metals for a little bit because that's one thing that's keeping my chin up this morning. I spoke yesterday. I don't know if it was here on the afternoon show or both, but we've been tracking this right triangle on metals, and so far so good. Here we've got gold, which is down about $40 now. You can see the past 3 days it's kind of conked its head against the base of that triangle, and it's turning south. And there's a similar one with silver. But I did a couple of things with metals yesterday. One is that I shorted XME, which is the, yes, there's precious, but also other mining coppers involved there. So that had a nice big red bar yesterday. We're just sitting on this again today, about 0.7%. It's not a fantastic looking pattern, but it definitely, for a number of reasons, seemed like a good short opportunity. And the other one, which I was less zealous about, but actually is going much better, is GDX, which is tumbling 3% right now, which on this very green day is welcome. So, what do you folks think of precious / miners right now?
Good question. I'm bullish on silver. I just have a perpetual bullish silver position. So I've got 100 shares that I was put from a short put at 87, but I picked up $2,400 of premium. So my break even is pretty close to where we are now. And I'm trying to get into more shares with a put ratio spread to just lower cost basis as much as possible. But long-term bullish silver. And then GLD, I've been trading in and out of. I actually closed my GLD position into that recent run up that we saw a couple of days ago. So I had a 390, 380 diagonal spread, closed it for $200. So I'm out on GLD for now.
Yeah, I'm long silver as well. I put a position on the other day, but I gotta say, Tim, this is the one thing that really doesn't make sense to me today in a market where, look, after two inflation reports we just got, you're seeing the 10-year yield come off. It's down 1.5% right now. Bonds are up. Treasuries, that is, are moving higher. And I just don't really understand why gold is moving down, dollars down today. It's kind of weird.
Yeah, no, it's there's a lot of things that are confusing now. I mean, to be clear, I'm long-term bullish metals, as I say, just on a daily basis. But for now, I just think there's a little sinking going on. I see we're getting to the bottom of the hour. I want to share one last chart, which is the other thing, which is helping today, which is my buddy FXI. So China, as I've said before, this is a very simple position for me, just long FXI March 2027 puts, 37 strike, like I said. And God bless it, we are doing what I want to see, which is doink, 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 even with all this crazy buying going on. And it's like, to put a twist on an old saying, there's always a bear market somewhere. Mm-hmm. And so I'm trying to look under the rocks to find opportunities, and this has been one. And obvious from the expiration on this, I'm going to get this a longer term play, but this is definitely behaving itself.
Yeah, this has been a fall from grace a little bit over the last couple of days, but yeah, like you say, there's always a bear market somewhere. There's always implied volatility to sell. There's always something to look at. So that's the beauty of the markets. There's hundreds of things we can trade on a day-to-day basis. But yeah, crazy move here to the upside with the E-minis and NASDAQ up almost 1% each, even with
they've cleared the field. Everything's just raging right now. It seems.
Yeah, you're right. I mean, I feel like a couple of things have just happened in this time period, like while we were sitting here. I mean, this is, wow, it's something else. But yeah, to your FXI point, you've been all over this one. This one is definitely fading more recently, and good trade on that one.
Yeah, thanks. I'm keeping it light. Otherwise, I'm using a part of cash and zero margin. So I'm keeping. I mean, you were saying earlier like how confusing things seem to be. Like this doesn't make sense. When things don't make sense, it's hazardous to just like I'll just guess. It's better to have some basis for it. And so I am keeping things light. And the things that are working, focused on those instead. The whole tech/hyperscaling thing, really strong right now. So I'm just over in that other corner right now.
I hear you.
Yeah, makes sense. And yeah, we'll see what happens with SpaceX. The chart, if you chart the options themselves, like this is the 300 strike call that I own out in the 500-day cycle. It was trading for $9 and spiked up to $1,800 yesterday. So
a $300 call.
A 300 strike call, yes. Yep.
So doubling will get us at zero intrinsic value. Okay.
Yeah. But that's not really what I'm playing for. I sold a put with it, so I have this neutral profitability zone of $350 in the middle. So I sold the put to finance the call. So it's not just the call itself, but this theograph. Like if we go back to the recent high of 225, this will be a $4,000 winner.
And you did it
just out of the money
when stock was like 200 and change, to be fair.
Yeah. So kind of a risk reversal Super Bowl setup where you're financing the cost of the call with a short put. But I like these trades, especially if we expect SpaceX to have a period of time where it rips higher. We'll be able to benefit from that for sure.
The Anthropic IPO should inform that some. Yeah. They're talking about a bigger than SpaceX IPO in October. So if that does well, that'll just add fuel to the SpaceX fire as well.
Cool. Wait, which IPO?
Anthropic.
Oh, right. Oh, yeah. I forgot about that.
Yeah.
They're coming soon.
Dario.
Coming soon. But Tim, appreciate your time. We'll see you a little bit later.
See you guys.
See ya.
Adios. E-mini is having a strong day, up 65. NASDAQ up 400. And I think we can pop over to some research in just a little bit here. But crazy day in the markets, well outside of the expected move to the upside. E-minis were only projected to have a 30-point move at 7:30 when we started the show. And we are up 65 points here with an implied move for the rest of the day of like 15 points.
You love to see it.
Kind of crazy. But we got Julia on the line. Julia, how you doing?
Fantastic.
Great.
Fantastic.
Yeah. Oh, your hair looks amazing.
Does it really?
Look at that sheen.
I know, right? It looks like it's just like shining.
Yeah. Shiny coats, right? I guess.
Yeah. I like it.
Someday I'll figure out hair. I don't know. I have yet to figure it out, but I'm not complaining.
I think it's fine.
I don't know.
I mean, you could go, what I'm doing,
I kind of have thought about that, to be honest.
Right. No, you haven't.
You could totally pull it off.
Like a buzz cut.
Actually have.
You could pull up like a buzz cut.
The shortest I've ever gone has been like kind of shoulder length, and that was pretty short for me. But maybe someday
you
I'm
could
just
pull
gonna
off
be
like
sick
the
of
G.I.
it.
Jane look. You ever see that movie? You ever heard of that?
I've heard of it. Yeah, who was in that?
Demi Moore.
Demi Moore. Yeah. Maybe someday. I don't know. I think whenever that psychiatric break happens, it's going to be a great.
Yeah. Just watch the movie Hackers. Have you seen the movie Hackers?
Yeah.
No.
Yeah. Oh, Hackers is right up your alley.
Yeah,
Hackers. Let me
that's the
see.
style we need.
It's a little dated.
That's the style we need to get in. With Angelina Jolie.
Angelina Jolie. Yeah.
That's the style we're after.
Yeah.
Well, I was big into Cyberpunk, which is a little bit longer than this, but I'll take it. Yeah, there you go. There's G.I. Jane.
Yeah. I think you could rock that, but I think the Angelina Jolie Hackers look, that's more up your alley.
I didn't realize they did this in the promo. Wow. When you look at
Hackers
promos, sometimes there's some things that stand out that you don't like. I didn't realize that you can see basically in the background there's a mirror image of her with the hat on. I didn't realize that.
Oh, I didn't see
also
that.
didn't realize the other thing that's pretty clear and apparent there.
Hackers has a 34% on Rotten Tomatoes. Just FYI.
Don't pay attention to that.
I mean, 34% is 100% in my book.
Yeah.
It's just one of those nostalgia movies. But yes, it is hilarious to watch. But it is also very entertaining. There you go.
Big guy, that one.
Like this,
that
this
one?
I can see.
That is the look right there. Wow.
Yeah.
Here's the problem is I don't have any patience whatsoever for actually doing my hair. And people underestimate how much work goes into this style.
Yeah. There's a lot of gel in that hair, I can tell you.
I think
Mikey, you gotta use some gel,
I think
right?
you would identify with this character in the movie. I really do.
I gotta watch it. I mean, maybe it's time to get into hacking. I don't know. 95.
Yeah, you gotta watch this movie if you've never seen it. It's a cult classic. And the cult is
I don't know. I'm gonna give that 34% on Rotten Tomatoes a run for their money.
I think you would like it.
Yeah.
I think you would like it.
We'll give it a go. I don't know. But yeah, I don't have any patience to do my hair. So I don't know. Maybe, I don't know. We'll see. We'll see how the market goes today because I put on a 0 DTE trade, but after the market had already been open for an hour. So we already got that first bump of the rally, but here it is continuing. So let's see what happens. This is speculation. I feel like we're going to have some kind of correction throughout the day, like even a small one. It's kind of tapered off a little bit in the last 30 minutes.
No. Oh no.
Yeah, I mean, some of these stocks are just so strong today. Seeing a big move in Intel, which you love to see. I need to actually make an adjustment here on this position. I wanted to roll this out from September to October and kill the inversion. So just buying back this 120, 130 in September, rolling out to October to the 130 straddle for a $3 credit. Yesterday is a $3.40 credit now. So maybe it's a good thing I didn't get filled.
Maybe.
Yeah. It's a blessing. And then SMCI up another 10% today after closing nearly 20%. I think it dipped a little tiny bit before the close, but nearly 20% yesterday. And then SanDisk as well.
Wow, quarterly was up higher, but that's faded like $6. Wow.
It's all over the place. Yeah, but a lot of these semi names, a lot of these tech names. But also, interestingly, I made a Twitter post about this yesterday, is that even though the tech companies have been some of the biggest gainers in the S&P in the last 15 days, they've also made up some of the biggest losers, which kind of ties back to the piece from earlier this week, where even though we have some really strong names in the tech sector, just from a performance perspective this year, it's not widespread. Only about 60% of the tech companies in the S&P are up year to date. So it's really concentrated in just a handful of names, not so much the sector overall.
Well, as we get to your piece here, Frankie sent me some data earlier, which really explains kind of this rally. This is one reason I don't know if we're going to fade today. He's talking about big positive advanced decliners and breadth this morning. And 83 of the NASDAQ 100s are positive and 360 of the S&P 500s are positive. So this is a widespread rally we're seeing right now.
Yeah.
Kind of like widespread panic.
Panic. Falling up the stairs maybe, but
yeah.
I guess we'll see. But y'all want to get into some research?
Yeah.
Let's do it.
Let's do it. Okay, so today we're going to be covering a piece from God, the cost of waiting for high IV. Very interesting piece. If you want to give him a follow over on X, he's going to be writing about this as well. But high IV, we talk about it all the time, comes with a number of different benefits as to when IV is low. However, high IV conditions don't come around very often. So we were going to look at the cost of waiting for high IV and being very restrictive, I guess, in terms of some of the entry conditions. We're going to be looking at the statistics that he put together, both at a trade by trade basis and then across a sample portfolio. Make sense?
I like it.
Yep.
Let's do it. Okay. So let's go into this study slide. So here we're testing 16 delta SPY strangles and short puts, 45 DTE managed at 21 DTE. So definitely longer term compared to what some people are trading now, but we're just going to be using this as an example. We're looking at data from 2021 to 2026, and we're looking at daily entries. So we're going to be comparing a couple different styles of trading. You have the always on, so somebody who's just trading every day, noting that we're not going to have any overlapping positions. And then we're going to have the waiter, so somebody who only sells when IVR is high, and we're going to be looking at a couple different thresholds there. We're going to be looking at the same bankroll, same structure, and then we're going to be putting idle cash into T-bills in the portfolio so that it's, gaining a little bit even when the waiter is waiting. So here we're really going to be looking at waiting for high IV, just from a positional standpoint, but then also a more holistic portfolio perspective and what the kind of nuances are there when you're looking at it from two different angles. Make sense?
Beautiful.
Yeah.
Gorgeous. Okay, so let's go to the next slide. So next slide. So when you're looking at like the per trade statistics, high IVR comes with a ton of benefits. So when we have people who, or example traders who are waiting until IVR is over 70 to trade one of these puts, for example, that comes with significantly higher ROIs and significantly higher win rates than in lower IV conditions and when you're selling sort of every day. So that win rate goes from 77% on just like a daily basis, taking IVR out of it, to 95%. So significantly higher win rates, and then also significantly higher ROIs, the more restrictive, the strategy is, looking for higher and higher IVRs. And part of that is because like premiums increase, significantly more when IVR goes up, but then BPR for undefined risk strategies also tends to go down, based on the calculation when IVR goes up.
Yeah, this one speaks to the synergy of a short put in SPY or the S&P 500 into a down move where you have a lower price point. You can move further out of the money. To your point of lack of buying power, the implied volatility increases, which means you have way more premium, really far out of the money on these strikes. And the market and the risk calculation just realizes, for a continued move down 20, 30, 40% doesn't happen all too often, but that's where the premium is priced in. That's where that skew really gets infused to that downside, which is why the win rate is so high with these.
Mm-hmm. Right. But the trade-off of that kind of comes over the next couple of slides, which is that those very high IVR conditions don't come around very often. When we're looking at like just volatility, like as a signal rather than like a normalized one or a relative one like IVR or IVP, you can just see how often the VIX even goes above 30. Right. Which we hit 25, we hit 30, within the last couple of months. But when it goes up even higher than that, those are just very rare conditions to have like overall volatility across the market as a whole. So even though, those conditions can be favorable, they just don't come around very often, which is, kind of why it's important to look at not just like the per trade statistics, but also the holistic portfolio statistics and performance that we're going to be checking out in a little bit.
Yeah, it's pretty rare. It really is. But we like these environments where vol is really low to see eventually where we do get those pops coming.
Mm-hmm. Yeah. That's right. But yeah, that just paints an interesting story because average VIX is around like 19, median VIX, I think it's around like 17, something like that. And then it can go as high as like almost 100. So very big range, but because most of that activity is just concentrated towards the lower end of the range for most of the time, that's kind of dragging that average down. And that represents like the majority, or like I would say like the most common market conditions that you'll see over a longer term basis.
Yeah. And I think those red bars at the peak there, like it seems counterintuitive, but right now we're trading a lot of equities. We're trading a lot of single names. We have our perpetual trades in MES and MNQ. But if and when we do get that IVR pop to 40, 50, 60, 70, and we've got a VIX above 30, you'll see me trading SPY, like direct. I'll just be selling out of the money puts in SPY because it's like when the vol is that high, there's less of a reason to need to go to the equities when you can sell the premium in the ETFs or the indices. That creates these rare occasions. But that's like the only time you'll see me trading SPYs in these huge VIX pops, and I'll just be selling out of the money premium to the downside because you can pick up a couple $1,000s for premium that is 20% further out of the money than the current price. And I probably want to pick up delta there anyways. So it's like a kind of a win-win in my mind.
Yeah. For sure. And if we go to the next slide, we can actually see like a breakdown of the percentages, like basically like how frequent the VIX winds up in certain ranges. But when it's over 30, which we've had, even like a couple pops this year, that's only about 30% of the time, just looking from 2021 to 2026, which, has been a relatively volatile range versus the last like 20 years, for example. So it just, kind of like I said, and then like IVR over 50, 13% of the time. So even though those do come with, favorable in a lot of ways per trade statistics, they just don't happen very much. And IVR over 50 happened about 13% of the time in this 5-year period, which is like kind of crazy actually, because 5 years is not that long, all things considered.
Yeah. Not too long.
Not too long.
At all.
So then when we go to the next... It's been a long 5 years, that's for sure.
It's been a wild 5 years, 2021 to 2026, for real.
It has. So now when we look at a portfolio, and it's important to remember that this is not meant to represent how somebody actually potentially trades, but we're really just looking at a 100K portfolio or 4 100K portfolios where one trade gets placed at a time depending on the entry conditions. And the entry conditions here are 1, always on, and then waiting for IVR over 30, 50, and 70. And so again, like the trader is going to have a more complex portfolio than this, but just looking at this from a growth perspective, even though those IVR over 70 conditions bring in higher ROIs, high premiums, they just don't happen very often. So the portfolio here in this example that's always trading just outperforms from a growth perspective, although that does come with like higher volatility. So even though those are stronger individual trades in the more restricted cases, the downside of this is that it's just less growth overall.
Yeah, I think these are the important times to recognize, when we have these low VIX environments, it could be a long time before we get that big pop again, but just being patient and strategic to, keep capital on the side and still pick our spots when we want to for the day-to-day trades, but really preparing for a situation where we do get that big vol pop again. Like you want to have capital on the side to be able to take advantage of these scenarios.
Yep. So I think we can actually skip the next slide and go to the one right after that, just for the sake of time. But this sort of reinforces this idea that a lot of traders adopt, where you kind of have some range of portfolio capital, of portfolio net liquidity applied to short premium kind of at all times. The range commonly used is 25 to 50% of net lick applied to short premium, regardless of VIX, and then scaling that capital allocated up, in higher volatility conditions that can be more favorable for a variety of reasons, but keeping some baseline percentage engaged with the market to different types of positions, just to kind of, counteract the fact that implied volatility doesn't increase to those levels, to those very high levels very often. That being said, but yeah. So I think that's like just an important note here. I think you kind of like talked about this as well, just like kind of having your staple positions that are sort of on and then adjusting when volatility is high, noting that the percentages really change with account size. A $10,000 account versus $1 million account would have different percentages, but having some percentage of capital kind of always engaged regardless of where the VIX is at, and then adapting to those higher volatility conditions.
100%. Mm-hmm. Love it. Love it. Cool. So if we go to the takeaways, we can wrap this up. So waiting for high IV improves trade by trade statistics when we're looking at short premium positions specifically, when we're looking at ROI, when we're looking at the premium collected, when we're looking at the average profits, but suppresses overall portfolio growth in the long term. Win rates and per trade ROI rise with IVR, but total return just on a portfolio-wide basis kind of decreases because the conditions are just rare market-wide. So in this example, we just kind of looked at a simplified portfolio where we can kind of see that. But this is why many traders who are trading short premium have some amount of capital kind of always allocated to short premium, where it's commonly scaled up when implied volatility increases and those positions, those premiums, and those profit potentials become higher. Noting that volatility also increases, your P&L swings also increase, but that comes with significantly higher premium to compensate for that. So, and that's kind of that rationale of just scaling up when IVR is high, but maintaining some kind of baseline percentage otherwise. Noting that here we're just looking at SPY, but there's a whole breadth of symbols in the market to be trading that have maybe earnings that are more sensitive to sector-wide or, commodity-specific risk factors that can have volatility pop up for a variety of reasons. Beautiful. Yeah, I think keeping those perpetual trades on makes a lot of sense, especially in the indices. picking your spots in low VIX environments with the single name equities that will always give you that higher implied volatility environment. But if and when you do get that VIX pop and those outlier moves, going to the ETF and indice premium, selling that premium can result, especially on the put side, can result in some really high win rates. But you still got to stay small enough to be able to withstand any continued variance from that point on. But those opportunities do come around every so often, and we want to be there to take advantage of them.
Yep, sure do.
Sure do. And then, yeah, just maintaining a good amount of, like just discipline when IV is low, when premiums are low, just across the board. Just the keeping capital overall allocated to a restricted amount of like a short premium percentage is an effective way to just protect that capital and then have that in reserves for those higher premium positions. So just maintaining like a level of discipline and a level of risk, even when IV is low and the market doesn't seem to be doing anything, because those can be the most dangerous when VIX expands from that low IV environment to a very high one very quickly.
Indeed.
Indeedy.
Well, Julia,
I think that's all I got.
I think you need to watch G.I. Jane and watch Hackers this weekend.
It's on my list.
I think that's an easy homework assignment.
Easy. And then at some point I'll watch The Godfather.
There you go.
Yeah.
That's a longer one.
It's a longer one.
Being a young Italian girl, I think that would be awesome. Yeah.
I know. I'm very behind the times on that one. So I got a very loaded up weekend.
You're married now.
I know. And he's definitely seen The Godfather.
Yes.
He probably hasn't seen Hackers. I'll tell you that.
You might have seen Hackers. I don't know.
I watch Hackers like once a year. It's just one of those movies that you just got to watch. Once you see it, you'll be like, oh, I get it.
It's getting harder to find, though. Yeah.
Dude, DVDs. I'm so big on DVDs. Every time I go to, I'm not even kidding. Every time I go to a Best Buy, Half Price Books, whatever, I just scoop up all the DVDs because I want to be able to own, and CDs too. I want to own my movies.
I was
I'm
in
sick
a
of
store
like
in Wicker Park recently where they had like Blu-ray DVDs. That's hilarious. You're the one.
Get all
You're
of
the
them.
one.
Yeah, that's me. Get all the DVDs, all the CDs. I'm sick of like, oh, I want to go watch American Psycho and it's not on whatever platform I'm paying for. I'm like, I'm sick of it. I buy all the DVDs.
Roberto said about the Laserdisc. Are you into the Laserdisc? Next, you're going to say you're into vinyl too.
I'm not one of those. I don't know. It's just a lot of work.
You know what's crazy about vinyl is with all this crazy technology and all this AI, the highest quality sound produced is still from a vinyl.
Yeah.
That's
so
a fact. That's a literal fact. So that's crazy to me. That still
actually
this little rivet that's going like that is still the best quality sound.
I know, right? And somebody actually gave me a vinyl album recently, Songs in the Key of Life, Stevie Wonder. It's like one of his greatest albums. It's like a masterpiece. Which is I haven't even opened it. I haven't even opened it yet. Like I'm just leaving it, with the wrapping on it and everything.
Yeah.
And so fast forward, a funny story about this past weekend. I was at this little like a street fair, and they had like a friend of mine. He has like a 7-year-old, and he was asking them to buy this thing for him, and they said no. So I was like, cool, I'll take you, man. So I went, I bought one. I was like, get one for me too. And it's like this little package. It's like this little jelly thing or whatever. And I just opened it up or whatever, and they were all yelling, "You're supposed to keep it closed." And I was like, oh damn. And he kept his clothes and he put it in a bag, and I'm like, oh sorry. So it's all relative. What's important to kids.
I'm big on. I like CDs and DVDs because I can play them on a PS5. I don't need like special equipment to play them. Although I will say I saw a record player from like 1902 over the weekend. Wow. No electricity. It just amplified the sound that came off the disc through a box, and you could just hear it. And not the same quality, obviously, but it was cool. It didn't need any electricity. So I don't know. Yeah, maybe I'll get into vinyls. Who knows?
Maybe.
Should. Well,
okay.
Julia.
Thanks, guys.
Appreciate the content. Appreciate you. We'll see you later.
Peace.
Adios. E-mini is selling off a little bit. Only up 50 now. That's crazy. NASDAQ up 360, but we got to take a little break here. We're going to post these trades. We can review the trades we've done throughout the morning, and we'll have about 7 minutes before we pass it off to the next group. But join us on the YouTube chat if you haven't already. We'll scan through some questions as well. But you're watching Tasty Live. We'll see you soon.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What's up, Tasty Nation? Welcome back. We got E-minis sliding, only up 48 now. NASDAQ up 350. Crazy day in the markets, well outside the expected move still in the E-minis, but placed some earnings trades yesterday. Didn't go so hot, but we've got AMAT after the close today. Just want to do a quick recap on some of these positions that we've adjusted. So unfortunately, put on a iron condor in the one-day cycle. I guess I shouldn't say unfortunately. We're still kind of right there at 7,800. But need a continued sell-off here for this SPX one-day iron condor. I've got the 0-day super bear that's taken some heat, but that one is also pretty close to being out of the money. If we see the market be only up like 30 points today, I think we'll be okay. But made some adjustments in the MES position. So the year-long trade was at the 7,800 straddle. I moved it out to the next contract and up to the 7,950. And that was for a 43-point credit. So just continuing to pile on credits here. I now have 850 points beyond the strikes of premium received, which means my new break-evens are down at 7,100 in the new contract and up to almost 8,800 to the upside. So we got plenty of wiggle room there. I think it'll be good for that trade. The other MES position, I rolled up to the 7,800, 8,000, stayed in the September 18th cycle. So this one, I now have the 8,000, 7,800 with 200 points beyond the strikes. So 7,600 to the downside, 8,200 to the upside. These are two separate trades, and I'll keep them separate so we can see the rolls in the positions tab. And then MNQ rolled up just in the same cycle as well, took off that bearish delta that I was picking up and moved it to bullish delta. So I moved it to the 30,250 and the 3750, picked up 49 points of credit. And this is what you can expect when you're just making delta adjustments, forcing credits, and staying bullish throughout. And then Intel, last but not least, had the 120, 130 September inversion where the call was below the put. So I had $1,000 of intrinsic value there. I rolled it from September to October, got rid of the inversion, so removed that $1,000 buyback possibility and still picked up a $3.36 credit. So now I have $2,900 of credit against the 130 straddle in October, bringing my basis below the current price at like 101. So feel really good about this position. Any continued rally in Intel is just going to be cheddar. And any continued sell-off, I'll just keep doing exactly the same thing. Pick up a couple of dollars every single time we roll, and we'll be okay as long as Intel doesn't go to zero.
Nice. Click the new trades deal here. Added, one more thing in here, but closed out the SanDisk call butterfly. I've been doing a bunch of these throughout the last few weeks, and this was one of the latest ones. Did this for $5.55. So was able to close this one out. Nice winner. And the only other thing was SK Hynix. Again, I had a short put spread in October to finance a long call spread for last week. When the stock moved down, I just rolled the call spread to this week, and I ended up closing this out for a loser. I mean, obviously, $700 and change. I didn't really want to hold that with just the call spread with no other puts. I had closed a put spread out already, so I was literally just holding this long call spread, thinking there was going to be some type of bounce this week, which there has been. And I probably could have kept this on a little bit longer and actually closed it for more of a winner, but just wanted to get out of a near-term call spread with a day to go.
Yeah, I mean, this was probably trading for nothing 2 days ago.
Mm-hmm.
So value back is value nonetheless.
Yep.
But yeah, SanDisk, love the move there, up 60 points. And these butterflies have been working out for you. Just cheap butterfly entries.
Yep.
Expensive stock, high IV, especially to the upside. The call side just gives you that cheap ability to get in with the call butterflies because of that skew. So yeah, love to see it.
They've been great. So yeah, I mean, if I was thinking about maybe trying to put on another one, but if we get a pullback here, so I'll tell you what's interesting. If we get a pullback here today, this thing drops below 1,400, I might look at going to next week. Next week is expiration. Expiration usually gives us opportunities to really pen at interesting strikes. I did look at the 1,500, 1,600, 1,700. I literally looked at what has the most open interest. It looks like the 1,600 strike for next week has a decent amount of open interest, more than the 1,500. So if for some reason we get a bullish move, continuation here, that might be an interesting one. But right now, I don't want to pay $1,000 for it. So kind of hoping there's a pullback in stock here. We'll see between today and tomorrow.
Yeah, makes sense. But yeah, that's it for us. Thanks for tuning in this morning. Thanks for joining us on the YouTube chat. If you want to reach out to us on Twitter, you can do that. I'm at Trader Mikey B. Jermal's at Jermal Chandler. But we're going to pass it over to Chris and TP on the line. How you guys doing today?
Sirs.
What's up? TP, what do you think of Chris's
market's
new look?
looking good.
I mean, doesn't it? It's amazing. Didn't expect this move.
Yeah, I just bought an NDX put spread betting on a sell-off here.
There you go.
Right.
There you go.
Hey.
Die, NASDAQ, die.
Well, apparently there's a lot of volume, a lot going on, so you guys got it.
Yeah. Have a good show, boys.
We will. You're watching Tasty Live. This is Confirm and Sad. I'm Chris Vecchio. He's TP Tom Preston. We're going to take you through the next 28 minutes as we make our way through the midpoint of a trading day where stocks TP are on a run. You said die, NASDAQ, die. Are you short?
No. What I have to do is I don't want to take the time to fiddle around with this to get my data weighting running to see whether I'm net long or short the market. I can't tell right now. I have a bunch of stuff on right now. But I just think what I've had success with over the past couple of days, and this is just broken clock being right twice a day, Chris, is buying SPX put spreads into the close, like around 1 o'clock. I take a poll in my 1 p.m. show. Hey, what do you guys want? Bullish, bearish. They vote bearish. I buy a put spread, and that has won 2 out of 2, 3 out of 3 days, something like that. So I've decided to get long and at the money put spread in NDX. I posted this to the follow page. We finally got the follow page sorted out. So my trades, at least a lot of them are coming through. Some of the things that I don't push through are the little adjustments of trades that I've had on for a while that don't necessarily make sense unless you have the trade already on. So any new trades, opening and closing new trades, those should be going on now. But yeah, I'm just all I'm seeing, Chris, in the heat map thing, there are 2 stocks that are down. Cisco and SpaceX. That's it. That's it.
Who's long both of those?
That's going to stop at some point, Chris.
It has to?
Yeah, it has to. I mean, it has to stop in the next 5 hours. Okay? Somebody has to put a break on this stupid thing. And yeah, because I have so many things, like my little Cisco put spread. How's that doing? Where's my Cisco? Yeah, I'm right there. I'm short the 15-17 put spread in Cisco. That was a surprise. obviously, bit larger than the expected move on the downside. That's why I trade defined risk spreads in this thing. But
it caught me by surprise too. I mean, I was in the 112, 113 short put spread, long 133, 135, the double bull, Super Bowl. So last night when I saw this thing up at 134, it's like, all right, nice, worked out. Right. Today, a little more disappointed.
Right. And so that's why it's, trying to guess which way the market is going to treat an earnings stock. So, okay, whatever. I do a one lot in these things and see how they treat me. So, but right now, the big drivers, it's just a very broad rally here. NVIDIA, Microsoft, Apple, Google, Amazon, Tesla, the big Mag 7 stocks, the $1 trillion companies are all up somewhat. Micron up a huge amount, SanDisk up a huge amount, Hewlett HPE
you
up.
make an important point though. It's everything today. So I jump over to QQEW here on the screen, the equal weighted NASDAQ. It's up 1.4% right now compared to the headline index's 1.2% gain or so. There's a lot of breadth here today, TP. It's a nice rally.
It is a very strong rally, and and so as much as I'm keeping my fingers crossed for a little bit of sell off in the Nasdaq, am I betting the ranch on it? Of course not. Of course not. I haven't even given up hope on Cisco, Chris. It's looking at that, I'm basically, I'm not quite at my max risk at this point. But it wouldn't surprise me at all to see Cisco up another, $3 tomorrow, something like that. Just bouncing back off this. Call it a dead cat bounce, call it whatever. But at some point, it's I have no more risk in holding that short put spread. Let's put it that way. If it works out, great. If it doesn't, okay.
Yeah, I mean, I'm looking around the heat map today. Gold and silver are the things that are coming in the most. I suppose if you want to look over to ADT, some security individual names. TP, I'm fishing at the bottom of the well there right now to find something that would actually be super negative right now at this point in time. Some of the space stuff came in a little bit. ASTS, Rocket Lab, which had a nice performance the other day, those have come off a little bit here. I personally had positions in both of these as of this morning. They're now both gone. ASTS and Rocket Lab, those are trades that were put on earlier this week, TP. So just on that activity page, we took the 36 cents credit on the short iron condor into the earnings. We flipped it off for 7 cents today. And then for Rocket Lab, we took that in at 37 cents earlier this week, and we flipped it off at 3 cents today. So very, very happy with how both of those trades worked out.
So now that you point that out, so I have on in ASTS with 1 day to go, the 63, 65, 76, 78. And right now, I sold it for 65 cents. If I can buy it back for, let's try 26 cents on that, because I sold it at 65, a little bit better than 50% profit. Let's see if I can build. I may have to give them a penny here. And this is, Chris, you and I talked about this yesterday, is, how much slippage should I expect when I'm doing these trades? And I don't accept a lot of slippage with when I'm entering a trade. But right now, looking at ASTS markets, they're 10 cents wide, 8 cents wide in some of these calls in these calls. I may have to give the market a tick, like a penny. If I'm trying to buy it for 26, I may have to give them 27, 28 maybe to get out. I would still be capturing a majority of the profit if I do that. But I'm just going to hang on for a couple of minutes. The same is true for me with SpaceX. I still have the Iron Condor on the 22.24, 42.44 with 1 day to go. And I'm still down money on that. Down a little bit, not concerned. Again, a defined risk trade, Chris. That gives me some cushion on that. One of the little surprise disappointments for my first attempt at trading this thing is StubHub, down $1.19 on its earnings. I'm short the 7.5 put, so it's right there, and I sold them for about 22 cents or so on average, and Yeah, I mean, if it settles right here, it'd be a scratch trade. I have no intent of taking delivery of the stock. I'll buy these back, either the puts, or if I can't get the puts for a decent price, I'm going to short stock against them. Go through the expiration process so I emerge with no position. But StubHub, big move down. And you know what? I did sell my call spread in the yen today. I sold a 635, 640 call spread with 22 days. Down a little bit of money on that now. I sold it for nine ticks. And this is just thinking, kind of you and I have talked about this before, Chris, over the past couple of days about, how much is this intervention, whatever it is, going to carry forward, So this is just a bearish bet on the yen.
I hear TP. Yeah, I mean, I'm trying today to do a little bit more cleaning up. I have some stuff. The SPX Iron Condor, I felt like, the market's pinned after PPI. It's before the open. We got a 30-point range here. What's the worst thing that could happen? I could probably get in a short Iron Condor. Blew right through the long short strike at 77.80 here. So that didn't work out today. The upside is, of course, that I'm still persisting with the long MES position, with the long ESH7 position here, which TP, we're 45 points away from getting into my call spread territory.
Yeah, well, Chris, what you and I have been talking about this for the past couple of weeks. The probability of the S&P's touching that, what is it, the 7,800 strike or the 8,000 strike is very high. Don't be surprised if it gets up that high. The question is, and here's the trading decision you have to make, that you have a call spread that expires in December. If the market rallies up before the end of August, let's say over the next couple of weeks, do you take profits then? Do you take whatever you have then?
Yes.
Or
I have a plan.
Okay, or do you hang on to it? Or if the stock, if the market drops down and then hits that price again in November, December, you got to adjust for both those things. So, Chris, how are you going to approach that trade?
If we get to 8,100, my intent is to take it off and then go further out in the money and look up towards 8,500 for the rest of the year and use some of the proceeds of this trades to finance another, moonshot, so to speak.
So
I'm just swinging, TP.
Now, Chris, you know what you're doing? You're thumbing my nose at my little NDX put spread. Okay, that's what you're doing. You're thumbing your nose at that put spread.
Not for today. You want to dance. You want to dance. Okay, let's dance. Anyway, hey, Chris. So one other thing before we get into the questions. Sure. This is the problem when Chris and I get on air is there are 100 things about the market we could talk about, and we also have questions that we need to answer. But live cattle, LE. So I had a losing trade when I sold my put spread in the hogs. Live cattle have been selling out pretty sharply. LE /LE, and interestingly enough, the skew is pointed to the downside in live cattle. So I'm working a short call spread in there just to see if I can get filled. Nothing done yet. But I thought that was cattle's very interesting. And what I've been hearing is, the ranchers, I guess, are culling their herds or getting rid of their inventory because of drought. They can't keep, the feed prices are expensive, but so is water. Water is becoming scarce and they can't keep their cows hydrated. I guess that's part of the story. Have you been following what's going on in the Colorado River Basin?
No.
So the federal government just stepped in and is forcing 40% water cuts from the Colorado River Basin to California, New Mexico, and Arizona. Mm-hmm. It's going to directly impact 40 million people. Lake Mead, which is the country's largest reservoir, which is part of the Hoover Dam system, is now at the lowest level it's ever been. Period. Yeah. Full stop. You can see the inflow at the bottom of the lake where the water's supposed to go in for processing, etc. Like those are now open and the water's not above that, so we can't even get water into the system. So you talk about drought affecting parts of the country, right? Like I know you're in the South, but as like a New York centric person, I can tell you the media system over here does not cover these sorts of issues whatsoever. So people just don't know what's happening.
It's completely localized. And I grew up in Massachusetts, and there was, water shortage just doesn't happen,
What do you mean? The ocean's right there.
You're sitting, right. There's always rain. But when you're living down here, outside Austin for me in Central Texas, and it gets even worse. So that's probably what's going on, I guess, with live cattle. Nothing done in there. But it's beef prices are still expensive at the grocery store, so that hasn't changed anything.
TP, it's a good time to turn towards tonight's earnings, which happen to dovetail with Confirm and Send, which is the name of this segment here. Keep getting questions about why there's no glasses or beard because I have to shave. And, there's a lot of glare in here today, TP, so it's not a new look. Don't worry. You can still send your questions, the questions about the market, okay, to Confirm, research@tastylive.com, research@tastylive.com. TP, I'm not joking. People were talking about this in the chat today, like asking what happened to my face. So those are not the questions we'll be answering today, although we've now crossed that bridge. All right.
Chris, you cut a striking figure on here. Bravo.
Thank you, sir. You as well, sir. You as well. Applied Materials reports tonight after a 190% run over the past year. When a stock has already tripled going into the print, does the implied move usually account for how far it's stretched, or does the market price it like any other quarter?
So the market is pricing it as they expect the stock to move over the next couple of days, or specifically one day. So if the question is, you're looking at AMAT reporting tonight, you're looking at the one-day options and the expected move. Down just past it is the 517 half puts on the downside, 595 calls on the upside. So it doesn't, unless the market makers care about how much the stock has rallied, it doesn't affect it, okay? All that expected move does is take the at-the-money straddles, comes up with the weighted average of the at-the-money straddle prices, and says, okay, this is how much approximately the market is pricing in for a move. If the market makers think, it's either it's gone up so much it might drop, or it's gone up so much it might continue to rally, that will be reflected in the option prices. You don't know, but the actual number, it doesn't look at the news, right? Or did you see what I mean? It doesn't look at what the past is. Option prices look forward, so it's the risk going forward that matters, not what's happened over the past month, quarter, year.
I had a professor years ago who talked about this in a theory class, and the idea always stuck with me. Is like when a stock has had a really, really strong move, right? Part of the reason why the options market may be pricing in a bit more volatility is because traders are asking themselves the question, is the future fully capitalized here, right? Because you can have a really good earnings report, and if the market looks at the numbers and go, you know what, the story's over, we've milked this thing for as much as we can, the share prices will drop. It's about that going forward. As much as the past may inform like the standard distribution of moves, and we can see that the standard distribution of recent moves, one standard is out to 605, 607.5, and down to about 510, 507.5. But in terms of what this means moving forward, right, the bar has been raised. I'm thinking about this psychologically, TP. And if we can't meet that bar, the market says, okay, that's the risk. This has been fully capitalized. All of that good news has been pulled forward already.
Right.
Cycle's done.
The bigger issue I see with AMAT, and Frankie pointed this out in the on the YouTube chat.
Yes.
Is the markets are pretty wide on these options. Not a huge amount of open interest on them. So yes,
just about
probably try to route an order in there today, just to play a defined risk trade. But that's a good point. Is the markets are fairly wide for what presumably, Chris, the stock's trading 2 million shares, over 2 million shares so far.
Not light.
You know, the options are kind of wide.
Well, they're kind of wide. You know, if you're going to look at volume and open interest to operate around this Applied Materials earnings today, it feels like it's got to be the round numbers. I mean, 500 has 100. We'll call it 1,400, 1,430 open contracts there. 510, 562, 520, 247 on the other side. 590 is only 376, and then up to 600 is 194. So that kind of worries me a little bit here, TP.
So,
you know?
Well, yeah, just like some of the outlier moves we've seen in stocks over the past month, right? Whether it was, you know, Cisco last night, for example, that will they try to pin AMAT at either 600 or 500, where all the open interest is concentrated? Now, when I say all the open interest, it's 1,400 contracts on the put side. Okay, it's not like it's 50,000, all right? But there can be a tendency, you know, that Max Payne theory, which I take kind of with a grain of salt, but it does sometimes show up, where the stock is going to gravitate where it causes the most pain for the traders who are along those options. So if there's long options at the 600 on the 600 calls, long options at the 500 puts, those traders don't want the stock to go right to that price and just sit there.
There seems to be a bit of sympathy trading going on here, by the way, in the space. So if you're looking for something that maybe, you know, a lot of these names have really gone up in a lot of value quickly here at TP. But when you think about Applied Materials, right, these are semi-cap companies. They're the companies that make the machines that make the semiconductor. Mm-hmm. Okay, so we've seen the Micron earnings. We've seen their expansion plans. Like SK Hynix, they've all said that more supply is coming online in the future, which means they're going to have to pay someone to build those machines, right? Mm-hmm. ASML, LRCX, Lam Research, KLA Core, CLAC, those are all the names that are in the similar headspace. So some of these names, TP, they do have decent, not the trading volumes here today, but when you look to their options market, some of them, depending upon the strikes you're looking at, may have a little bit better open interest. And so it's not a direct trade here, but this sector has really moved in sympathy. And I think the charts here all look exactly the same, basically, TP. That's hogs. But AMAT, LCRX, right, ASML, CLAC, they're all cuts of the same jib. So if you can find a better trade maybe in something that has a better depth of book, so to speak, that might be the way to do it. And then the odds of it moving or staying within its expected move probably, I don't know, a little bit higher because it's not the direct ground zero point of impact for these earnings. But AMAT, you may need to go to a different expiration cycle. I've been poking around here myself today just to see if I can find something for the trade of I might go out to 36 days to expiration, quite frankly, where there's just a little bit more time and some more volume and open interest can build into this contract. So when I get to the point where I want to get out, I won't be so concerned.
All right, I just filled my, what was it, the ASTS, what is it? The ASTS, bought my Iron Condor back for 26 cents. So I did not have to give the market a tick. All right, Chris, what's the next question? Because let's
go to the third question here, producers. Get some funny guys here. Okay, yes, we saw the email. It came into the chat. We can go on to the next one. CPI came in cool, PPI flat. S&P is near, the macro fear, CPI came in cool, PPI flat, and the S&P is near a record. The macro fear propping up index premium drained out in 2 sessions. When credits get this thin, selling smaller or wait for vol to come back. That's a sentence. TP, what do you do?
So the current volatility is always the best predictor of how much the stock, index, future, whatever, might move in the future. And I specifically say out to, let's say, 45 days and not really beyond that. Okay, that's the wild blue yonder. And we did a market measure today that says, look, yes, you can wait to sell premium when volatility is higher, but it's not worth it. There's so few occurrences when volatility increase is that high. You can't make a living trading like that. And that is exactly my own trading experience. That when credits get this thin, do you keep selling small or wait for vol to come back? I keep selling premium. Now, I will go, it's all about trade size. So with the VIX under 15, yeah, I'm not really getting decent credits for those short iron condors in SPX or whatever. So I'll do one of those, or I'll do a little bit smaller size than I normally would do if the VIX were like 19 or 20. So I'm still trading that way because even though the volatility is low, the market's saying the volatility is low for a reason, right? So the stocks probably aren't going to move, or the index probably is going to move that much. That said, don't sit on your hands. Don't wait. Go find higher IV elsewhere in individual stocks, for example, or other futures. Things like gold or silver or, crude oil, things like that. That it's, you still, as a trader, and I don't know, how often this person trades or what the objective is necessarily, but if you want to trade and you want to make a career out of it, you always have to look for opportunities. So the answer is twofold. Even though the volatility is lower, still selling premium, but I'm doing much smaller size. So my size reflects the volatility rather than the strategy in indexes. I'm also looking at individual symbols, individual stocks for higher IV to sell premium there.
Yeah, TP, I have nothing to add on to what you said there. I'm with you in a full agreement. I did want to flag here as we're making our way through the show, TP. You and I have been on air for 25 minutes. Since we've come on air, SanDisk has gone from about 420 to about 1544. It's now up 15% on the day. The chips here are really running right now, which maybe, when we have time here at the end of Confirmance, then we could talk about this wheeling it out. We do have two more questions here that I want to get through, though, and then I want to talk about SMH real quick because there's something live here. At the same expiration, the puts and calls that they equal to the money have different prices. I know that's skewed, but what is it actually telling me, and can I trade against it?
So if you're looking at IV skew, it doesn't tell you which way SMH or anything else is going to move in that direction. It's not and this is a very subtle point. It is not a directional indicator. What it says is that the market is afraid of that direction or not, right? So if the market is, in what we've seen over the past month or so, past couple of months, a lot of individual stocks have had the skew pointing towards the calls. The calls are trading over equidistant puts. That meant the market says, looking forward, we're afraid of a rally in these stocks, whether it's Microsoft or Amazon or Apple or whatever. That has subsided a bit. Puts are now getting a little bit more bid up and the calls are coming down. But it is the way to use that is just it's like throwing a dart. Okay? So you aim the dart at the dartboard and you hope to get a bullseye. If there's a breeze coming to the left or right, coming from the left or right, you have to adjust your throw to account for the breeze pushing the dart one way or the other. That's what skew is telling you. Okay? That's what skew is. It says, not saying that you're not going to hit the bullseye, it's saying you got to adjust a little bit to account for the skew. The market is telling you where the risk is. You can either agree with the market or bet against the market, but just understand that.
Yeah, I mean, skew is just the fear map for the market right now. And there's going to be a natural tendency for downside skew, particularly in the indexes and the mega cap tech names, because people are usually long the stocks using the puts for protection, right? To hedge off their risk. I like to watch skew in particular for those more technical traders out there that are trying to bring some options flavor to get you some more edge on your chart. If we have a stock that's sitting at support, right, and it's kind of holding there, and I see that the put skew is not increasing, I feel pretty good that the market is going to hold here. But if I see a stock sitting on support, and I look at it yesterday, and put skew is X, and today it's bigger at Y, the market almost feels like a break is about to happen. All right. And then all of a sudden, if the market breaks that support and the put skew remains, yes, it's richer because people are willing to pay you to stand in front of that free trade while the thing breaks down. So depending upon where you are on the charts, you can use put skew and call skew. That's why, TP, when you look at some of these names, like why is there so much call skew in a name that's this big? People are afraid of an upside move. Not me. Let's jump on. We can do it. We're allowed to do it.
Right.
All right. Last question here. When my option gets close to at the money near expiration, should I be watching gamma more than delta? Yes. Yes. When you're near expiration, gamma becomes the driver. If you're, go ahead.
Yeah. So it's what you are worried about is your delta. But what manufactures delta is your gamma. So this doesn't matter if you're long or short the option. So you have a certain delta that you may be happy with. You say, okay, I'm good with my 20 deltas or 50 deltas or whatever. The problem is, as you approach expiration, as the question implies, and as Chris is pointing out, the gamma starts increasing. That means that a 1 penny or 10 cent or $1 change in the stock price can make your 20 delta call go to 80 deltas really, really quickly. That is because of gamma. So it's delta that will kill the trade, but it's gamma that manufacture those deltas that do the damage.
And right now I'm thinking about this in particular for a position like TSM, for example, where I'm well north of my short strike at 400. We had a nice little pop. We've come in a little bit here. I still like this, but I'm now at 86% of my max profit here, TP. I sold this for I collected $3.13 in credit. I'm now at 43 cents on potentially flipping this back off. That's 86% max profit here. So what do I stand to gain? I mean, I could gain 14% more. I suppose I could go to max profit here over the next 8 days. But if this thing slouches back and let's say there's a meaningful correction again in the market where some of these semiconductor names, they're moving 5 or 10% today and TSM is only 10% above my strike, that can be wiped out in an instant.
Yeah.
So keeping in mind the profit that has been made and the gamma risk that's being faced here over the next 8 days, it's worth trying to get rid of this right now. And if I like the position still, which I do, I'll be able to reposition myself up in, say, like a 37, maybe a 45-day cycle, because that's what I've been doing with some of these semiconductor names during that sell-off. I was buying the dips in Western Digital, TSM, and I guess that brings me to SMH, which we will close out the show here. Yes, I am still wheeling this out. I'm still short the 630 call against stock that was assigned at 615 TP. We talk about hell and back over the past few months. This thing dipped down to 500. I've been riding this out. We're wheeling this guy out. If someone wants to take assignment up at 630, I'd be happy to give you these shares.
and just really quickly, I am short. Hey, where's my SMH? Here it is. I'm short the. I'm short the 6. Oh, geez, no, I've got a confused SMH position on. I got to break that down. But I'm bullish on SMH right now. I'm with you, Chris.
Hopefully for both of our sakes, maybe the NAP, 1/3%, S&P, 1/10%. You and I can both get out of these NDX and SPX positions. But you know what? We're going to take a quick break here. We ran over here on Confirm and Send. We're having too much fun. Thank you for the questions about the glasses and the facial hair. But more importantly, thank you for the ideas and discussion around AMAT and S&P various topics. Research at tastylive.com. Research at tastylive.com. Quick break here. Then we're back. You know him. You love him. It's Errol Coleman up next here on Tasty Live.
Chegou, não quero mais acordar. Como dá pra sonhar o que é impossível saber?
Like the market is just absolutely squeezing the mess out of any short sellers in this market right now. So I hope everybody's doing well. We got to do a little bit of adjustments in the portfolio and we'll get a little bit of an update. But let me know what you're looking at. Let me know what you're trading. Let me know what you're adjusting. And with that being said, we can jump right into the Tasty platform. I know things have been pretty crazy today. I know on Monday we had an inside day. Tuesday we had another inside day. And then Wednesday, it was a pretty choppy post CPI. We were pretty much just range bound the rest of the day. And today we're finally getting a more of a decisive directional decision that the market is finally making for us today. So just to start out, we're seeing a little bit of a pullback in the oil markets right now. I am still holding that oil trade right now. So we were hoping to catch a little bit of a bid here in oil. I know, again, this is one of the first times that we had seen any type of pullback in oil over the last, maybe 5 or 6 days or so. But just by looking at this daily chart and looking at how large this wick is on the bottom of this candle, you can kind of tell how much that dip has been bought up so far on oil, so far. But we'll see what we get. As we know with oil, things can change so quick. The sentiment and the directional momentum that we get on oil can happen so fast. So we're going to continue to keep an eye on it, but we're down about $80 on that overall position today. But it's still going strong. We got Apple finally putting in a little bit more of a bid to the upside, as with the few more positions that we have on the portfolio here. But what we did in Apple was we had sold an out of the money call spread $5 wide, 36 days to expiration, just to get on a little bit of a short delta since Apple's been going on this absolute tear to the highs. So overall position is working out pretty well so far, but we are catching a bid, on the day so far for Apple. So we'll be patient. And then App 11, this one's finally coming through on the day. This was another one where we weren't necessarily trying to catch the falling knife, but the momentum to the downside couldn't be understated, right? We got a pretty large gap down post earnings. And then three consecutive days after that, we had lower lows put into this market. So today we're finally catching a bid. We're up like 2, almost 3% on the day, about 8.5 points on App 11. So we'll take it. Again, it's nice to be out of the hole on that one. And yesterday, whenever we logged another day to the downside when we were trading at around 306, I was so tempted. On getting on a little bit more long delta, but I was like, Errol, that's not a position that you want to be in if this market continues to slide to the downside the rest of this week. So I refrained from doing so, but the long delta is working out a little bit better today. Then we also sold an out of the money call spread on Microsoft. We had a lot of momentum in Microsoft post earnings to the upside, a large gap to the upside, and we pretty much just gap and continued to go. So hoping for a little bit of consolidation, just a relief from some of the momentum that we're seeing in Microsoft. That's essentially what we're betting on here. But we do still have 36 days to expiration, so we'll be patient on it. But what's going on, guys? What's going on, Brett? What's going on, eMedia? What's going on, Nice Boy? I hope the day's been pretty good for you so far. I haven't really done too much in this portfolio. These memory names seem to be back in business. Maybe we're back to chasing the momentum on memory names. And I guess it's going to be, at this point, it's going to be chase memory and chase the momentum names until proven otherwise, or until the momentum, is done, because it doesn't look like it's done anytime soon. I know Micron is up on the day. I was taking a look at SanDisk earlier today as well. And these are names, given the bid that we've seen over the last 12 hours, these are names that are starting to get more attractive to potentially get on some short delta. But what I'm really eyeing right now is the Micron position that we have on. You know what I mean? We have 8 days left to expiration. This position was working out pretty well, but as you guys know, as you get closer to expiration, you have a little bit more gamma risk. Not only that, right, that theta decay begins to pick up a little bit more. And both these contracts are sitting in the money because of the rally that we've seen over the last just 5-6 hours of the day. So that's something that I need to contemplate on a little bit more. SanDisk looks really attractive right now too. So does Intel. We'll circle back around to those, but it looks like those memory names still have momentum, but we'll circle back around to it. And then QQQ, we have an out of the money call spread on in QQQ. We had taken off the puts this morning because the overall market is catching a little bit more of a bid, but we do still have on some short delta, but we do have 8 days left to expiration on these ones as well. And then the king of the portfolio so far today is going to be Roblox. Roblox to go. We're finally catching a little bit of a bid there. Roblox was one of those pieces of technology. I'm going to call it a piece of technology because I know it's a video game, but there's so much other new tech that's layered into Like, for example, Roblox has something that makes me very bullish on any company is companies that have a community. I mean, if you're a company that has community around you, I think community drives everything. So when I see Roblox have an in-game economy with a ton of communities being built inside, and I think for you to be able to have an in-game economy, you need pockets of communities to do so. So that makes me really bullish on Roblox. The in-game economy, and then they have their own Robux, right? So whenever you kind of have your own currency that you could use inside this video game, I think it just creates a little bit more of a robust and sustainable economy. But for Roblox to even get to that point, I think that community aspect is so important. So I know Roblox has been absolutely drugged through the mud. This is something that I see doing really well long term. I know they IPO'd at around like 65. They've pretty much been chopped in half since IPO. They've had a lot of negative sentiment too, a lot of bad news coming out around, Chris Henson, I think is how you say his name, and some of the other, bad practices and behaviors, that goes on Roblox. But nonetheless, I think the underlying technology and the underlying company is really solid, and I only see it growing from here. But I did peep. I was doing a little bit more research on Roblox. They have a lot of video games on there that resemble like GTA, Rocket League. I mean, just think about some of the most popular video games. They probably have some type of mock-up of that game on Roblox, just in like Roblox form. I don't know how a lot of it is legal. I don't know how they've gotten away with so much. But the fact that there's developers that are also able to build inside this video game, it makes it really interesting. And I think it provides a lot of opportunity outside of the company themselves. So long story short, that's kind of my bullish case on Roblox. Not that I care too much about fundamentals, because fundamentals is such a small piece of our trading. Whenever we put on these trades, we just care about the probabilities. I'm just getting long Roblox right now is because they've been absolutely beaten down. So I'm a little bit more comfortable with getting on a little bit of long delta. I don't know. Maybe they go to $10. Maybe they go to $0. I don't know. But from what I've heard about Roblox, I'm excited to see how they continue to grow, because it was one of those companies that's kind of just been sliding under the radar very, very quietly. And then we sold a little bit of short delta. We got on a little bit of short delta on the semiconductors via the ETF SMH. And that's pretty much around break even right now. So we'll be patient on it. And then bonds. Bonds are finally giving us a bid. Bonds have continued to slide to the downside. I know typically whenever gold is going up, we kind of see that inverse correlation with the bonds a lot of the times. And I believe gold is taking a slight pullback here. Gold and the rest of the metals taking a little bit of a pullback on the day, which is giving a little bit more air to the upside on these bonds positions. So I'm happy about that. We did reach a high on bonds at around 83 flat. Now we're trading at about 82.5 right now. So, it was looking a little bit better earlier in the day. But with that being said, we're hoping to catch a little bit more upside here. Just kind of looking at what it was at August 7th. We had a ton of volume traded on these bonds on August 7th. I mean, a lot more volume than we had traded, I think, any other, except for the beginning of April, when I think the market was selling off very aggressively. That was one of the days we had more volume traded than any other day outside of April. But with that being said, that's going to be the portfolio today. I've been taking a look at the volatility index as well. I mean, they've been taking VIX to the slaughterhouse. I mean, VIX right now trading at 1470. Today trading at a low of 1440. So, I mean, they've been absolutely crushing volatility. So, I mean, if you've been a premium seller, these markets have been very conducive for your trading style. And it's going to be interesting to see if this trend continues. I don't know if things are going to get really quiet until midterms or until the fall season. I know things have been very anticlimactic, I guess you could say, so far this week, except for the insane breakout that we had seen on the overall market, more specifically the Qs and NASDAQ, because that tends to be a little bit more volatile. But if we go to the 1 minute chart here, you can kind of just see how price immediately took off from that initial dip we had this morning at 8:30 at around 29,907, down to a low of 29,864. And then we just immediately took off to the upside. I didn't get in. I was long biased this morning after seeing that dip get bought up, but I mean, there was really no opportunities to enter this long trade without chasing the momentum to the upside. So we didn't end up pulling the trigger on this one. If I go back over here to the micro NASDAQ market, you can kind of see we've been paying attention to this value area high a little bit more. So when I had seen us dip back into that value area high, I know we have a lot of VWAP traders as well. You could also use the VWAP as a level of confluence. I had peeped that this morning as well. So a lot of things were pointing bullish, right? And we were kind of looking at these swing highs that were put in this market over the last 7 days as well. So those would have been the levels we would have attacked. But sometimes the market just runs too fast, too far without you. I didn't want to chase anything to the upside. But in this market and the momentum that we've seen this morning, even chasing a move to the upside would have, in hindsight, still been a great entry because I didn't expect us to continue to run another, 200-300 points to the upside. But that's what we were doing over there. Just quickly, I know yesterday we were looking to take a little bit of shorts here and there, which we were looking to take off this level. So whenever we started to reclaim this value area high, is whenever our short bias, for the moment, disappeared. So with that being said, guys, we're going to go to a quick 30-second break. But we'll be back here in a quick second. So be sure to stay tuned. And we'll continue to break down these markets. We'll also take a look at these metals and this oil market here in a quick second. But stay tuned and we'll be right back.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's going on, guys? We're back with Risk and Reward again, part 2. We're going to continue to break down these markets for the next 15 minutes. And then coming up after this, we have a special guest, Rick Roll, coming up with Ilya. So they're going to be breaking down some markets, see what they've been keeping an eye on. But with that being said, we can go ahead and jump right back into this platform here. I know we had an insane rally this morning. Yeah, Rick Roll right there. Special guest, 11 o'clock Central Time, coming right around the corner. So be sure to stay tuned. I really love having special guests on. I know we didn't have too many special guests back in the day, but I do enjoy hearing multiple perspectives of things. Even if I don't share the same perspective, it is always interesting to see how other people think about the market in which we all view. So with that being said, we're finally getting a little bit of a pullback here on NASDAQ. Nice boy, I seen that you had mentioned Oklo in the chat. We'll take a quick look at that here in a quick second as well. And then also I had seen SanDisk mentioned in the chat as well. But yeah, a lot of these memory names capturing a bid. Today's a great day. If anybody was long any memory names over the last 2 weeks, I mean, today's a great day to be managing some positions, maybe taking some profit off of the table if you had a little bit of long delta in there. And we'll see how long this momentum continues. But with that being said, NASDAQ is finally giving us a little bit more of a pullback. I'm personally not going to be interested in NASDAQ until we can start trading at around 30,295. And I'm very particular about putting in certain trade ideas depending on where we're at in the market. So I know we didn't, necessarily reach there yet, but if we can get up there sometime today, maybe we do a little bit more here in NASDAQ. But with that being said, I want to check out Oklo. I know that's been mentioned quite a few times. I know they're gapping down on the day, trading at around 43.31 right now. It's looking like it's a little bit of a flat day. It's looking like, actually, I was on the 1 minute chart. There we go. We were gapping down on the 1 minute. That kind of, whenever you see gaps in a chart and you're on like an intraday chart, whenever you see those levels of gaps, that's how you know that product isn't the most liquid underlying, I guess you could say. But with that being said, Oklo trading at around 45.33 right now. I haven't looked at this options chain in quite some time, but I see they've been beaten down. Maybe a little bit more long deltas is beginning to be a little bit more attractive. The volatility has been a little, has been a little unched in here. It seems like, but this is one we definitely have to have a little bit more patience. Just looking at the options chain, I know that expected move is pretty small right now. About 85.5 implied volatility, plus or minus $7 right now in the September 18th cycle. So we'll check back around to that. I know it's a cheaper underlying as well. I know I really like to do zebras and underlyings that are a little bit cheaper. So we'll keep an eye on it. I want to take a quick look at gold today. I know gold has been pulling back a little bit more. Maybe this is an opportunity to catch a little bit more long delta to the upside. Again, my bias on these names are I don't believe that we're going to pass these euphoric highs. So it'll be nice to take advantage of some of the volatility. We traded around 5,000 on gold, 5,500. I think some short delta would be more attractive, but I like the pullback that we're seeing. Do we want to get on any long delta here? I don't know how comfortable I am getting on some long delta just yet on gold, but I'm going to check out SLV at the same time. Let's see what some of those premiums are going for right now. It's looking like the implied volatility in the September 18th cycle is about 46.5. Oklo has a higher implied volatility for the September cycle, which is interesting, right? Plus or minus about $6, 582 in SLV right now. I think this is another underlying that I've done plenty of zebras in because it is a little bit cheaper. The metals don't tend to move too fast. I say that tentatively just because, I know what happened earlier this year with the metals and the euphoria that we experienced on that side of things. So I'm going to be patient on the metals. I don't think I'm liking anything so far. It is interesting to still maybe take advantage of the long side. But I think I'm going to need a little bit of a deeper pullback to feel comfortable getting long in these markets. We're still kind of trading within the range that we've been trading in on Monday, Tuesday, and Wednesday. So this pullback, although it's lasting, a little bit longer than the other pullbacks we've seen in gold over the last week, we're pretty much, if we zoom out, we're pretty much still trading within the same range. So I'm going to be patient on that. But if you guys are riding this long delta on gold, hats off to you. But I did miss the boat on that one. Brett, you were trading farm or ARM. I don't think I've looked at that one in some time. ARM trading at around 280 right now. Nice. These ones are looking very similar to a lot of those memory names, kind of with that euphoric run and then that steep pullback on the backside of the move. But it's looking like IV rank of 43, traded about 2.9 million shares on the day so far. The expected move looks a little bit better, I would say, than Oklo on this one. But we'll circle back around to this one. Let me know, what are you doing in this one? You said you got the 300, 310 calendar call spread. Oh, it's mighty tempting. Hey, this is no financial advice, but I'd say just go ahead, send it through. Take advantage of some of this volatility that we have. Hey, the volatility is looking a lot better in ARM than it is in the overall market right now. But if you are just joining us, it's looking like oil is trying to rally a little bit more to the upside. Again, this is going to be one where we're not going to try and overstay our welcome, right? Look at NASDAQ pulling back here on us finally. I think TP was going to buy that NDX put spread. I hope he did because we're getting a pretty swift pullback to the downside right now, which is pretty nice. I think he said NASDAQ to zero. Like, I haven't heard Tim Knight say anything that bearish. NASDAQ to zero is crazy. But I would love to see a little bit of a pullback just for the time being. So I'm with you on that one, TP. Right now, oil trading around 82.5. Again, this is one where we are long right now, 74.33. We were debating on buying this dip earlier today. If we would have bought this dip, it would have brought our average cost down to about this would be about 80. We bought 74. So this would have brought our average cost down to around 77. But because we're in this one for the long haul and I didn't want to get shaken out of this position, just in case we got another pullback is the reason why, we didn't add into that dip. But we're just going to continue to hold this one a little bit longer. But 84.5, whenever we can make a new high, we're going to be out of this position here. If we do pull all the way back down let's go ahead and extend this now. Because if we were to pull all the way back down, kind of near this value area high once again, then we would be looking to manage this trade. This isn't going to be something that we're going to take a loss on, right? At first, we did have a stop in at these lows, but since the market has given us a little bit more room to the upside, we're going to make sure that we're locking in a profit on this trade. We just don't want that pullback to be deep enough to where we then do get stopped out of our trade, right? We'll still be able to make a couple $100, maybe $200-$300 if we pull all the way back, to 76, 77. I'd be about $200 to $300 win on that one. But again, buying that dip would have pulled up that average cost a little bit more, and we'd have to manage the trade in a more aggressive manner. So we wanted to give this one a little bit more room to run, a little bit more room to breathe, so that we can afford some of those pullbacks in the market for more potential upside. So that's going to be the game plan on micro crude oil. Another thing that I was debating on whenever we were selling off down to these lows, I was like, maybe we can then maybe buy an out of the money call on USO. We could also maybe even sell an out of the money put spread on USO, but those questions are pretty much out the window now. As you can see, that window of opportunity to think about how you might want to add to your trade or manage your trade sometimes comes and goes very quickly because these pullbacks in oil haven't lasted very long. So whenever we're going back and forth on a decision whether to add or not, sometimes it's not going to give you much room to think about what you might want to do. So anyways, with that being said, I'm going to zoom out a little bit more here just to give a little bit of a broader picture on what we've been looking at. Whoops. Don't mind me. Over here. That 84.5, 85 level is going to be the price point that has traded the most trading activity so far, which is going to be known as the point of control on the volume profile. And since we've traded a little bit longer, I'm going to go ahead and adjust this all the way over here. Now we can get a better idea on the parameters from this volume profile. It's looking like we just dipped below the point of control on this volume profile here. I'll take this one off. It gets a little confusing sometimes. But it's looking like we just dipped below, that volume, that point of control on oil. And now it looks like we're rebidding back above it. So that holds the bullish case that we have on micro crude oil, but that's going to be the position that we're going to be keeping an eye on. That's hedging a lot of the other trades that we have on in the portfolio right now as well. So we'll be patient. Having a pretty good cost basis on this one really allows us to be calm and patient and think with a clear mind whenever we do get those pretty aggressive pullbacks because, these aren't very comfortable to sit through. Whenever we're trading from, 84.5 all the way down to a low of 80, I mean, that's just in less than 12, 24 hours. We're moving 3 to 4 points on oil that quickly, right? And it had taken us about 7 days just to get to this point. So things can change really quickly. We'll keep an eye on it. We will keep an eye on it. Yeah, Tim Knight, the man. Yeah, if Tim Knight wants to come through and help us catch a little bit more of a pullback, that'd be great. I would appreciate it. I do have a little bit of short delta on still in some of these positions. So I'm not the bearer of bad news, like Tim Knight and, TP. Everybody got the cool names. We got TK, we got Tim, we got TP, we got TK. If your name starts with a T, your default is bearish. I think that's what it needs to be. But I mean, I'm pretty bearish as well right now. I'm hoping we get a little bit of a pullback. It's looking like SPY was making another all-time high today as well. That wick at the top end of that candle, I'm on the daily chart right now, is pretty distinct, showing us that we're getting a pretty decent pullback from the all-time high. But I don't know. Just looking at the daily chart on Qs, we're not that far off of the all-time high. All-time highs on the Qs is sitting at around, what is that? Sitting at around, 748.58. Right now we're trading at 730. So, I mean, insane bear trap, right? I mean, not too long ago, we're trading at around 659. And just as a little of 7 to 14 days, we're almost back at all-time highs. So we'll keep an eye on it. We'll manage these positions best to our abilities. Shout out to oil for saving the portfolio right now as we speak, and then Roblox coming in clutch. Actually, I think we're going to do something in Roblox real quick. We're going to reduce this cost basis a little bit more. Maybe we sell one of these calls, do a little bit of like a poor man's covered call. It's nice that we're up on the zebra, but just in case we get a pullback, because we haven't seen any sustained momentum in Roblox. Like today we're up 36 points, which is really nice. But I want to sell an out of the money call spread here at the same time. Maybe we could even do, could could even do, what does the 8 days give us? Puts. Could do. Maybe we'd be a little bit patient on selling this call. We could definitely do so. I mean, we could sell the 38 call, collect 53 cents worth of credit. It is a smaller position that we have on right now. Roblox is what, a $36 stock? There's a couple options we could do. I mean, 37.5, we could sell that for 68 cents. Where are we right now? We're trading 36.14. I mean, if we sold something, above this range that we're trading, anything above 40 wouldn't be too bad. Just because I doubt, unless there's some type of news that comes out on Roblox, I doubt we get a leg to the upside. But I mean, we could. But then again, we have the zebra there as well to take advantage of that just in case. We'll see what we can send through here. Actually, you know what? I think we're going to go with, I think we go a little bit further out as we come to a close here. I think we potentially look at, we're not collecting enough credit. We'll be patient on the Roblox trade, but I do want to sell some calls against this synthetic stock position, reduce that cost basis a little bit more, especially on a name like Roblox. But with that being said, guys, we do have a special guest coming on next. We have Rick Rule waiting on the other side of this quick break that we have coming. So we got Ilya and Rick going to chop it up for a little bit, check out what he's been looking at in the market, get his perspective on things. But with that being said, as always, Nice Boy, Big Deal, Jared, Brett, Media, everybody else, thanks for taking the time to hang out with us here. Be sure to stay tuned for more amazing content coming on next. We'll catch you guys here in a second.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Step into the futures arena with Tasty Trade's Active Trader. multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolios decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put in to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
It's time to trade smart, post PDT rule elimination. Now, traders of all account sizes have more flexibility than ever before. With rapid order entry and bracket orders that let traders manage entry, profit target, and stop loss, all in one ticket. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Okay, now I do.
Welcome back to Tasty Live. I'm Ilya Spivak, head of Global Macro here at Tasty Live with the great and powerful Rick Rule back with us. He's the CEO of Rule Investment Media and has only been a resource investor for just about 52 years. He's probably forgotten more about these resource markets than most people will ever know. And so I have a whole bevy of questions for you today, Rick, because this gold market has got to start explaining itself. One of the most interesting things, and I wanted to sort of pick your brain about market mechanics here, because there are a few people that know them as you do. Since the beginning of July, we have had this massive rise in real interest rates. Not even nominal. Let's just leave that aside for a second. A huge jump in real inflation adjusted rates, and gold will not sell off. It spent that entire time going sideways. Now, normally that would be, under past circumstances, kryptonite for precious metals. How are they holding up, and what are they saying?
I suspect there's two reasons for that. The first is you rightly compare real with nominal interest rates. And I think people around the world are beginning to understand that the pace of the underlying deterioration of the US dollar is greater than that which is explained away in official sectors. Most people's perception of inflation is based on the CPI, which Mike Maloney famously calls the CP lie. If you believe in the CPI stated rate of inflation, you believe that the purchasing power of your currency is declining at 2.6 or 2.7% per annum compounded. But that's fallacious, and people are coming to see that expressed in the way they live. Gasoline prices, food prices, health insurance. I think a more accurate view of the deterioration of the purchasing power of the US dollar is closer to 8 or 10%. Viewed through that lens, making 5.5% on a US 10-year treasury isn't making 5.5. It's losing 3.5 or 4.5. And people around the world are coming to understand that. The second thing is that people around the world are coming to trust the United States as an entity and as a creditor, as a debtor, less. Whether or not you agree with Russia's action in the Ukraine, the fact that the United States stole $300 billion worth of Russian assets in the form of U.S. treasuries sent a message, a warning shot across the bow of every nation on earth that might run afoul of the U.S., which is, of course, every nation on earth. And so we have forced foreign central banks out of their asset of choice, which was U.S. Treasuries, which earn a yield, into their second choice asset, which is to say gold, which has no yield, but also has no counterparty risk. So I think those are the two reasons, put very bluntly. Continuing and deteriorating lack of trust in U.S. society as a debtor, and the continuing and increasing unattractiveness of the U.S. dollar as a store of value as a consequence of the continued and underappreciated deterioration in the purchasing power of that U.S. dollar.
Okay, so let's try to understand then why the timing has worked out the way it has, because we started to see this run up in real yields, let's say in April, early to mid-April. We really had the turn up in real yields that seemed to kind of line up with the big AI capex companies telling us they're going to dump $750 billion onto a sector that's already growing at a double-digit pace. I can't possibly imagine what could go wrong with an inflation story there. And so you get this big run-up in real yields from about April, and gold does, in an orderly fashion, as does silver, decline with that until in July something stops and changes. Is there a catalyst that you see there? And does that then portend that the gold market is trying to say, okay, I'm done listening to this, I'm just going higher now?
I think, and understand, I wouldn't describe myself as an intelligent Fed watcher, but I think the increasing gap in real yields between the short-term rate and the long-term rate suggests that the rising long-term rate has a lot to do with the Fed losing its grip on long-term rates. The market is reassessing its grip. So the increase in long-term rates, I think, is increasing for precisely the same reason that the gold quote has. The long bond was overbought and became sold as a consequence of the deterioration of the purchasing power of the U.S. dollar. Investors want more compensation for tying their wealth up in a depreciating asset class. I think the reason that the long bond yield and the reason that the gold price belatedly has begun to increase again are the same. And people view gold separately. People who began to be interested in gold 2 years ago or 3 years ago don't believe that gold is up from 44 to 45. They believe it's down from 55 to 45. It really depends on the perspective that you have, the length of time that you've held the gold, and why you hold it. I'm in a third class. I've been saving in gold personally since the year 2000. And for me, gold has really, 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 truly done its job. When people talk to me about the fact that the gold price is down, I say, down from 260 to 400 to 4,500 doesn't feel like down to me, but keep it going. So I think the answer to your question really depends on your perspective.
As far as sort of looking at the more kind of immediate dynamics, then we've gotten a couple softer inflation reports this week. If we look at Fed policy expectations, rate hike bets are starting to fade away. And it sounds like what we're saying here is that what gold has caught on to once again, because it's not like gold didn't have a massive rally around these very dynamics last year. It's had a bit of a hangover this year with first the inflationary impetus from the Iran war, or so the markets thought, and now sort of this new emerging dynamic, but it seems to be re-engaging with kind of where it was last year, at least thematically. And it sounds like what we're saying is that this is essentially a sovereign risk, that essentially real rates are going up because the market is saying the U.S. sovereign is not as credible. Therefore, as a college student trying to buy a Mercedes, it must pay higher rates than a Fortune 500 CEO buying the same Mercedes because it is a greater risk to the lender. So if that's what we're saying, basically, then are stock markets just asleep? Because if the U.S. sovereign is in fact a risk in this environment, well, the entire architecture of the global financial system is at risk too.
I'm less confident talking about the stock market. I don't view the market myself as a subject. I view it as a facility, a place where one buys and sells fractional ownership of businesses. And my reticence is that outside of conventional financial services and natural resources, I don't know how to value those businesses. I can tell you the price of NVIDIA, but I can barely pronounce it. And I have no idea what it's worth. So when people tell me that the U.S. stock market is systematically overvalued, I don't know how to validate or invalidate that statement because I don't know how to value the tech sector or the consumer staple sector, or the consumer durable sector. I only know how to value the financial services sector and the natural resource sector. In the sectors of the market that I follow, the market is not overvalued. Those businesses, at least in financial services, the small cap and mid cap names are not overpriced relative to their ability to generate cash. So I understand your question perfectly, and I think it's one that people should ask themselves. Unfortunately, outside of my two little investment ghettos, I don't know how to answer it.
Let's ask the question from a Fed and from a resource perspective and say, if Fed policy odds are indeed starting to shift again, and if the market is starting to question whether, in fact, we are going to get these rate hikes, are we watching a pivot in both gold and silver? I mean, you've sort of loudly shifted from a kind of speculative bet on silver as a metal to silver stocks and miners as a different expression. Does this tell you it's time to rethink that and once again start to look at the underlying metal itself, even just as a speculative construction? Are we back to the precious metals rally as a theme?
I don't know. I save in gold. I also maintain liquidity in currencies, but I save in gold. So for me, gold and silver are very different asset classes. Silver is a speculative asset class. And silver, relative to other classes of speculation, remain unattractive to me. Silver is not hated. I own silver because it was hated. There are some recent buyers who are disgusted with it, but they don't hate it. They're still in the hope phase. And I only buy speculations in the despair or hate phase. And we aren't close to there in silver yet. I buy gold not to make money, but to avoid losing purchasing power. And I'm a systematic saver, almost irrespective of price. To me, it's liquidity, insurance, and wealth, all rolled into one. Going back to your initial question, the Fed, I think you need to look at the political realities of America. I think that the Fed chair, and I should say, by the way, I'm in the banking business, so I deal with lower level members of the Fed all the time. And I think the bias within the population of the Fed itself is that interest rates are artificially low. That if interest rates were set by the market rather than by the Fed, they would be 300 or 400 basis points higher than they are today. And I think there's a bias in the Fed to allow the market to begin to reassert control over interest rates. We saw that happen. Old people like me saw that happen in the middle of the decade of the 70s in 1975. In 1975, there was a temporary bias on behalf of the American voters that inflation was a problem and had to be solved. And interest rates were allowed to rise in 1975. And that cratered the gold price, cut it in half. But it didn't just crater the gold price, it cratered the Dow. It cratered the long bond market. It cratered the auto market. It cratered the housing market. And the U.S. voter, and hence U.S. Congress, lost their nerve. By the end of 1975, forced the interest rate down. That told savers in the United States and around the world that American politics were more important to Americans than the sanctity of the U.S. dollar. And when they forced the interest rate down at the end of 1975, gold went on a real tear, went from $100 an ounce to $850 an ounce in 5 short years. And I think in that regard, past is likely prologue. If the bias of the Fed employees, let me rephrase that, if the American voters allow the Fed to allow the market to set long interest rates will be higher. Gold denominated in US dollars will go lower, both because the numerator increases, but also because the cost of owning gold goes up. But gold won't be the only thing that's hit. The 30-year mortgage will be hit, which means that residential real estate will be hit. Auto sales, because autos are financed, will be hit. The stock market will be hit by the income differentials between the long bond and the Dow dividend rate. And if past is prologue, Americans will not allow their near-term living standards to be compromised by the desire for the integrity of the dollar. And the consequence of that is that the political class will force down interest rates. And if that happens, I suspect gold will explode. Higher, by the way.
Yes. I think there's an interesting then question that arises. Ostensibly, there is a tension, and this is sort of going back to where we started this conversation with the market yanking up real rates. There is a tension between what the market says, which is that rates need to be higher and in real terms, and, well, certainly what we're hearing from the administration, and certainly sort of in this analysis, what the American consumer is going to tolerate, what households are prepared to weather. So if that's sort of where we find ourselves, in cases outside of the U.S., it would be pretty easy to say, well, the market wins because the market tends to win and force these things. And we talk about bond vigilantes for that reason. In the U.S., is that still the case, or does the U.S. get away with it because central bank reserves this way or that way? 90% of global monetary transactions are settled in dollars. There's nothing else even remotely as liquid for fueling the global economy. So there's not a big constituency for a dollar collapse because then global trade stops. Does the U.S. get to skate on this?
For much longer than many people believe, yeah. My friend Doug Casey says the U.S. dollar is the worst currency in the world with the sole exception of all the rest of them. And I believe that to be the case.
Yeah, that he does.
He also says that the dollar's an I owe you nothing, while the euro is a who owes you nothing, given that there's 17 or 18 countries allegedly backing the euro. And I think those are good points. The U.S. Treasury market, for all its faults, is the deepest and most liquid and most transparent market in the world. There's no market that is anywhere near as liquid or anywhere near as transparent, which is really, really, really important. It's taken a lot of skill to ruin the U.S. dollar franchise. When people talk about how stupid government officials are, I point to them being able to wreck the best franchise in human history. They're very skilled in a very negative sense. And I think the debasement continues. And I think the U.S. dollar supremacy continues too. I think that the U.S. dollar will lose its market share as a store of value and a medium of exchange. But I believe, I'm 73 years of age and very healthy, I believe that for the balance of my lifetime that the U.S. dollar will still be the world's reserve currency. I just believe its market share will fall. The fact that it remains the world's reserve currency, does not mean that it should constitute the cornerstone of my savings. I personally will continue to save in gold. I think it's also important that your listeners need to understand the context of your description of real yields. Because I don't believe, to me, a real yield is a positive yield in excess of the rate of deterioration of the dollar. When you suggest that real yields are outpacing nominal yields, you're correct. But in a historic sense, a real yield is a yield in excess of the rate of deterioration of the US dollar. I would argue that if your listeners constructed, not like the CPI, but a basket of goods and services that their families really acquire, and they compare the price levels that existed in 2020 with the price levels that exist in 2026, that they would determine that their savings and their salaries, the value, the purchasing power of their currency is declining at 8 or 10% compounded, not 2.5 or 2.6. Now, there's an interesting paradigm there. If the market actually did set interest rates, if, as an example, the yield on the primary savings asset in the world, the U.S. Treasury, was positive, if you assume, just for arithmetic's sake, that the rate of deterioration of the U.S. dollar is at 10% compounded, in order to have a traditional real yield, you would need the U.S. 10-year Treasury to be yielding something like 11.2 or 11.5. If that happened, the 30-year mortgage would likely be at 12.5. And that would have real impacts in the near term on the U.S. economy.
In a pitchforks and torches kind of way.
Yeah, so it's the way I solve the paradox for myself is to understand that it's very likely that most Americans don't care about real yields, that most Americans are absolutely delighted to maintain their current living standards at the expense of their children and grandchildren, which is what debasing the currency is all about. It's also, by the way, what entitlement's about, what government spending is about. It's really about people today stealing from their children and grandchildren, something that people are delighted to do. And likely that continues. My job then, for myself and for the people I talk to, is to defend themselves from their own capriciousness, to save in a medium of exchange that's simultaneously a store of value, so that the theft that they practice against their children and grandchildren is less egregious, because they'll hopefully be able to leave them gold or other assets that maintain their real purchasing power. Sorry, I just wanted to get into the discussion of real interest rates, because when people from the credit community, folks, green eye shade folks like me, credit analysts, talk about real yields, they're talking about yields in excess of the real rate of inflation, and that's very different than the way credit markets today talk about yields.
Well, indeed. If you think inflation is running at about 8 to 10%, it's a very different thing, as you've pointed out, than inflation running where we saw it this week, even at the core, 2.5%. Obviously, it's a different story entirely.
Note that core inflation doesn't include food or fuel. If my camera had a full body shot, you would learn that any measure of inflation that didn't include lunch was of no interest to me. You will note, too, that CPI doesn't include tax. Now, Ilya, I assure you that if I didn't have to pay the tax, I wouldn't bitch about the index. But the truth is I eat, I drive, and I pay tax. And I think that the CPI is a completely artificial construct. And I think that one of the greatest errors that American savers make is thinking that the CPI is anything other than an instrument of deception. As you can tell, I feel fairly strongly about this. Anecdotally, I began saving in gold systematically in 2000, and I maintain an informal ledger of my purchasing power and the prices of things in gold. If you do that, you are struck by how cheap stuff is. You're struck by how cheap housing is. You're struck by how cheap energy is. You're struck by how cheap food is. If you conduct this thought exercise, tracking the price levels in dollars relative to the price levels of gold, what you will learn is that the price level of things, which has become a political issue, is illusory. It isn't that food prices gone up. It's that the purchasing power of the U.S. dollar has gone down. And it's a truism, too, that wages for people who don't have the correct type of education to apply capital have been stuck, while skills-based wages have increased. But it's important to note that what is regarded by many as a structural flaw in the economy is really a measure of the deterioration of the purchasing power of the dollar, the real deterioration of the purchasing power of the dollar, relative to the ascribed rate of inflation measured by the CPI.
Ladies and gentlemen, Rick Rule. There's a lot for us to chew on there, Rick. It's excellent context, as always. We'd love to have you back as ever. We appreciate it. Rick Rule, everybody, CEO of Rule Investment Media. Go check out his content and his offerings everywhere they're at. Thank you very much.
Thank you. I'd like to invite your audience to access that in a way that's of use to them. Anyone who cares about my thoughts on natural resources can personalize it. Go to Rule Investment Media, list the natural resource stocks that you own, and I will personally, for free, rank them. Rank them 1 to 10, 1 best, 10 worst. I'll comment on individual companies if I think my comments might have value. List your natural resource stocks at Rule Investment Media. Please, no crypto. Please, no tech stocks. Please, no pot stocks. Leave an old guy to do what he does well. RuleInvestmentMedia.com.
There you have it, folks.
What's going on, everybody? Welcome to Trade of the Day. This is an unexpected surprise, honestly, to see the markets moving the way that they have, very differently than the last couple of trading sessions, but not unsuspecting that we're breaking out to highs. This is the way that I thought it would go down. Just didn't expect it today on the heel of CPI and PPI. I mean, I'm not going to lie. I did expect the market to go higher. I just didn't expect us to see a 60 handle like we did this morning, and I played for it, actually. I did a Super Bull to the upside. I believe that was yesterday's trade of the day. And now I'm deciding what's next. I was thinking last night, what do I want to do for a trade of the day? I mean, this is an environment where VIX is fairly low. As a matter of fact, let me show it to you. Let's take a look here when we can see VIX term structure. This is something that we talk about all the time. Here it is in plain view for those who don't look at this that often. You can see, can we make sure, can we get it all on the, you can even get rid of me for now. Yeah, that'll work. So this is the VIX term structure, right? For those who aren't aware of this, this is basically, all futures products have a term structure. You have one future, right now the current front month is August. This expires on the 18th, which is next week, next Wednesday. VIX futures always expire on a Wednesday. The options stop trading. The last time to trade them is Tuesday up until the close. And then the following Wednesday, they expire. And those options can move based on where it expires. What do I mean? Say you're long, say right now, this current VIX, like we said, this August VIX is trading 16, right? And so say you are long the 18 call and say it's out of the money, right? And then say come next Tuesday, it's still out of the money and VIX is trading at 17. But say some crazy thing happens overnight and volatility goes up. And in the morning, that VIX future, this current one that's trading 16, is trading 18.50. All of a sudden, your 18 call is 50 cents in the money. So that can actually happen. That happens on the regular. It happens in the other way too, right? You could be in the money and fall out of the money, but there's nothing you could do about it because, again, it stops trading on Tuesday at the close. So always be aware of that. I like to point that out. But when you see this type of term structure, what we see, this is what we call contango. This is what VIX term structure looks like in a calm environment. And look at the difference. literally almost $2, basically $2.05 difference between this month and September, which is trading 1810. And then there's October, which is 1950. And so each month gets higher as it goes out. Why? Because we have no idea what it looks like 6 months out, 3 months out. We have no idea if there's going to be volatility. And so this is just the baseline. But when you see this calm environment, this is what you would expect when we just don't have much going on in the stock market. And then I look, today's heat map, you're seeing right here, this is for the one-day performance. You're seeing a lot of tech names, of course, but not anything majorly green outside of Cisco, right? And then I look across the 1 month, mostly green, right? Some reds due to earnings, right? A few names in earnings, Google and Tesla and Meta and Apple struggled in earnings. When I look, let's just go straight to year to date. I mean, this is the year to date and things are mostly green as they should be. And again, all-time highs, it's not necessarily a reason to get short, but from here, while I do have on, and you can see in the portfolio, I do have on plays that are winning today. I do have on this Micron call butterfly that's winning the day. I have on Netflix, which is working out well. Seems like that's bottoming and they're buying that. Markets are at basically all-time highs, right? A few other plays. Tesla's one that I put on yesterday, a super bull in there because of that stock has been down majority of the year. Costco has been a play I've been in and out, but these are mostly my long delta plays. You can see that are winning today. I don't really have many short vol plays left, if any. As a matter of fact, you can see in my extrinsic, my extrinsic is negative because I'm mostly long a lot of things that are long in October, maybe short upside in September now. It's what I've structured the book. I'm actually paying theta at this point. And a lot of that has to do with $400 in this Micron position, but I am probably at least paying $200 a night. I would say $250 a night at this point in time. So I am long because, again, the VIX, we just looked at the term structure. The VIX itself is under 15. And so I am long, but mostly long deltas. I needed to look for some plays to give me some short deltas. And then we get to our trade of the day. I decided to go directly to SPY, which is low IVR right now, 22 IVR, cheaper. Protection to the downside has never been cheaper. Maybe one or two other times in my career, but it's pretty cheap right now. And so I decided to do a diagonal. I actually did two of them, but I'm only going to talk about one of them right now. I did the long 770 is the first one I did. I did long 770 put in October, and I did the short 755. So $15 wide diagonal spread here. And again, just let's look at the one of them. So I know people were asking about the idea of diagonal spreads recently and when you choose to do them and why. Well, if I want to do some downside exposure in SPY, I just feel like one of the ways to do it is, the easiest way to do it is either outright buying puts or put spreads, which I don't necessarily want to do, or like, again, doing this diagonal situation. $700 is a fairly high dollar name, right? So, buying puts in here at a good strike that actually makes sense is not necessarily easy to do, but you can do a diagonal and offset your cost basis in that manner. And so, again, this works well if you go to the downside. We did the 755. So right now being here, we'll get some Theo P&L on this, right? I mean, if the stock continues to if the ETF drifts lower, we'll get some Theo P&L. It's a $15 wide. I paid $8. And what did I pay for this thing? I paid $8.35, right? So the most I can make is $6.65. That would be at expiration. The way I would probably imagine this going is if, one, just looking at my strikes, 770 is like 1% out of the money from where we are right now. And if we were at 777 around it. So let's just say that's a 1% move to the downside. And then 755 is more like about a 4% move to the downside. So playing for a 1 to 4% correction, right? Like nothing crazy in this time frame. And that's kind of how I could see this playing out if this happens prior to September expiration. More than likely, I'm going to hold this for the next 20 days or so, I would say, when I think about how expirations go. And across that time period, I would say we get obviously NVIDIA earnings that are coming up. We get the Jackson Hole meeting, which could potentially lead to some talk about rates, which has been one of the things that has moved markets recently. So $15 wide diagonal. Again, I decided to do two of them because I wanted I knew that the most I might make on this is maybe $300. So if I get another one, I could possibly get to that $600 type of move. And if not, the most that I lose is what I paid for it. And so this allows me to continue to put on a few long delta plays as well, so that when the market does go up on those days, I'm making money on that, knowing while I potentially lose on this. So, if the way I'm looking at it is, again, 770 is 1% out of the money. It's 1% away to the downside from where we are right now. 755 is about 4% away to the downside from where we are right now. And so a lot of this is, will be based on theoretical P&L as far as like the moves. I could probably see myself making $200 to $300 on this if we move. But again, remember, a lot of times when we move to the downside, unless it's a major correction, a lot of times we see moves to the downside and then we bounce back, right? And so that's why a lot of times I'm not looking to buy puts or buy outright put spreads, because you can just watch your premium just erode. But in this situation, I'm offsetting that cost basis with a near-term out-of-the-money put, which works out just as well. And I also probably just hold this. A lot of times people will, as far as management, I'm fine losing. I picked the amount of premium on purpose. I mean, it's $800, and again, total $1,700 overall between the two spreads. But let's just think about the one. It's $835. So I'll be paying attention to this slowly over time. If it bleeds, it's not costing me too much in my portfolio because I do have other long deltas. So it's a small little downside play. Again, looking for a 1 to 4% correction to the downside. So that's my play. SPY, put diagonal, getting some short deltas in the book. That's my trade of the day. Now I'm going to send you over to Mike for his trade of the day.
What's up, everyone? Welcome back. We got another trade of the day for you. And this one I went outside of the normal tech space, normal tech stocks that I'm trading, or an earnings trade for that matter. I already have an earnings trade on in AMAT, which is reporting after the close today. 600 strike calendar spread. It's rallying up into that range, which you love to see. But it's basically a scratch right now, and that's to be expected. This short option has lost a lot of value, but the long option has lost some value too. With a vol crush, like that's the only explanation for losses in the short, losses in the longs. Pre-earnings report, got to be a vol crush, especially into a rally towards these strikes where you would expect to see the short option gaining value and the long option gaining value, which is happening today. But overall, seeing a neutral result here until the announcement after the close, in which case tomorrow we get all of that $600 premium out of the short option. And if we continue to rally towards that 600 strike, we're going to be looking good with the current price at 550 and the 600 strike right at the expected move. Could be a huge win if we get that move tomorrow, but we shall see. So I went to GLD for this trade of the day, and GLD is a gold ETF ultimately, but I don't have any exposure as of right now. I did have exposure into this initial run-up. I had a call diagonal spread, the 383.90, and took a little bit more risk here with an $8 debit, sold out for a $10.75 credit for a $200 net gain, and that was just about a week ago to the day, actually. So GLD, looking at getting back in here, and I wanted some more long-term exposure. This is one of those products where you've got a 28 IV rank, you've got low implied volatility, 24% implied volatility, super low for any product. So I wanted to go the debit route. So went out to October, and I looked at the current price sitting right around 400, nice round number. We know that these round numbers have tons of liquidity, tons of open interest, 15K open interest on this strike, 58 on the next strike. So obviously we're going to the 400 strike, not the 401 or the 399. We're going to where the liquidity is, and that's kind of where we want to live. So I bought the call out in October, and then I sold a crab component to turn this into a crab trade. So call ratio is basically what this is, or a call ratio butterfly. That's where the crab acronym gets its name. And sold two of those 420 calls right at the expected move. So that's 20 points wide. And then I bought the 440 strike, and that is to define the risk to the upside. So a crab trade is nothing more than a butterfly where your long option is pushed out in time. I talk about the fundamentals of options and understanding the fundamentals. Every combination of trading options is just a long put, long call, short put, or short call. So if you understand those four and how they would act and behave in different volatility environments, And based on their extrinsic value or intrinsic value makeup, you can arrive at these more complex trades and understand them more easily if you break down every position in isolation. So crab trade to the upside, again, nothing more than a butterfly, equidistant butterfly, but you're pushing the long option further out in time to get into this lower vol environment relative to time. You can see a 30-point implied move in the 64-day cycle, a 21-point implied move in the 36-day cycle. So we got about 2/3 of the implied move in September relative to August, but twice the amount of time. So we're getting into lower vol territory in the October option that I bought, and we're in the higher IV territory with the 2 shorts that I sold, and then the protective long at 440. So if we look at this from a curve analysis standpoint, we can see that we've got ourselves a nice window of opportunity, especially from a theoretical standpoint. At expiration, this looks a lot like a butterfly, as you can see here, but we're looking at Theo because my long option is going to have 30 some odd days before expiration before we get to the short options expirations. So right now, you can see the profit potential isn't too crazy. This is based on today, and if we were to get a rally in gold up towards this 420 strike. And the reason for this is just because I've got 2 short options that would counteract the gains in the long option. I really need to get closer to expiration at this 420 strike and September 18th before we start to see some real profitability, because this long option is worth $1,600 by itself, but with the crab component here, we've reduced basis down to $8.80. So we've cut the cost basis in half, but that comes at the mercy of rapidly increasing 2 short options against the long if we get the rally in the near term. But if we kick this out to the end of the month, for example, you can start to see this profit tent go significantly higher. August 31st, now we're looking at a much better situation. This assumes we get a ton of value out of the 420 strike in the 36-day that I have 2 shorts on. And then this also assumes that I'm still holding on to extrinsic value, gaining some intrinsic value on the way up. If we get a rally in gold with the 64-day cycle, of course, having way more time than the 36-day cycle, it's going to hold on to extrinsic value nicely. So if we're at the end of the month and we keep implied volatility the same, I don't think we need to crush implied volatility or change it too much, because I don't see a world where GLD goes below 20%. And I don't know that GLD's implied volatility would really increase all that much without a downside move to be realistic. Or if we just chop around here or slightly move higher, I don't think volatility is really going to change all that much either. We might get a crush down to like 23%, 22%. But at the end of the day, if we crush the short options and we crush the long options, it's going to be a similar result here. So just leaving these the same and looking at this holistically, the closer we get to expirations in the short options, 36 days out, the better this risk graph is going to look. So if we keep kicking this towards the middle of September, you can start to see we start to pick up a lot more premium. And then if we go to the 18th, that's really where this thing picks up and we get much closer to this expiration graph. You might be wondering, why is this Theo graph a greater visual than this expiration graph? Well, the expiration graph assumes that we're looking at everything at the expiration that's 36 days out. The reality is the 400 strike call, even if we're at 420 or above it, the 400 strike call is still going to have a couple of $100 of extrinsic value, which is why this theoretical graph actually exceeds the expiration graph as if we were looking exclusively at the September 18th cycle. So keeping all that in mind, I'm looking for, just evaluating at, let's call it the end of this month, $300 or so if we get a nice rally in gold. Great return on debit paid, $800 turning into $1,200 or so. That would result in a $300 gain there. And again, that's a nice return on debit paid, and it's a low debit cost here relative to the naked option of $1,600. And we still have this nice range to be successful here. The nice thing about utilizing a crab trade in a product like GLD2 is that it's going to be rare for you to have a gap up in GLD. You can see a crab trade, just like a butterfly, has risk on both sides of the market here. So I need to avoid a gap from 400 to 435. I doubt we would get any kind of crazy gap like that in gold. It's not an equity that has random announcements, CEOs stepping down, earnings announcements, those kinds of things. So I like placing these risk on both sides trades, like a calendar spread or a crab trade, in products that I expect to have less gap risk. And GLD is certainly one of those products. If we get a rally to or through 420, we can close it before we get the risk on the upside here. So that is ultimately where I'm looking for GLD. I think if the market sells off, the nice thing about this strategy is that I've already reduced cost basis dramatically. So I think that's something that we need to harp on more. Similar to Cisco systems, my calendar spreads that are losing money today into this big sell-off, the 130 and 135 calendar spreads, these long options I purchased for almost $1,000, but my net debit paid overall is only $395, and that's because I sold these options against it. So I don't need to sell anything additional against it. And really, these options are trading for less than $1 out in September right now. So there's nothing to sell against them anyways. But a lot of times we'll just be left with long options, and it's very possible that Cisco erases this move in the next couple of days, next couple of weeks, and these long options really appreciate in value, and this current loser turns into a winner. So already reduced cost basis in GLD with this crab trade. However, because I've got a 400 strike call and my short options currently are at 420, and I have a debit risk of $8.80 or so, I know that I can move these short options and get rid of this long option. I can move it down to a traditional diagonal spread. So if GLD sells off and we get closer to 390 or 380, and I start to see gains on the 420 strike short call, and from this view, it would be really looking like this. Like, I would keep my eye on this premium. There's $900 of premium, almost $1,000 of premium that I collected in the two short calls. If this gets down to like $2 or $1, it's not really helping me anymore, right? It's just an option that I sold. I've captured 90% of the value or 80% of the value of those two options, and it's time to make an adjustment. So if that comes to fruition, I can close this component, just go to close full from this tab, buy back the two 420s, sell out of the 440, and then because I know that I've got a $8 debit, I could move this down in September from the 420 down to the 410. I could do something like this, where I sell the 410, get rid of these options. This might be trading for, let's call it $2 or $3, something like that. Or if I really wanted to, I could move it down to the 408. This would get me to a 400 long call in October, a 408 short call in September, and I would certainly pick up some value here, and I would bring my cost basis that's currently $8 and change below $8. So I would get to an 8-point wide diagonal spread in GLD, and I'd have a debit paid or max risk of less than $800, resulting in no risk to the upside. So that would be the defensive mechanic. If we get a sell-off in GLD, is just keeping my eye on these two short options at the 420 strike. If these start trading for $1 or less, I'll probably just buy them back and make that adjustment, get rid of the crab trade, go to a traditional diagonal. I can move the 420 strike down to the 410 or even the 408 if there's still enough premium for me to capture a good cost basis reduction. But that's ultimately the defensive move here. Reducing basis up front, cutting that basis in half. The net debit paid on this trade was $8 and change. This option is currently trading for twice that value. So I've got plenty of defensive mechanics here. I can move that 420 short strike, which is where it's at now, down to the 410 or the 408, bring that basis below $8, arrive at an $8 diagonal spread, and still have a profit potential if we get a rally here. But of course, I'm hoping for a rally in GLD from this point. Also, I chose this stock, this GLD product, because it's down today. The market's pretty strong, and GLD is down 1%. So I wanted to get some bullish delta in products that are down today, and GLD just happens to be one of those products that it didn't have exposure in already. It's not necessarily correlated with the other products that I have in this portfolio, and that was ultimately the perfect reason for me to get into GLD in a defined risk way with plenty of time and a plan for profit taking, a plan for defensive management. I think that's super important, is just having a plan for anything that can happen in these markets. But let's sum it up for you. So GLD call crab trade, $8.87 debit. GLD is right around 400, so we can use those nice round numbers. Max loss is the debit paid on either side of the market. Worst case scenario is we get a big sell-off. If we get a rally, I'll just take it off before we get to that risk on the upside. But I bought the 400 call in October, sold 2 of the 420s in the September cycle, and bought 1 of the 440s in the September cycle to create that crab component. So again, crab trade is nothing more than just a butterfly, a 400, 420, 440 butterfly, but you're pushing that long option that's closest to the stock price out to the next monthly cycle, getting out of the implied volatility exposure there, and ensuring that your short options are in that implied volatility exposure where you get all that premium relative to time. So again, worst case scenario, we get a sell-off in GLD. If it's a sizable sell-off and those 2 short options at the 420 strike lose a ton of value, I'm talking $800, $900 of value from the total value of $992. I will just close that component, convert it to a long October, short September, 10-point wide diagonal, or maybe an 8-point wide diagonal. It's nice that we have the single-digit strikes in September, but that's the plan. Let me know what you think in the YouTube chat, but we're not done yet. We got another trade idea coming your way right now.
What's going on, guys? Welcome back to another trade idea of the day. I know we put on quite a few trades over the last few weeks, so just want to touch on some of what we got going on in the portfolio right now. But just a quick recap, we're long some micro crude oil. Over the last couple of days, we had gotten some short delta on an Apple, short delta on an Microsoft, a little bit of long delta on an App 11 post earnings. We already have some short delta on in Micron, and the reason why I'm emphasizing this one is because I'm going to put on another trade that's related to Micron. It's not Micron exactly, but it's going to be another name in the same industry. We have an out of the money call spread on QQQ. We got some long delta on via a Zebra, zero extrinsic back ratio on in Roblox. And then we also have some short delta on an SMH, which is the semiconductor ETF. And then a little bit of long delta on in the bonds, because a wise man once said, when bonds are down, bonds are a buy. So we're catching a little bit more of a bid. We were up a little bit more on the day on bonds at around 83 flat. Now we've been pulling back a little bit more since then. But with that being said, I want to talk about this trade idea of the day. I've been taking a look at SanDisk, right? Excuse me. I've been taking a look at SanDisk. And this is one of the more expensive underlyings. You know, right now we're trading at about 1,552.09 cents right now. This is an extremely volatile market. And look, guys, I know we're catching a bid here. These memory names have been on an absolute tear this year. I think these memory names is the undisputed MVP of the year. Like, I know we had oil, we had the metals, so many names, but I don't think anything's put in such an impressive run like the memory names this year. But with that being said, one thing that I'm not going to do is I'm not going to flip the cards, right? I'm not going to flip the cards. I'm going to remain with the same bias that I have on a lot of these memory names. I'm a little bit bearish until proven otherwise. So until we can make another high in Micron, Intel, SanDisk, those kind of names, I'm going to still lean bearish. I know today's a pretty big day. We're up over 200 points on SanDisk alone. So over 50% to the upside in a single day that we're seeing today here on NASDAQ. So I want to get on a little bit of short delta, but I want to be mindful of that because we already have short delta on in Micron. And again, look how quick these positions can shift, right? On this specific position, we're down about 218, right? On the day and on the overall position, right? If we zoom back in, let me close these off. There we go. If we just look at Micron, we're down about $125 on the day. Overall position, we're down about 142, right? We were just up almost 50% of the credit that we received in the green on that trade, and things switched just like that. So if that's not a testament to how volatile some of these markets are, I mean, I don't know what is. But Micron catching a bid today, SanDisk catching a bid today. I don't want to necessarily double down per se, but I do have that same bias on some of these names. So if we can catch a little bit of a pullback off the pop that we're seeing today, that would be great. And I was looking at a few things. Names like SanDisk and Micron can be difficult to get involved with, especially if you have a little bit more of a smaller portfolio. When I say small portfolio, I say maybe anything like maybe below like 50,000. And with such a high price stock, like even doing a Zebra is pretty expensive. So even doing a strategy that's meant to reduce the amount of capital that we're using on a specific trade is going to be, fairly pricey. I'm still not getting used to this options chain about how the out of the money calls are at the top side of this options chain is still throwing me off. I'm so used to the options chain, being backwards. I think I put on a position in the money the other day without recognizing that this was flip-flopped the other way. But with that being said, if we take a quick look at SanDisk over here, looking at getting on some short delta via selling out of the money calls. And again, if you wanted to get on a zebra, right, we would look at selling the at the monies and buying 270 deltas in the money, right? And just looking at what this would cost us, we're going to put that to 2. Here we go. Sell 30 delta, buy 270 deltas, right? That buying power effect is going to be 34,000. This is if you wanted to get, there we go. If you wanted to get synthetically long 83 shares, almost 84 shares, that would cost you about $34,515. And that's a zebra, right? If you wanted 100 shares of this without using a zebra, it's going to run you over $100,000 just to get into this position. So even a zebra on such an expensive stock can be pretty pricey. But with that being said, we're going to be looking at selling an out of the money call spread. And I remember when I was first getting into the market, I used to see people trading things like Apple. I used to see people trading things like Amazon, Tesla. And I used to just think like, how in the world, and this is when I came from a background of only trading stock equities. I was like, how in the world are these people trading things like Amazon? I was like, does everybody just have $250,000 in their account to buy 100 shares of Apple at $100? Right? I'm like, yo, everybody just walking around with just bags of cash in their portfolio, and I'm just one of the only ones that's not. That wasn't the case. Later on, I ended up learning how to use vertical spreads and different types of strategies to reduce that cost basis to be able to trade that specific underlying. So I'm looking at the 1750, 1740 here, and we're just going to see if we can get at least a third of the width, well, without getting too aggressive. So these are going to be $10 wide. I also noticed in the SanDisk options. So we're going to see how far out we can go while still maintaining a decent credit to be able to collect. And it's looking like we're going to have to sell this 1740 or 1730. And if we look at the daily chart, I just want to get an idea of where 1700 actually is on the chart. If we look at 1730, 1740, let's just go 1735. We'll go right down the middle. That's about how much room from a visual standpoint that we're going to be giving ourselves with some short deltas. So we would need this underlying to expire below this price point. So again, is the momentum back in the memory names? Is it just going to take 3 or 4 days or just a week for us to be back at all-time highs? Maybe. But again, I'm not going to flip the cards here. I'm going to continue with that short bias that we have on in there. And these markets are a little bit wide, so we're going to be looking at selling the 1740, buying the 1730s. So far, we are... There we go. We're sitting at $3.30 worth of credit right here, selling the 1730, buying the 1740. $670 worth of buying power. Max loss going to be 670, max profit 330. The pop is just under 70%, sitting at 69% right now. P50 at 78%. That's a little bit more attractive. And then we're also not too close to the stock price. So I do like it. I'm going to go ahead and try to send this one through. I know, guys. I know. I know a lot of us in chat has been writing that long delta on in the memory names. But look, I have no problem admitting if we're going to be wrong on this trade, but I got to get on some short delta, especially considering the fact that we could be on the backside of this move. So I'm going to maintain this short bias on these names until we can surpass that all-time high. So kind of what I'm looking at when I'm saying backside or front side is kind of the other side of that momentum. So when we were topping out at around 23,000 or 2,346, anything below that price point, we're going to look to get on some short deltas. So with that being said, we want to be mindful of the overall position just because we do have on some short delta on in Micron. But again, I'm a little bit more comfortable getting this one on because Micron only has 8 days left to expiration. I was looking to see if we could add a little bit more time to this. And everything's going to cost a debit. Earlier today, I think it was going to cost like 30 extra cents or 40 extra cents to roll this out an extra week, which I probably should have done earlier today. It's looking like you're going to have to pay at least $1.10, $1.48 to be able to roll this one out in time. So I would love to give this a little bit more time because I still have the same bias on these names. But since we can't roll for a credit or at least a small debit, I'm just going to be patient on that. Maybe we get the pullback before then. If this one comes down near break even within the next 8 days, I'm going to go ahead and take this one off, just do a little bit of management. So the thing that's mainly on my mind is just risk. Like, how much risk do we have on the table? What's the opportunity cost looking like? Because, for example, on the micro crude oil trade, right, it's going to be more about opportunity costs now as well. So that thought process is shifting a little bit more here. But see if we can catch a fill here. We'll adjust this working order a little bit more. These markets are a bit wide. They're definitely a bit wide. Like, I'll adjust this. I'll go down to 320, see if we can catch a fill there. And while we're on here, we'll go ahead and check out INC. See what they've been up to, catching a bit on the day, up about 4.3%, 4.25. So this is another one we could take a look at as well. No earnings or dividends, that's going to be in the way. Looking at the September 18th cycle, maybe we look at this $5 bite at the expected move. That's going to give us about $1.02 in credit. Not as juicy. Volatility and premium's been absolutely killed, so not too much of a surprise. But again, it's going to be the same bias with these names. We'll see if we can get a fill here. Again, I don't want to move this down too far just because I want to collect at least a third of the width. And if this is a $10 wide, a third of the width is at least going to be $3.33. So anything below that isn't going to be too ideal. So we'll put it in for $3.15. We're giving the market a bargain right now. We're doing $3.15, trading at about $2.90 right now. Markets are a bit wide. Can you invert the strikes on the table just above DTE? Let's double check that real quick, actually, because you guys know what I'm talking about, right? Like the first time I was using this options chain, I was always scrolling in the wrong direction, and it was just like breaking my brain. And then I got used to it, and then I was using both platforms again, and then it started throwing me off, and I started placing trades on the wrong side of the money, and I was like, no wonder these Greeks seem a little bit off. We got a working trade in there, so right above strikes. Oh, snap. Did I just do it right there? I think I just did it, right? There's a little Easter egg. We got Easter eggs in the software. Let's see. I think this is how I originally had it. I'm going to flip this one more time. I'm going to go back to strike. I'm going to click this. Yeah. Yo, shout out to Eric. Appreciate that, brother. Trying to close a butterfly, but no fill. I'm ready to take my money and run. Yeah, Ranch, I think that's pretty much going to be the play of the day, is whatever's on the table that you can take, I would just take it off the table and then redeploy elsewhere. I mean, this was such a large day that we had in the overall market, especially the Qs. I mean, we're just shy of that all-time high, so maybe we're on the way to all-time highs, but still a really good management day. We're always going to be talking about how we could always milk a specific position a little bit more, but I mean, how many points is NASDAQ up so far on the day? I just flipped my strikes to the way everyone else has it yesterday. I had them upside down. That's hilarious. It was actually driving me crazy. And I actually didn't even realize until some of my positions were a little bit wonky. I'm like, how did that not occur to me? But I recognize that's exactly what was going on. I remember I had to get used to the strikes being the other way. But the fact that now you can, flip it to your preference by the click of a button was actually a great idea. Whoever came up with that idea on the dev team, hats off to you. That's pretty slick. But no, NASDAQ is up over 300 points on the day. So we're up about 377 points. We're trying to pull back off these highs right now. So, I mean, you're never going to really be mad at yourself for managing some of the positions that are in the profit on a day like this. Everything feels good when, everything's up. Maybe we continue. Maybe we go to the all-time highs and we make a new highs in the Qs. And it's going to be the Qs catching up to SPY, not the other way around. But with that being said, again, I don't think you'll ever be mad at yourself for taking some off the table. I know I'm certainly going to be doing that. One of the trades that I've been keeping an eye on, I know we were talking about maybe selling a call against this Roblox trade, but since we're up over $100 in this trade within 24 hours, I actually think we're going to be taking off this Zebra. So that's actually what I'm going to do instead, to be able to hedge for the rest of the trades we have in the portfolio. because that kind of flipped on its head within 24 hours, right? Micron flipped on its head, so we're down like an extra $100-something in that trade within 24 hours. The Qs, I want to be hedging a little bit more. It's nice that App 11 finally turned around. It's doing a little bit of portfolio management here. And then Microsoft was up a little bit more over the last couple of days for myself, at least. So I do want to take some things off the table when I can do that, just in case the market swings back in the other direction. Then we could take advantage of taking some more off the table then as well. But I'm going to have to come back to you guys on the SanDisk trade. Hopefully we can catch a fill. These markets are pretty wide right now, but I do want to get on some short delta. And if we can't get filled in SanDisk, again, this isn't like doubling down. I'm not trying to like average down into a loser. That's not the goal of this at all, but more so, adding to the trade as long as our trade thesis hasn't been invalidated. So I know we're catching a pretty strong bid on the day, but that doesn't necessarily invalidate the overall trade thesis or trade idea that we kind of had on the table with a lot of these memory names. So with that being said, if we can't get filled on SanDisk, we'll look to see if we can get something filled on Micron, and we'll be patient for that. I will be back here later today, and again, if we get these trades filled, you'll be able to see them down on the follow trader page. But guys, that is coming to a wrap right now. We do have Chris on the other line. He's going to be giving us a trade idea of the day. I'm hoping that Chris really wants to go long bonds right now, because I would love to see this TLT position up a little bit more by the end of this week. We've seen a lot of weakness, but with gold doing its thing, we'll keep an eye on it. But with that being said, guys, we're going to toss it over here to Chris, and let's see what he's got for us.
Welcome back. I'm Chris Vecchio here for your trade of the day. Today is just going to be a single solo shot here and maybe a little bit of position adjustment elsewhere. Let's walk through something in Tesla, maybe selling a range here in Tesla. When we go to the charts, we see right now that Tesla is pinned below some important swing levels, as it were. Sitting below that April low right now in that 336, 337 area. It's bouncing back to an area that was former support turned a resistance here. Ben, if we could go to the charts here real quick, that'd be great. To that point, though, we see us also running into our 1 month moving average right now. So like so many of the other segments of this market, that's part of the AI infrastructure trade in some form or fashion. Tesla has had this ability to bounce back here throughout the month of August. But through that bounce back, it still has not exactly put up a ton of significant movement on the board. Before we actually get to the chart, I see there's a small little issue here. Let's just walk through what's going on right now in the exact Tesla earnings cycle, because the Tesla earnings cycle is now over and we're not going to see much of anything for the next few weeks. Now that we do have that chart back, we can actually pivot here immediately. We do see that April swing low here up in that 336, 335 area is now running into our 1 month moving average, the yellow line in the chart. So where does that put us? Maybe this is an area where, because this is a laggard in the market, if the market does decide to take a turn lower, it could be something that falls first. The weaklings in the tape often are the ones that are the first to go down when the market ultimately tips the other direction here. So Tesla could rally still, especially if the broader market holds up. It also could fall. I'm interested in seeing the double range here, so to speak. We have the swing lows through, we'll call it late April into June, and then ultimately leading into earnings in late July. And that gives us a shelf around 370. We likewise have the low in the recent downturn near 298.32. So this is what I'm thinking about here right now. On the put spread side, it's the 295-300 at 36 days to expiration, 365-370 on the short call spread side here. So as long as we stay within our strikes, not even for the full 36 days, but for the next, say, 15 or so, we get down to 21, this trade could work. It's looking for Tesla not to fill its earnings gap. It's likewise looking for Tesla not to break the post-earnings low here. And so this creates a defined risk trade with the short strikes between 300 and 365 here. Tesla does move around quite a little bit, and this affords it a little bit more breathing room. Currently at 336, it means that it can go 10% in either direction. And what will really be probably a 2-week window in terms of that expected move that is playing right to the edges of the expected move here at 36 DTE. Why do this right now? I see a lot of conflicting noise out there about Tesla. Some of the earnings results are really good. On the other hand, they're bleeding free cash flow right now. Deliveries are strong, cash flow is ugly, CapEx is high, AI robotaxi and the robotics story, it's eating the company's balance sheet right now before it's been able to prove that it can turn a dime at scale right now. So there's a lot of narrative energy here, and there's a little bit less of a forgiving financial backdrop. And I want to bring in a point that Mike Butler's been talking about as well. It's the fact that attention in the Elon cinematic universe is now divided between Tesla and SpaceX. Previously, when you wanted to play this type of Elon name, if you were worried about having a trade on that was related to SpaceX, but you couldn't get it in the private market, traders often just went into Tesla themselves. Now you don't need to do that here. So even when the market's rebounding, the capital that's pushing up the Elon-related names, it's been spread across a few. SpaceX has had a much more impressive run here over the past week or two than we've seen in Tesla after all. But the mechanics here are straightforward right now. The put spread side at 300, 295 is ultimately suggested we're not going to break the lows. That's bringing in a little bit of a credit here. But we're put on today just that alone, calling for Tesla not to break its lows that it set after earnings, would only bring in about 72 cents of credit. And so if I wanted to just operate around that view, 72 cents of credit on a $5 wide strike is just simply not enough to take in here. And at the bottom end of the expected move, do we really want to take more risk than we're usually comfortable taking? Not really. In an ideal world, it's about $1.67 of credit. So it's less than half. So we need to do more there. And that's why I went up to 365, 370. When we bracket this off, all of a sudden, this $5 wide strikes turns into about $1.77 of credit here, which is great and easier when we're talking about $5 wide strikes. So as long as we stay within the bounds over the next few weeks, this trade can ultimately work out. Thinking about these $5 wide strikes, if it's got put on for $1.77, that means you're risking $323 or $3.23 here. So it's a little bit better than risking two to make one, in effect, at a near 60% probability of profit. And I kind of like those odds right now. The game plan here in terms of taking this off, because it is a short premium trade, fits the bill of all the other short premium trades that we like to do around here, which is to say that when you get into that 50% profit threshold, you start to think about closing it out. Why do you do that? Because you run into problems with decay and ultimately gamma starting to move against you. You may be a little bit more sensitive to that if you're sitting closer to one of your short strikes, right? If Tesla is sitting in 2 weeks at 335, pinned in middle of range, you may have a different feeling than if it's trading, say, closer to 310, 305, or up closer to 355 or 360. And so that's where sometimes you may want to break the rule a little bit. We're at 50%, but we're still dead set in the middle of the range. I have a little bit of breathing room to let this decay further. Maybe I can bring it to 60% or 70% profit. But if I find myself at any point in time and we're close to one of those short strikes and we're at 50% profit and there's still time left on the board, take it, move on. Don't let that additional time work actually against you, because you're giving the market another day, another week to test that strike here. So why bring this up here now? Because I think the corollary is what happened in two names that we just took off the board here today, in ASTS and in Rocket Lab right now, in terms of position management here. Going into the earnings this week, for example, ASTS was put on for a 36 cents credit, 61.62, 82.83 for that particular iron condor. So we can do 62.63, and let's just double check that, 61.62, and then 82.83 here. All right. Now, these are dollar-wide strikes. When the position is taken off, ultimately it's taken off for 7 cents. Okay, so it's put on at 36, taken off at 7. Ideally, it could have been taken off around 18 cents. Why didn't I take it off yesterday when I was at 18 cents, 50% profit? Because yesterday when the market closed and the way that we were trading, we were sitting effectively dead set $1 off the midpoint of this trading range. And so I made the decision, you know what? There's still 2 DTE. I can go another 1 DTE. If it gets pinned here, if it drops a little bit tomorrow, I'll be able to take it off a little bit more. And sure enough, instead of taking it off at 18 cents, I took it off at 7 here. Same idea for Rocket Lab, right? When you have something that's sitting pinned in the middle of the range, and all this relates to Tesla, when you have something that's pinned in the middle of the range here, we can go to the activity tab there, 37 cents, flip back for 3, you see yourself in a position where you can afford to wait maybe another day and squeeze a little bit more profit out. But if this thing was testing the short strikes on either end, in this case, that was up at, say, 73 or 97, there'd have been no reason down here at 73 or up at 97, there'd have been no reason to keep this going, because I would have had to get out of Dodge before it turned against me. So that's the kind of mentality I'm bringing in here with Tesla. Yes, 50% is the target profit threshold here. However, if we find ourselves stuck where we're currently trading, if we go out to the end of next week, if we go out 2 weeks from now, all of a sudden it's the end of August and Tesla's still trading at 336, maybe we get a little bit more breathing room right now. Give it some more run. Try to get to that 60, try to get to that 70, try to get to that 80% profit threshold. But keeping with the theme of taking positions off here as we go through and look at some other recent trades of the day or ideas that have been put on through Confirm or Send or the morning show with Mike and Jermal. I would point to what's happening here right now in terms of some of the shorter term things that are under a week. Apple, for example, has been working-ish, but it's not really working enough for me to want to keep it on. Why do I say that here? We'll go to the Apple chart right now, and you'll have to forgive the circles for all the Bollinger Bands that were identified earlier. We have some interesting content that has been coming out in the future. The shelf around 300 has been holding, okay? And the idea here was that we're not going to see a breakdown in Apple below 300. And so when this position was put on right after earnings, it started to work a little bit. But there is a little bit more downside pressure here that's been building in recent sessions. It's not exactly the most comfortable looking chart right now. And so when I'm thinking about a position where, okay, we're at 8 DTE, we're getting pretty close to my short strike at 300. I'm not of the mindset that I would want to reestablish this position here today. Why? Because the expected move would call for, if I'm again going $5 wide, it'd be more of a 310, 315, 295, 290 variety of a short iron condor, and we're not really there. So I can make an adjustment. I can take this off. I'd rather just take this off. It's going to be a small profit, I suppose, $9, $1.55 here. I don't want to deal with the gamma risk. We can trim the hedges around here every now and again. We don't have to necessarily worry about squeezing out every single penny. TSM, likewise, that's another trade that fit the bill for today. We had a position that was really struggling, to be clear, for most of July. This market rebound in August was a gift, obviously, but when we take a look at what happened in TSM, this trade was taken off at 43 cents debit. It was initially put on at $3 and I see 313 filled here. So why did I let it run? There was positive technical momentum. We had begun to turn a corner. A downtrend was broken. There were some reasons to think that maybe, just maybe, we had turned a corner of sorts, so giving a little breathing room right now. And that's the fundamental difference. TSN got the chance to run because the chart setup was suggesting that there was positive technical drift and momentum in its direction, and that ultimately allowed a position that was struggling back to break even to turn into a bit more of a winner. Whereas with Apple, it's had its opportunity to have that bounce. It's had the potential to turn higher here. It ultimately did, and then it slouched back. So before we get into the teeth of a losing trade, maybe the idea was right, bad timing. Maybe the idea was bad, and I happened to time it right, and so I was able not to lose money on it. But we can just trim the hedges, continually trim the hedges around here. Anything else of interest that needs to be rolled out today? We're going to talk about Cisco later. We have a J&J thing that's kind of been working as well. Similar mindset, short put spreads. Not really fitting the criteria of buying the dip. That could have been 2 days ago as it was down below its 1 month, back above its 50. So this is already doing what it's supposed to be doing here. But just working through the mechanics right now, J&J, this last position was put on here at 58 cents of credit. We look to 8 days to expiration. It could be taken off at 13. That's more than 50%. We've had a nice little bounce. We're no longer in the envelope where the market keeps picking itself up recently. So we take it off the board. And we'll find a new opportunity to operate in J&J, I'm sure in the future among a whole host of these other names. So the trade of the day here was Tesla. Let's just recap this before we head off and pass the baton over to our friend Ilya here. Tesla itself has rebounded over the past few weeks. It's about a 10% bounce or so, up into the April lows near 335 and change. At 335, it sits directly between the midpoint of where it was trading prior to its earnings. It closed right before the earnings at 374, and it finished the earnings fall down around 298.32. So $37 off the low, about $37 from the pre-earnings close. We find ourselves at the midpoint of that trading range. If you don't want to spot that, you can head over to the toolbar here on the platform. You can go down all the way to Fibonacci retracement, and we'll just take the close level for the earnings, and we'll go down to the low, and there's your 50% mark. Don't believe me, the math says it itself. And so we're at the halfway point of the earnings rebound. We're at the 1 month moving average. We're at the April low. Maybe, just maybe, this is a place where Tesla pauses. And so consistent with that view, at 36 days to expiration, looking at the 295, 300, 365, 370 for the short iron condor, taking in about $1.77 of credit. Now it's $1.70 of credit here, which on $5 wide strikes is just over a third of the width of the strikes, currently about a 57% probability of profit. And in the event that this decays down to, we'll call it 90 cents, 85 cents or so, we're then in a position where the trade can be taken off. The caveat, of course, as was the point of going through ASTS, Rocket Lab, TSM, what have you, is if you're doing a short iron condor and there's still some time left on the board and you're at 50% profit threshold, but you're pinned at the midpoint of the range, you may want to see if you can let it go a little bit longer. Get to that 60%, get to that 70%. It's more of a feel situation, but that's what you have to build up as a trader. You have that experience over time to recognize, is it a good time to break the rules? Should I stick to the rules dogmatically? Can we even avoid this because even though it's part of the mechanics, something just doesn't feel right with me? That's my trade of the day, Tesla Short Iron Condor. You can follow it on the follow page, of course. We're going to have another trade of the day coming at you just shortly here. Ilya Spivak coming up next. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Every time he explains something to me, I ask him the same question.
He always asks me the same question.
What's the trade?
I'm not always sure that's the right question.
It's the only question. Retail traders don't have a thesis on in their portfolios. They have positions on.
And if you don't know why it's moving, the position is a good guess.
And if you never get to the trade, the reason has no meaning.
Same market.
Different question.
It's time to trade smart, post PDT rule elimination. Now, traders of all account sizes have more flexibility than ever before. With rapid order entry and bracket orders that let traders manage entry, profit target, and stop loss, all in one ticket. Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
And welcome back to Trade of the Day. This is Ilya Spivak, head of Global Macro here at Tasty Live. We're still tracking this situation on U.S. inflation. We have another set of U.S. Economic data out today on that score. Wholesale inflation numbers, the PPI report out from the BLS. And of course, we can go right to the charts here because as we talked about in the wake of the CPI report yesterday, the Consumer Price Index number, our main interest here has been gold. So let's just quickly review the chart as it presents itself. The key here, as we've been talking about, is what gold is trying to say with its relative resilience since the beginning of July. And the data is starting to paint that picture. We're starting to see maybe what gold was sniffing out. So as a point of reference, here's the TIP ETF. This is giving us the basket of U.S. Treasury inflation-protected securities across a variety of maturities. And so it's basically a measure of real rates. And we can see here that since the beginning of July, here we go, right here, we've had a sharp decline in this ETF. And that, of course, means that we're looking at parallel, a sharp rise in real interest rates, which should be kryptonite for precious metals because, of course, they yield nothing in real terms. So we can see here, sharp decline in the ETF, down almost 3%. And so you might expect this would give metals some pause. As a matter of fact, we can see the place where this move begins late April of the year. It's a very different kind of a reaction. This is where the rise in real rates starts. And if we go back and see where we are on gold in this context, here is where that is. And indeed, we can see as real rates go through that phase of the action, gold does in fact sell off. But in the beginning of July, when we get that last 3-ish% rise in real rates implied by that decline in the ETF, you have gold pointedly going sideways and refusing to sell off. Now, at the same time, you have a US dollar that seems to echo that narrative. And so it's as though the market is attempting to tell us something. Here's where we are in July. We can see the dollar might be expected to rally on the back of stronger real yields support, as indeed it did from late April again, when those real yields started to go up. Gold was down, dollar was up, all was right with the world. Here's the beginning of July, give or take. We can see the dollar refusing to rally as those real rates continue, and more recently adjusting lower. So what is in fact going on here? Well, it would seem in the context of the PPI data this morning and the CPI data yesterday that the market is starting to sniff out that maybe the Fed doesn't need to do all the rate hikes that were feared because inflation is softer than expected, at least coming out of the oil price shock of the U.S.-Iran war. And the way it's kind of shaping up here, if we take a look at how the data came out this morning, PPI with a flat result against expectations of a 0.2% month-to-month rise. The core rate down to 4.7% year on year, or rather the headline rate down to 4.7% year on year, the core down to 4.2%. The headline a little bit lighter than expected. That was 4.9. The core exactly in line, 4.2. The month-on-month rise in core, though, 0.2% versus 0.3 expected. So again, a little bit lighter. And as a consequence, Fed policy expectations are shifting. And so now we were looking at September before this back-to-back release, CPI yesterday, PPI today, as a 50-50 shot for a rate hike. Now it's 65-34 in favor of a hold. Moreover, and this is probably the more impactful part of this, we're now moving to a place where October is a 50-50 coin toss, whereas before it looked much more certain. We still have a rate hike that's on the menu, likelier than not by year end. The December likelihood is fairly convincing at almost 95%. But the likelihood that we get a follow-on hike next year, which was very much something that the markets were convinced of at the start of this week, that's now gone. And so the markets are now convinced more so that we are going to get no change in rates. And so the overall structure has become marginally, or rather at the margin, more dovish over the past 48 hours, and certainly thanks to this morning's PPI data on top of the CPI report, than what we saw at the beginning of the week. And so from a practical perspective for gold here, when it started to launch this breakout at the beginning of August, the way that I chose to have exposure was through outright 1OZ futures. Now, why 1OZ? Well, they're, as we've talked about before in this context, small and nimble. And so there's lots of flexibility with adding to the position, removing parts of it, and flexing risk management in relatively short order. Because, first of all, it's relatively liquid. Second of all, it's relatively small capital allocation to hold the trade, even compared with MGC, the micro gold future. And so you can basically go in and out of this even outside of US market hours, because of course futures also trade overnight, but as you would with a microcurrency contract like an M6E, let's say, or an M6A. So there's lots of flexibility here to manage the trade up and down in size. And if you get some sort of strange outturn, like the war is creating new dynamics because some strange headline has emerged and that upends inflation and Fed policy expectations, it's easier to get out of the way if something suddenly changes the narrative. Now, what do we do with this then now? We've got the two inflation Fed policy expectations, as we just discussed, have reacted. We got to this break earlier in the week that is now holding from this former support turned resistance. And when we work our way into, let's say, a 4-hour chart, yesterday the conversation was, well, does it make sense to add to the position when you're hovering near these highs? And of course, the answer was no, because you're right up against immediate resistance. The risk reward was not attractive. Now we've pulled back into this support area. So if the baseline is that this was a breakout that ought to hold, well, then the risk reward to adding to the trade is much better, because now if you break down from here, well, then the whole thing is wrong. You got to take a little loss and get out of the way. Now, on the other hand, if we hold this support and this breakdown is valid, well, then the next leg is higher. And this series of higher highs and higher lows continues. So with that in mind, what I've done here is I've just added to the position and essentially just doubled the exposure. So let's say if I had a 1OZ contract on before, now I have 2. And that, of course, becomes a function of what your position size is relative to your account and how you want to size it. I generally try to size a trade such that normal volatility would let me get out of the way were there to be a loss of, let's say, 1 to 2% of account equity. So I try to stay small because the timing on these macro trades is notoriously difficult, and being able to be flexible in and out of positions is important because you're not going to get timing right a lot of the time, even though you might have the theme, the direction, and the narrative in place. Now that we've pulled back to the bottom of this range, the risk reward to adding seems to make more sense. The idea being that what you're trading for at this point is a push from here, once this support holds, and if it holds, back into this direction. Now, there's some chop along the way here. We can see there's some reference points here that have exerted apparently a little bit of friction along the way. There's this high here that's coming up around sort of just above the 4,600 mark. So maybe there's a little bit more chop along the way. But the break of this larger level would, in a broad sense, establish a path higher back toward a test of the 5,000 figure. And that's sort of the premise that the trade would be built on. We're essentially saying, here was the initial breakout, one hurdle overcome. We've come back to retest, and we seem to be holding. If we're holding, this becomes the base for the next leg higher. And so this is where we then add one futures contract, see what happens next. If we get a break above, let's say, this high here, that can be a touch point to add more. And I would likely give it a little bit more room and say, okay, here there seems to be some sort of an internal level, and that's what I would want to overcome to then grow the position further. But of course, the big add would be if we break this, opening the door then for a test into the 5,500 direction. And that's what we're looking at today. We'll see if this continues to play tomorrow as we get retail sales, and then later in the week, the University of Michigan consumer confidence numbers, which will keep driving this story forward. I'll be back for Futures Power Hour in an hour to keep checking in with this. In the meantime, more Tasty Live programming is directly in front of you. Stay tuned exactly where you are.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools, and place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
It's time to trade smart, post PDT rule elimination. Now, traders of all account sizes have more flexibility than ever before. With rapid order entry and bracket orders that let traders manage entry, profit target, and stop loss, all in one ticket. Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
We're back. You're watching Tasty Live. I'm Chris Vecchio. We're here joined by Gad from the research team. We have 3 trades in, well, at least 2 of those names are pretty hot today, Gad. We'll have to take a look at that third one. Maybe you and I are on different sides of the trade, my friend. How are you?
I'm good. How are you, Chris?
I'm always upset when I have to get on air with you, to be honest, because I'm like, oh, okay, I know I dress better than Jermal. I definitely dress better than Mike. Gad's going to make me look like I went to a thrift store.
No, you look good. You look good.
Which I would actually probably look better if I went to a thrift store, a little bit more fashionable. Okay, we don't have much time here, just 10 minutes before we get to the one and only TP Tom Preston. And then we get our afternoon with Tim Knight and then last call. So let's get into it. You have 3 trades from the research desk. Let's bring them in.
Yeah, I have 3 trades right now for you. But before we go into trade, I have a suggestion for you. Are you interested in writing books? Because you have a lot of knowledge, you can write a book and you can read the book. So
it would come across as like a manifest more than a book, and people would have me committed. So I've not yet put pen to paper.
Okay, let's jump to the trades right now then. So my first I have 3 trades. So I'm real bullish in this market right now. So my first trade is MU. So when you look into MU right now, the MU had earnings in late June 24th, and then over a month, if you spend a month like from now to 30 days out, you see it's been up 36 points, which is like 4%. And when you look into 5 days, it's up like 67 points, which is like 8%. And today is up like 6%. So which means like I'm doing short call spreads, which means like the stock is going up in MU, which makes sense right now according to the kind of market we are really in. So I'm doing 10-20, 20-30 in September, 36 days out. Pretty decent IVR. Last price is very attractive, less than 1,000. Gonna correct like a little bit of rich premium, $3.60, and the buying power is not that bad. That like a big deal to put the trade in. So what do you think about this trade, Chris?
So I have a lot of exposure on the other side of you, at least in Micron here, not specifically through MU, but through the sector itself, SMH. I'm currently wheeling that out through long shares. I've had positions on TSM and Western Digital. I've had ASML, SanDisk, over the past month or so when the stocks were in their period of decline throughout July. And so the fact that we've had this rebound in August, it's piqued my interest because a lot of things are now that weren't working and hurting me are now working very swingly here. But I like the area where you define this, right? I'm not one to fade a move, particularly after I see a downtrend breaking here. I'm watching a little bit of, there's some momentum starting to build right now. The 1 week is back above its 1 month moving average for the first time since July 2nd. So maybe a corner's been turned here, but where you identified this around like 1020 or so, that has kind of been a shelf in Micron. Recent pivot highs, July 9th here, July 23rd, are just in that, That is it, right? If I was going to do this, that does seem to be the right place to look. And in terms of the actual credit received, right now, if we were to go into the market and look at that, you can still get a healthy $3.47. So it's not like it's not outrageous, Gad. We usually talk about at least a third of the width of the strike. It's not like you're getting paid $8 here on this. You're getting paid a typical amount on strikes that are that wide.
Yeah, you say you're right, Chris. So, but it's for people who want to try trading like small kind of positions, this can be attractive to them, right?
Yes, it can be, of course. If you're collecting 340, 345 on $10 Y, that's good work, and you're risking less than 2 to make 1 on a 63% probability of profit. Micron has another day like today, you could be in trouble, obviously. But the market is pricing. I mean, you could take that risk against that clear swing level. I understand it. I personally have enough on the other side where I would not like for this to work out.
I know people like to be contrarians, and I like people who are contrarians, actually. I like hang out with those people because I get a sense of how they think. Me too, sometimes I get a contrarian about the market or about the positions of some big traders. So, but this is...
Not me. Deeply insecure. I want to be with the crowd. Just want to be loved, Gad. I'm a momentum guy.
You have to do like 50-50. Like sometimes be contrarian, sometimes go with the crowd. But yeah, we see. So let's go to the next trade.
Let's do it.
So let's go to the next trade. So next trade, I have short put spread in AMD.
AMD.
It's AMD, yeah. So also it's the same kind of like logic I have in this trading, these positions. So these AMD had the earnings in August, like 4 August. They're starting off August. So, and over a month, I was like down at 29 points, which is like over like down like 8%. And now it's up like 2%. Even if it's up right now, up to now, like 2%. But when you see overall, after the earnings, it's going down. It'll be down, which means like the volatility inside this kind of stock is contracting. So that's why I'm putting short put trades, because it's like 36 days out until the expirations. And when you manage by 21 DTE, you can correct this decent kind of credit. So sorry by that, it's a credit, not a debit. So you're gonna correct like $2.60, and IVR is like 30, almost 30. The last price is almost 500 or 493, and buying power is not that big like huge issue on people who have like small account, which is like 747. So the pulp, which is very attractive in this trade, is a 7.2, and it's the risk reverse. Like you're gonna risk almost 2 to make 1 as this previous trade. So it's attractive to me, because when you look to AMD and this kind of like huge run in market, most of like this big stock, they are really running. They are really getting up. But this AMD, after the earnings, it's going down, up, down. But in my perspective, it's going down in this coming of like 36 days. So that's why I put these short put spreads, just to make it really work for my portfolio.
Yeah, you say 434.20 here. Yeah. 434.40, right? I'm just poking around at 36 days. You know, the way that this market has moved, vol really has been crushed. It's only a 28 IVR and raw volatility rich at around 58. Yeah. I see maybe perhaps I kind of like this, because I just did take off some TSM, and I'm looking for different exposure on the long side in the space, which is why I'm not going to join you in Micron. However, recent pivot low is near 463, and so can collect a little bit more going by 444. If AMD is going to go into catch-up mode with the rest of the sector, or rest of like the AI trade, I kind of like this actually. At 292 in credit, I'll take this.
Okay, there you go. Finally. So yeah,
let's go to the last trade.
So let's go to the last one. So the last one is IBM. So right now IBM is recently they make a partnership deal with OpenAI to secure enterprise in AI development, and also right now IBM is a little bit down pennies today, and that's why I'm putting short put spreads in IBM. So investors believe in the direction of IBM is taking, by some customers, the market, they are pulling from IBM a little bit. That's why its stock is going down, even if the IVR is at 29. So gonna correct also $2 and 1 cent. So I'm putting it's a short put spread, not short call spread. Yeah, 210, 220. So that was my mistake. Put to write calls. It's puts. So and the pop is 72. Yeah.
I'm taking a look at this, and I said at the start that maybe there'd be a trade where I'd want to take the opposite side of you. One thing that I like to do from a technical perspective is I look for trades that are either sell the rip or buy the dip, and my sell the rip formula is above your 1 month but below your 50. And that's exactly where IBM is right now. I see that 50-day coinciding with the swing lows from June.
Mm-hmm.
I see the credit that you're receiving here. I'm inclined to just go $5 wide on a short call spread, which 250, 255 or so, $1.25 in credit. It's only 25%. But I need to figure out the exact strike I want to use. I feel better about Micron than I do about IBM. But, we're going to be back with you later on, of course. We have TP coming up next year. You give us 3 interesting trades: Micron, AMD, IBM. I'm with you on AMD. We will see them, of course, on the follow page, so be sure to check that out there. And you can always watch this segment later on YouTube. Brief break here on Tasty Live. Gad, thank you so much. TP, Tom Preston, coming up next. Stick around.
Thank you, Chris.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Good afternoon. I'm Tom Preston and getting ready to trade live with everybody today. And, okay. So just to let you know, everybody, so I have the YouTube Tasty Live channel open so I can watch any chats. If you have any questions, put them up on the chat or the comment section, and I can see those hopefully. And if I'm quick enough, I can see them and answer them. If anybody has any symbols they want me to check out in the next half hour, and I can either give you my opinion on their tradability, or maybe actually do a trade in them myself. One of the things I want to start off with here is looking at the VXX. Why? I don't trade the VXX often, but what I want to do is show you a chart. And the reason why I'm looking at the VXX just drifts lower. Yes, it spiked up when they started the shooting war with Iran, of course. Market dropped, VIX goes up. But the VXX has been going lower. Compare that. See if I can do this. Let me see if I can get cute with the charts. This is the VIX right here. So the VIX has been relatively flat. That's normal for the VIX. The VXX, though, which is the ETF that tracks the VIX, has been drifting lower. Why is that? So to explain, the VXX is a portfolio of VIX futures. The goal is to track the VIX using the VIX futures. Okay, no problem with that. But in order to do that, because the VIX futures expire, what it does, it rolls a little bit of its VIX portfolio from the front month future to the next future, in this case, rolling the August future to the September future every day, about 4%, roughly 4%. So that means it starts off when July expires, when the July futures expires, the VXX is composed 100% of August futures. When the August expires, it will be composed 100% of September futures. In between August and September, every day, VXX sells about 4% of its August portfolio and buys some September futures. So sells August, buys September every day until it gets down to zero. August, 100% September. What happens is, and this is what we've seen, I've been watching this recently. I have let me clear this out. I'll show you exactly how I do this. Let's go to 10, and you've seen me do this before if you've been watching the channel long enough. I'm going to go into, let's do the 16 strike. I'm going to go into the August future right here, sell the 16 call, buy the 16 put. This is a synthetic short VIX future. And then I'm going to go out to the September's. I'm going to buy the same strike. I'm going to buy the 16 call, sell the 16 put. This is not a trade. I don't intend to do this. This is just to show you the relative pricing between the August and the September. Right now it's trading at $2.07 debit. So it's trading in contango. It was a couple of weeks ago trading down to like 30 cents, something like that. Then it started creeping back up to about, 60, 70, 80, 90. Yesterday it was trading at about $1.80. Now it's up at 207. What does that mean? It means that the VXX is selling something that's cheap. Okay, and I don't mean cheap in the sense of it's underpriced or, you should buy it. That's not what I mean. It has a lower price. It's selling something that has a lower price, the August future, and buying something that has a higher price, the September future. The difference is about $2. And that $2 is a drag on VXX's price. Okay, so that's, it's almost all let's clear this out. It's almost all at this point with 5 days to go on the August futures. It's almost all now. The vast majority of the portfolio is in the Septembers. Let's do the same trick with the September October roll. Let's go out to. Let's go see some more strikes, and I like to base them on options are relatively close. Let's do the 18s. So I'm going to sell the 18 call in September, buy the 18 put in September, then go out to October, buy the 18 call, sell the 18 put. That's trading at $1.47. That's a little bit more normal. $2, a $2 basis between those futures is high. The average is about $1.80, $1.90 or so. $1.46 is a little bit cheap. So I'm just thinking, you know what? While we're at it, and if this basis remains kind of high, if the market keeps rallying, keeps a lid on the VIX for the time being, I was thinking about doing a bearish trade in VXX. Now, I do not do bearish trades very often in the VIX themselves. I just don't. There's too much upside risk, too much explosive risk in the upside. So you don't see me shorting front month VIX futures. I generally don't do that. But the VXX is a little bit different. VXX, I would consider, I never buy the VXX because it has that drag. Let's just see. There's nothing in here for I don't know. Let's just try a short call spread. 17 cents. See, there's nothing to get in there. How about if we go out to 15 days? Let's do 2021. No, there's not enough credit. Let's see if we can buy a put spread in here. And again, there's not a lot of trading activity, but I thought it'd be interesting to take a look at some of this stuff. How about eight days? How about what is the stock? 1961. How about buying the 20 halves, selling the 19 halves for 71 cents. So let me figure out the intrinsic. So it's about 90 cents of intrinsic in this one. Buying this below intrinsic value. 13 cents of theta, 56 pop. I don't care about that necessarily, but I could make $29 of max profit versus $71 of risk if I were bearish on the VXX. And this is the rationale. I'm already short some put spreads in the VIX. Those are killing me. If we get any kind of spike in volatility, then I'd be happy to have those profitable against a small loss here in the VXX. But if the market does keep rallying and the VIX is relatively weak, they're going to start hammering the VXX. The VXX is not going to resurrect itself unless we get a very big spike in volatility. I'm going to ship this for $1 for 71 cents credit, or 71 cents debit, excuse me. Ship it. Filled to 71. Let me also take a look at, and one thing I want to talk about is my miserable little stub trade. What wiped out Tom Preston? Stub. They're going to put stub on my tombstone. Here lies Tom Preston, taken down by stub. Actually, that's not true. Stock had a huge sell-off. So we sold these yesterday at 1 o'clock because everybody watched me do it. Sold the 7.5 puts for an average price of about 22 cents. And right now, the markets are just horribly wide. Here's the way I'm going to manage this. Tomorrow, if the stock comes up a little bit, and if it's above 7.5, hopefully they expire worthless. Okay, that's the goal. Hopefully they make money. I'm not concerned about letting these go. But if it's below 750, if the stock is, let's say, 746, okay, and the intrinsic value of those 750 puts is 4 cents, I might consider buying them back for those puts for 5 cents just to close the trade out. I would like to do, I don't necessarily want to take delivery of the stock. I don't know anything about StubHub, whatever. It's just another trade to me. It doesn't mean anything to me. So I'm happy to close it out. If I can buy them back for 5 cents, it'll be a small profit. Awesome. I'll take it. But here's the thing. If I have to pay 10 cents for it, I'm not going to do that. If the stock is at 745, and here's how I want everybody to start thinking about managing expiring options, especially ones that are a little bit in the money. Start looking at the intrinsic value of the option, compare that to what you'd have to buy the option for. In this case, let's say I went in right now. I'd have to pay 35 cents. The ask price is 35 cents. 35 cents? Screw that. No, I'm not paying 35 cents. What I'll do instead is I will sell 200 shares at 747. Okay? So if I have the 750 puts and the stock's in the money, close to 3 o'clock tomorrow, and I'm very convinced that it's going to stay, they're going to stay in the money, I will sell it at whatever the price is below, and that's buying that put back for intrinsic value. Now I'm taking risk that the stock rallies up, blows through 750. Okay, and I might not do it in this case. I might just hang on to it and see what happens through the expiration process. But that's how I'm going to be. That's how I'm going to be managing this. I'm going to be looking at what I have to pay to close this trade. In other words, to buy these back. And if it's too much premium over intrinsic, I'm not going to do it. I'm not going to play that game. I'm going to sell 200 shares of stock at whatever the current price is, which is synthetically closing out those puts for intrinsic value. Hello, let's see. Any questions that come up for is cute and Vex little traders on true XSP, but broken wing butterfly, VXA for better way to trade the VIX. So, Metro, would a broken wing butterfly and UVXY VXA be safer, better way to trade the VIX? The problem, so UVXY is one of those, isn't it? One of those, those ultra bulls, UVXY. So it's 1.5 shares. The more derivative you get, the VIX is. And I hate it when people say, oh, the VIX is complex. Yeah, it's complex. It's got a few nuances to it. I get it. But there are some people in this business who've been trading presumably for a long time. Oh, I wouldn't touch the VIX, too complex. It isn't, okay? Trade the VIX kind of a lot. I get it. And you can get it too. The UVXY is starting to get a little bit drawn away from that. So there are certain things about the UVXY portfolio, right, that I'd have to take a look at. I don't trade it much. You could do broken wing butterflies and something like this. Yeah, you could do a butterfly in VXX or something like that. You get as I say, cute with it, and I don't mean that in a pejorative sense. That is a valid trade if you're buy a slightly out of the money put butterfly in VXX. Yeah, you could do something like that, or UVXY. Yeah, you could do something like that. I like to keep it simple, only because I don't have any really strong convictions about VXX. I did a one lot mostly as kind of a way to show everybody watching how I look at this stuff and how I compare the basis in the VIX futures to the VXX. This is the only financial network where you see us trade live. Okay, so that was a real live trade I put on in there, and this is how we do it. Let's go in. Let me do some. Let me actually put on some positions here. I was going in the activity watch list. Mosaic fertilizer company. Why would I consider Mosaic? MOS, 34% IV rank. I think the stock's been whacked. Yeah, it had a nice sell-off. The reason I found this is I have a list of stocks in the S&Ps and NASDAQ showing how many standard deviations they've dropped, which is how I like to measure price changes. Mosaic's been crushed. Why? I don't know. Fertilizer. People don't like it. The issue, though, is, well, not the issue. The thing is, though, Mosaic has a $3.89% dividend yield. If you're looking for a wheel strategy where you're selling out of the money put, and then if the stock drops, you take delivery of the stock, sell calls against it, you're getting 3.89% yield on the dividends. That's not bad. Let's check the skew. And Mosaic is a relatively low price stock, 21.5. Let's go into 8 days, 21.5. Down a buck, up a buck. Yeah, the skew's pointed to the upside. So let's go in and sell a 21 put. 21 put, I can make $25 for $3.75. That's not bad. Let's push this out to a further expert. Let's go out to 15 days. I like this one a little bit better. Yeah, not awesome liquidity, but we're gonna try this one. 47 cents. I won't make the same mistake I did with Stub. 47 cents. Let's ship it. Submit working. Let's go back to the watch list. CMCSA is another one. Comcast has been rallying though. This would be a trend following trade. whatever. Comcast has been rising for the past, I don't know, month or so. Decent IV rank, 23%. The volatility is down. This is the only chart study I look at. The volatility has been creeping lower. Let's go in and just check Comcast. I have 25 puts loaded up here. Again, Comcast, I know, as I looked at this earlier, 5% dividend yield. Again, if you're looking for that short put, yield, if folks are new to option trading, specifically and coming from an investment background where they're buying stocks, as long-term investments, maybe to capture dividends, this is the way to get into the stock a little bit better price. So the skews for the stock's trading at 26, down a buck up. It's screwed up. So let's go down. How about 29 days, a little bit easier to work with. 26, down $2, up $2. Yeah, the skew is pointed to the upside. Let's sell a 25 put. Let's see. Get anything for 8 days? No, not really. 15? Yeah. I'd like to do the 25s. Let's push these out to... Let's do these, the 29 days. I have 2 loaded up there. Don't want to do that. So I'm going to sell these off at 35 cents. Oops, 35 cents. Just as a bullish shot on Comcast. Like I said, the skew's pointed to the upside. I'm getting 30 deltas. That's about right. Not a huge amount of risk. P50 is 85%. Probability of making half its max profit, about $17. $426 buying power. That's kind of a lot, but the return on capital isn't bad for that type of trade. I'm going to ship this off at 36 cents. See if I get filled. Let's play. Filled. All right, I like to do some fills. One of the things I want to look at is crude oil. Crude oil, how much time we have? Crude oil is always exciting to trade. And I have an I-Run Condor loaded up in here. So the argument for crude oil, pull up a chart of crude. So it's been up and down, up and down, up and down. So what's the deal on crude? I don't know. Who knows what's going on with the Strait of Hormuz? I think long term, the Iranians are playing President Trump and so they'll drag this on. We'll negotiate. Well, we're not going to negotiate, blah, blah, blah. They're going to drag this out to the midterms. The problem with crude oil, the problem, I think, is that over time, it might take a year, it might take 2, I don't know. But the market is going to find a route away from the Strait of Hormuz. They're just going to bypass it. They already have pipelines being built or already built. They're going to bypass it. The market isn't going to let the Strait of Hormuz stop the flow of oil. So that's my long-term take. I'm kind of bearish on crude oil for that reason. But going forward, I think there's still enough uncertainty. I don't think it's necessarily going to drop. I don't think it's necessarily going to rally. That's why I was looking at an iron condor in this thing. The volatility has been coming back a little bit. But for 4 days, looking at the SEP, 4 days, looking at the SEP futures, not the V's, the Octobers. If I can sell these, let's pull this strike in a little bit. Selling the 77.5, buying the 78.5, selling this 85 call, buying the 86 call. Again, this is a big product. Okay, $1,000 in between here. Buying power effect is screwy. The max loss is what I'm looking at here. $700 versus $300 of profit. So about a third of the width of the strikes. Let's ship it. Let's see if I get 30 cents for this. So it's a big product. That's the downside of trading this CL. But to move the needle for P&L, I trade the big crude oil contract. You can trade the micros and stuff like that. You could do that. I like the big ones. Just because I can get stuff done. Is it? I think it's closed. Is it closed? That's working. I think it's working. I thought maybe they were going to close it. Let's see. Any other? Mosaic, Matt Charlotte. Thanks for Mosaic needs sulfur from the Hormuz, so Nacho. How about CF? They benefit from Nacho. Let's look at CF. CF Holdings. What about CF? Nothing. Let's go out to 36 days. Markets are, I mean, they're not great. Let's see. And I'm going to talk about not great markets in a second. You know what? Just because I like Matt, people coming in here making suggestions, I like that. It's because it gives me something else to play with. Let's see if we can get filled. There's zero open interest on this thing. Are earnings coming out? Yeah, earnings are coming out on the 14th. Let's trade through earnings. Here's the problem with doing this stuff is I don't know if I can get out of this trade. So I don't know if I can buy this back if it starts going against me. Here's what happened in the NDX. Let's pull up the NDX. And I'm not shooting down the idea of selling puts in CF. That's not my point. But I do want to show you what goes on and why you got to be really careful trading the NDX. The NDX is not particularly liquid. I like to trade it sometimes just to see how I can get filled, what the quality of the fills are. I got filled pretty quickly. Opening the trade took forever to close it. So, I put that up in the follow-up page. Just bought a put spread. And the trade started to make money. NDX is selling off. Great. Making money. Boom. Fabulous. Let me close it. Took forever. Okay. And just because there's not a lot of trading activity in NDX options, it is a $30,000 product. Okay, it's big, and if you think the S&Ps are big, the Nasdaq is 4 times the size. They're big ass options, they're big, strikes. You can't. It's hard to work with, but that's the problem with it, and I don't like to get into trades, and I would suggest this for everybody else. Don't get into trades that you can't get out of, and that comes down to liquidity. Okay, so let's go back in. Let's go to watch list. Let's get some other trades in. Comcast, Bank America. What's going on with Bank America? Bank America has been rallying. Had a nice little sell-off today, and I was looking at the skew in Bank America. BAC, 8 days. Yeah, let's leave it at 8 days. Now, see, these are liquid. These have tight bid-ask spreads, 63, 65, 24, 29. Not the best, but they're pretty good, right? Lots of open interest. So Bank America is trading at $64 even. It makes testing out the skew easy. Let's go down a buck, up a buck. 63 puts to the 65 calls. 63 puts. So the skew is pointed towards the upside. Could we buy the 63, 65 call vertical? See, negative theta, I don't like that. Let me put this out to the crowd. BSX. Okay, Greg Mock, let's do BSX really quickly. I'm going to put this out to the crowd. Bullish or bearish on Bank America? BSX. Oops, rats. Find another symbol. BSX. As I say, first day with the new hands. 85% Boston Scientific. Excellent. I used to get their catalogs when I was a kid. Fun stuff. Decent markets. Let's see what the skew is. Stocks 51.5. Let's go out and see the 8 days just for kicks. Just for kicks. Right in here. So down, let's say down $1, up $1. So the 50 puts are trading at 50. The 53 calls are 55. Yeah, all right. Skews point to the upside. Let's see, Greg. You're short a put. Yeah, why not? So let's see how much they charge us for capital. $800. of capital requirement, generating $5 of theta. It's not bad. Let me do a quick calculation. 518 divided by 885 is equal to 0.0058 times 100 is equal to 0.58 theta percent, 0.58% theta return on capital. I'm happy if I can get about a fifth of that, okay, or a tenth of that. So I'm going to ship this. Let's see if we get, I'm going to offer it at, let's see if we get 43. I'm not sure if they trade in pennies in this thing, but let's see. Filled at 43. I gave him a little bit. I should have tried a little bit higher. But then, all right, thank you, Greg. Let's go back into, yeah, thank you. Yeah, bullish on Bank America. Let's get a trade in before my show ends. I get panicky, I like to put on trades and, So the reason I'm going to choose something with 8 days is verticals. 1%, 2% IV rank. The vol is low on this stupid thing. And I'm not saying it's stupid because whatever. So if you're, bullish on, so if I'm looking at a bullish trade on this, let's do, like I said, the 63, 65. If I'm doing this right, yeah, so I'm buying this for intrinsic value. If I pay $1.08 for this spread, this in the money call is 63, the stock's at 64, so those have a $1.08 of intrinsic. Paying intrinsic, so I'm not paying any extrinsic for this. Generating 0.17, yeah, that's probably correct. Let's ship this and for $1.08. Or Ranch 2SZ, ship it. Their mid price is 11. They knew we were coming. They were watching you guys. BE, Graybeard, BE, Bloom Energy. Let's step in. Fire away. How many days? 8 days. 8 days. My producer's saying, last one. She's yelling at me here. 8 days? Come on. Let's do it. Do it now. It's like the Terminator. Come on. Come on. Oh, I've already loaded this. Clear the trade out. Let's do this. I can do it. 585, 585. Let's do this one. Pink. Close enough. Let's strip it. Boom. 45. Nothing done. All right. So this is how I look at trades. Again, if you do these trades, that's your call. These are not trade recommendations. If you do decide to do these, please do not take any more risk than you are comfortable with. Thanks for joining, and stick with us for some more great trading content.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Welcome to Futures Power Half Hour. I'm Ilya Spivak, head of Global Macro here at Tasty Live, joined by the great and powerful Errol Coleman here. Errol, how's it going?
What's going on, Ilya? How are you doing? Good to be back on with you. I know it's been some time since we got to chop it up about the market, so it's good to see you, brother.
Yeah, man, it's been a minute. I'm very curious to see where your head's at with these markets today. And we can go right to the charts because why not? We might as well.
Yeah.
S&P 500 is trying to make a run for it here. Still kind of within the bounds of this range that we've been looking at. So still underneath the month-to-date high, but trying to make a play for it. The NASDAQ, the bigger deal, seems to be trying to make a bigger push here, actually north of the high and looking for once in recent weeks less soggy than the S&P and sort of the broader market sentiment. What do you make of this? Is this sort of the market coming home to its tried and true, or is there something else going on here in your mind?
I don't know there, Ilya. I know we had seen that divergence between the S&P 500 and NASDAQ, and that divergence was very pronounced over the last, couple of weeks. So the big question mark was, is the S&P 500 going to catch up with the Qs, or are the Qs going to catch up with SPY? And so far, it seems that the Qs are going to be trying to catch up to SPY. Maybe all-time highs is right around the corner, much to my dismay, as I have on a handful of short delta here. But it's looking like we're closing that divergence. Yeah, it looks like we're closing that divergence a little bit more, and it seems that S&P 500 seems to be the stronger magnet to pull the Qs back up. But again, we're seeing a bounce in a lot of these memory names as well. So I don't think anybody's having a worse day than Leopold. I think him getting liquidated might have been directly at the bottom of this entire move that we're seeing right now. But nonetheless, insane rally on the day. That's what I'm taking from it so far. Curious to see how you kind of perceive things here, Ilya. That was a very...
I'm not even going to try to pronounce Leopold's last name.
As you can see, I skipped it strategically. Yeah.
Yeah, I tell you that much. I am unprepared to try to pronounce Leopold's last name for weeks now. Try to just look at it, scratch my head, and go, you know what? Let me not butcher the man's name. He's got enough trouble as it is.
Exactly.
One thing that sort of captures this for me and has me kind of sit back and go, well, this is not just the kind of autopilot thing that we've been looking at and sort of makes me wonder, is the rapid diminishing in participation in these markets at the same time that you get this rapid rise. So you got this bounce from, let's call it late July, kind of going into the beginning of August, but the level of conviction just keeps fading and fading and fading and fading because the volumes are just not there. And they're declining almost as steeply as the price is going higher. And that's the case for S&P as it is for NASDAQ. Here's S&P again. Here's this steep rise. Volumes again fading. Now, of course, that doesn't really help you if you're short. You can look at that and go, yeah, well, sure, there's not much conviction, but I'm still on the wrong end of it. I, in fact, had to actually take my lumps today and get out of the NASDAQ's way. Thankfully, I was selling calls, and really all I needed was for it not to break out. And it looks like it might. So I decided, you know what? Goodbye.
Yeah.
I'm just gonna take my ball and go home. Does this sort of melt up with fading volume keep you in short deltas, or are you rethinking the bias here?
No, it keeps me in with short deltas, just not as aggressively, I guess you could say. And I mean, it's a really good point that you make with the volume. I think the highest volume traded day that we've seen in the last few months was actually the low that we had put in. I think on the day Leopold was liquidated.
Yeah, this was it.
Yeah. So to the point that you're making, we have been tapering off as we kind of head into this kind of melt up phase that we're seeing in the NASDAQ right now. But I got to say, and it's funny that you just asked me that question, because I was going to ask you the same question, but I'll answer first. I will say this does make me a little bit more cautious. So I still maintain the same bias until we can officially get back to all-time highs on NASDAQ, which we could be there by tonight. We could be there by the end of this week. Who knows when that's going to happen?
Yeah.
But I got to ask you, this morning as well, whenever I had seen that we weren't selling back off to the lows, I actually closed out a couple of my short positions almost immediately. And I'm glad that I did so, because I didn't realize we would get such an extended breakout today. But I got to ask for you, Ilya, why right now are you a little bit more, I guess, not hesitating to be able to remanage some of those positions? It seems like you were pretty decisive on, managing some of that short delta.
Sure. For me, at the end of the day, the great and abiding law here comes from the OG Ira Harris, who I never tire of invoking. And he said, if you're right at the wrong time, you're wrong.
Wise words.
And so I look at this, and for me, it becomes just a very simple exercise in looking at the price action. So
right.
I look at this NASDAQ move. I already, annoyingly, had to get out of my S&P bearish exposure on the first day of vacation because everything looked fine. And then I go on vacation, and then that happens. That was day one of my vacation. So I was going into vacation selling calls against these highs.
I mean, is that vacation?
With the call skew, receiving premium in excess of the max loss on the trade at the time. And going, well, this is fantastic risk reward. I'm going on vacation. Goodbye. This is great. All I need for this to do is not go here.
Okay. So risk
and
reward.
Then, of course, the first thing that happens is it goes there.
Okay.
So I already had to take this off. And today I had to do the same thing with NASDAQ. Thankfully, it's not all the way back to the highs. So I was able to manage it a little bit earlier. I was, again, selling calls against these highs here.
Mm-hmm.
So I had to manage it a little bit. But if you go down to the 4 hour, you could see 8 hour, you can see there seems to be a break. So if this was kind of your line in the sand, if that was your high, then at least on an 8 hour basis, which is no trivial thing. I mean, it's a pretty convincing bar when you get something to go for 8 hours and close there, we get the break. On the 4 hour, it's even more pronounced, of course. There's the high, there's the break. So it's not that I've become more confident. It's not that I think the market is any better situated. It's that the price action says it doesn't want to do what I think it's going to do yet. And I got to get out of its way if it doesn't want to comply at the moment.
So Ilya, what you're telling me is when I'm going on vacation 10 years from now, 20 years from now, you're telling me I'm most likely going to be checking my portfolio and doing some adjustments on day one of vacation.
I mean, if you're not looking at your mobile app, because the market's stopped for no man.
Yeah.
So if you're not looking for your app and you're not managing your position, marking yourself to market and going, where am I? Then you can do what Chris does, which is square out.
Which is what?
When you go when Chris goes on vacation, he cleans up his book. Now, maybe not all the way, but he just starts taking stuff off because he doesn't want to look at it.
Yeah, no, it's valid. And I see the point that you made due to that risk to reward, and the timing matters, right? Right direction, wrong time, still kind of wrong on the trade. But that risk to reward that you were kind of mentioning, is that what also gives you the inclination? Okay, I'm getting in at favorable risk to reward, so I kind of understand when I'm going to be wrong, and if I'm wrong, it'll probably happen very quickly, and that makes you a little bit more comfortable with just making the decision. I'm going to take this off the table and allow the market to do whatever it's about to do. Gotcha.
Spot on. Whenever I size up a trade, I want to know what the conditions are for me to get out before I ever put the trade on.
Okay. And that allows you to not be as impulsive either, right? Because I mean, impulsivity comes from emotions, but having that kind of mapped out beforehand, you're not going to be as susceptible to that impulsive nature because you already have an idea of what you might want to do and what you want to know you want to see before you get out of the position.
Absolutely. I mean, the people I learned trading from stressed this to no end, that you don't want to make an emotional decision about how to manage a position when it's already going against you, or frankly, when it's going for you.
Yeah.
You don't want to fall into the trap of taking profits too soon. You don't want to fall into the trap of booking a loss too late. You want to have those parameters. And I had this drilled into my head as a young spot FX trader, just over and over and over again. Manage your risk before the trade is on, before you have money on the table. At least have your risk reward math be a part of the decision, because if the trade looks good, but the risk reward is off, the trade doesn't look good.
Right.
Just because you think it's going to go up or down, and you might be right about whether it's going to go up or down, if you're taking more risk than it makes sense to make relative, if the setup isn't there, it's not an attractive sort of thing.
Right.
You could be right 10 times over and lose money. So I think for me, that's exactly it, is I got to know what my pain point is, even kind of thematically, not necessarily a price level, but if it closes above X, then I'm wrong.
So you have an invalidation
The underlying
point.
assumption of the trade is off.
Okay. So you know where your trade idea is being invalidated, per se.
Yes.
Okay.
Yes.
Got you.
Yes. And I think that's it. I think for me, when you close above this high here in the NASDAQ, even on a 4-hour, 8-hour basis, that tells me the place where this might be going next is to test this high. And if it's going there, I don't want to.
You don't even want to be in it, right? In the first place.
I don't want to be in it. I want to take what premium I've received up front, such as it's remained, take my little crumbs and go home and wait.
So how are you feeling right now about volatility absolutely just getting crushed right now, just taken to the slaughterhouse? I mean, we're trading below 15 right now, Ilya. I mean, how do you perceive things on that end of the spectrum right now?
For me, much of the decline in volume is a part of this story. I'm not sure I trust that the market really looks at volatility this way and says, oh, well, there is no issue here. I mean, if we look at what's going on here with, let's say, VIX futures, we can see, okay, it's not the end of the world type volume decline. And if we were to look at a continuous contract here, we see much more. Okay, here's that same low that we had in the S&P. Here's the slide. And you kind of have to look at the continuous contract if you want to get rid of sort of the natural ebb and flow of volume out of the previous month's contract into the new front month contract. That's going to kind of obfuscate the larger idea. But if you look at this latest decline, it's again coming on diminishing volumes, and really diminishing volumes today. We'll see if we can get ourselves back up into this range where we were yesterday, but I'm not sure I trust this. For me, though, it'll become a question of the price action. So now that I'm sort of back out of the big indexes, this just becomes a bogey to watch as a kind of speculative barometer.
Okay.
If I go and I see, okay, the S&P 500 seems to be showing some signs of getting some weak knees. So is the NASDAQ. And this is starting to tick up, and all of that is happening on rising volume. Now I'm looking to get back short.
Okay.
So this is just a layer of confirmation.
Yeah. Adds a little bit more context for the lens in which you're kind of viewing the story through, I guess you could say. I know.
I'll tell you where I'm excited about, and I'm
where's
curious
that?
to get your thoughts on that. Is gold.
I was going to say, are you going to gold or bonds right now? I was like, which one is he going to?
I'm going to go to gold first, and then we'll round around to bonds, because in many ways it's the same idea.
Yeah, yeah.
In many ways, the dollar and bonds are kind of a similar creature, in that it's a function of the Fed and kind of where inflation is going and all of that. I like this breakout. This breakout seems to me to be holding today. So we got the break through this kind of former resistance or former support turned resistance at this big shelf here. And at least, let's say, over the past 48 hours, CPI was out, PPI was out this morning. We seem to be holding what the breakout range is. So for my kind of tweaking of the portfolio today, stocks came off, more of this came on. So I bought some here. I bought some more here today.
Okay.
How do you feel about this?
No, I mean, I like it. I will say I'm long bonds right now. So seeing a little bit of a pullback in gold today has helped my bonds position a little bit more. So with this continued rally that gold has been on, I will say it hasn't helped my case on the bonds. And one of the questions that I was going to ask you, not to jump too far ahead, was, whenever we have a little bit more volatility in bonds and gold, I like the rally right now in gold. By the way, I do. I think we were consolidating down at the lows for quite some time. We kind of cooled off of that euphoric run that we had went on in the metals earlier this year. But I got to say, whenever you recognize we have a little bit more of that inverse correlation with the gold and bonds, when I recognize both of them are in play, I mean, how are you choosing which one to take part of? Are you going to structure trades around those differently? Right? Gold is pulling back today, so it's helping my bonds position. But I'm like, both of these names are in play. Which one do I choose? Which one am I going to be looking at? But I will say, to my dismay, I am liking the gold rally, but I am also long some bonds at the same time. So the further that gold rallies, it's not going to help my case too much. But that's kind of the pickle that I've been in right now. Ilya, so it'd be nice to hear another perspective at the same time.
To my mind, bonds and gold really should be rallying together.
Mm-hmm.
And the idea is that if the market is concluding that the reasons this is happening in the wake of these CPI and PPI numbers is inflation is coming up lighter than we thought.
Right.
So we had a lighter CPI number in the internals, although the year-on-year numbers were exactly on the screws. PPI was more overt. I mean, it came in light. It came in less than expected pretty much across the board. The core year-on-year number came in line, but you look at the month-on-month numbers, you look at the headline year-on-year numbers, light across the board. And you see what's been happening to Fed policy odds in response over these past 48 hours. So we started this week with a September rate hike being 50-50.
Right.
Looking at Fed funds futures. Now it's more like approaching 70-30 in favor of a hold. So the market is shifting. I would think more impactful still. We were looking at a pretty convincing case at the start of the week that there was going to be a follow-on rate hike, at least one more next year. That's off the board. It's fallen away. The probabilities are now strongly better than even that we get, in the 60s, let's say, that we get a hike, which now seems to look increasingly kind of performative, where the Fed's got to come out and do something because inflation is north of 2%. But it seems like, first of all, they have more time to not rush that decision. But second of all, it seems like there's not a case to be made as far as the markets see for any more hiking beyond the 25 basis point increase. So it's almost like that increase is the top of the hiking cycle, not something that is and extrapolated tightening from there.
Right.
If you're not tightening, that should help gold, which yields nothing. And it should help bonds, because then you might expect that there should be some weakness in sort of the yield structure. What's interesting for me here is that the bonds, if you look at, let's say we look at the 10-year note here, they're not really going anywhere. They're basically stuck in a range. They're a little bit higher today, but they're back at the top of this range, and I want to be long. I think it makes sense that you might start bottoming here.
Yeah.
But you know what? Once bitten, 5 times shy. And I've been bitten enough times trying to pick a bottom on this thing in the past several weeks that I got to be real careful. I got stuck in it when I thought this range broke right here. And then that didn't happen. And then it tried against this low. And so I was like, oh, well, baby, it's looking like it could be bottoming here. Let's try again. Nope, no good. Tried again here. But again, didn't really do it. So I'm out of this just because it doesn't seem to be working as a price action consideration. Chris had an interesting theory basically saying, if we don't need rate hikes near term because inflation's coming up soft, that might mean that we actually need more of them later.
Okay.
And that's why we're holding these levels in the long end. So if you look at, let's say, ZT, the 2-year looks a lot more constructive than do the long end rates.
Yeah.
So there's maybe a case to be made here that the markets are essentially sending rate hikes into the future. And that's why the bonds are holding up a little bit better at the long end, not so well at the front end. Meanwhile, gold, and for that matter, the US dollar, are looking at all this and going, yeah, all we really care about is near-term expectations. And so if you look at, let's say, something like, we'll say 6E, just to give us a view that's sort of the liquid version of a dollar counterpart. Yeah. Here's the euro, right? It's seeming to kind of start to edge down. So here was your consolidation range. The euro was rallying, and today it's pointedly holding this break. So for now, my reflection of this idea is short dollar, long gold. And I guess stocks and bonds are going to have to come around a little bit and show me something in the price section. Are you open to the idea that maybe it's time to be both long bonds and gold?
Yeah, I mean, 100% potentially. And I mean, I was actually peeking back at gold there again. I mean, this could be the start to another intermediate trend to the upside. I mean, I was kind of just even looking at from the previous swing high on gold to kind of where we're trading right now. The most active price level, which is known as a point of control, is sitting at around 4,709. And we're trading at 4,400 right now. So we might have a little bit more room to the upside. I have no position on in the metals right now. I will say I just have on that long bonds position. But whenever we start seeing those moving, in unison together again, maybe we get on a little bit more deltas on in the metals. I kind of felt a little bit of FOMO actually over the last few days in gold. And now that we're getting a little bit of a pullback, it's giving me that little window to put on a little bit of long delta if I want to take the opportunity. But I got to ask myself, am I comfortable with the risk that I'm putting on? And if I am, I got to pull the trigger. But no, with that being said, I'm thinking we have a little bit more range to run on something like gold right here. Ilya, I just don't want to get conditioned to gold running the way that it ran earlier this year, because I don't think we will typically see these metals move like that. I think that was kind of like a one-off. So I'll be mindful of that, but would love to see more volatility in both of those names.
I tell you what, I added to my gold long today on this little pullback. So nightmare scenario for me would be, let's say something goes bang in the Middle East.
Yeah.
And all of a sudden the market goes, actually, we have a huge inflation situation again. I don't think that's a big risk, but something to watch.
I'm
Of
long oil
course,
right now, so
we'll
just in
keep-
case.
Oh, well, there you go.
Yeah, there
you go. If ever you wanted to be hedging, this is maybe not the worst way to look at it. But surely Tim Knight's going to have all kinds of bearish things to say about the stock markets and soothe both of our nerves.
You guys are my guys. I got to listen.
bearish
Both you guys are
thinking.
my guys. You guys reinstate my directional bias that I already had, so I appreciate it.
Maybe we'll be right soon. That would,
as long as look, as long as the risk is managed, even if you're wrong 5 times, as long as the risk is managed, the numbers will work out if you're able to catch the move. But that's only if that risk is being managed, Ilya. So I hear you on that point.
100%. There you have it, folks. Stay tuned for Tim Knight. I'm Ilya Spivak. That's Errol Coleman. We'll be right back with more Tasty Live goodness coming your way.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Hello, everybody. Tim Knight here. Well, lifetime highs. How about that? Not completely across the board, but just about. The NASDAQ is about the only one without lifetime highs at the moment, although it's up big. It's about 400 points on the NQ. That tension that I was talking about has been released. And with the ES, the NQ basically was trapped for 6 trading days, and today, I don't know if it's the PPI or just the era of good feeling or whatever, but it has blasted above that. And so far today, it's been kind of an interesting day because the open happened and then everything raged higher. And about an hour into the day, it stopped and it fell. And the ES lost most of that gain. And then it stopped again. And it has recaptured most of it. So we're not at the highs of the day, but we're definitely up pretty strongly, about 2/3% on the ES and 1 1/3% on the NQ. YM is effectively unchanged, so it's a kind of a mixed bag, but on the whole, lots and lots of green on the screen. For myself, kind of bad news, good news. The bad news is that there's some positions I just was sick of looking at, and I just had enough and lost faith in them. A couple of options positions in particular, Carvana being one. There's nothing wrong with the chart. It hasn't really violated anything. It has tons of time left because those were January options. But I was just sick of looking at that position because it's like, this ain't working yet. Maybe it'll eventually work. I just ran out of patience, so poof, off it goes. And I just entered a simple short, much lower risk with much lower opportunity too. I did the same thing with SMH. Early today, I just waved the white flag, and it's like, this just isn't working. There's too much strength. And what I do in my spreadsheet, and you may do this as well, is I'll preserve it. I'll put it sort of a, what if I'd held on to it in a different section, just to kind of see. Usually I feel pretty good about it later and so far in the few hours it's been, it's like, okay, well, that was the right decision. Maybe a month from now I'll be like kicking myself, but I just had enough of them. So I've been lightening risk anyway, but I really lightened up with those. The good news is that, and this sounds like thin gruel, as I say, but it isn't that bad a day for two reasons. One, I have been light on risk, and two, some of the areas that I've been focused on, like FXI, like the metals, have actually been working. And so I'm down a little today, but on a 400-point NQ day, it ain't bad. And so we'll look at the good and the bad as we thumb through this list of symbols. So let us get started, and we'll begin with the good old ES. Here's the continuous contract going back to the formation of this futures contract. And you can see here over the past, what would this be? 30 years? More, I guess. But we have, for you who've not acquainted with such things, a bear market after the bubble, a bear market after the bubble, and then the everything bubble, which never pops. And we're at lifetime highs, once again, way up in the stratosphere, the ionosphere, the heliosphere. And it is up very strong right now, 53 points on the ES. And there's been kind of two bursts that have taken place. One of them was following this range here. So we were banging around this range for months. And finally, last week, it just went ripping above it. We had this 1, 2, 3, 4 huge days. This was the Kevin Warsh press conference bottom. Then we had this explosive move higher. It spent 6 days just kind of hanging out. And then today we're getting, today isn't anything like these, but it's still a push higher to lifetime highs, whereas it had been kind of trapped for the 6 days beforehand. The economic data we've seen this week has been somewhat helpful for the bulls. Yesterday was a pretty chilly CPI, and today was PPI, which came in month over month at 0. I don't know where these people are buying their goods, but everywhere I look, prices are higher, but we're told that it's 0. So there's PPI unchanged, and so it's things are rallying. TLT is up. Yesterday, the TLT just shrugged at the CPI. I guess the PPI is a little more compelling. We are up on this, but this is a dot in the context of this enormous drive lower. Today's not going to change any of that. I think this bond bear market's going to continue. But yeah, today's a little itty bitty bump, about 0.5% on the TLT. But getting back to equities, here we've got the spider. SPY, lifetime high, obviously, and this was the range it was trapped within. And we have clearly blasted right above that. And it will keep going until it doesn't. My style of charting is very helpful when you're dealing with support and resistance and analogs, things like that. When something's just going higher and higher and higher, you just kind of stick your thumbs in your pockets and look at it and shake your head. Take things like Tesla or Apple over the years. They will keep lumbering higher. And the patterns will just have to reveal themselves over time when you're dealing with lifetime highs. Lows are a different critter because there's a hard stop at 0. Can't get past that. But when you're moving higher, anything goes. The diamonds, for whatever reason, the diamonds are less inspired by all this than the rest. Maybe they've had so many gains lately that they're digesting it. But as you can see here, they're having none of it. We had a lifetime high here back on the 5th, And we undid all that, and just day after day after day after day after day, it's just kind of sitting there. So we are getting some interesting bifurcations going on. I mean, as I glance over here now, the ES continues to push toward the highs for the day. The NQ is at the highs for the day. And I am not aware of any giant news going on that should be creating this, but sometimes you don't need it. And of course, with all this going on, the VIX, are we going to go to the single digits? It feels that way. This is the VIX over decades. And as you can see, there are these broad sweeps higher and lower over all that time. And as we zoom into more recent history, we can see that the last really mega burst on this was back last April, that is April 2025, when this thing went up to, it seems hard to believe now, but about 60. And now we are crawling around in the dirt at 14. This is the lowest we've been pretty much all year. I guess you could go back to, well, no, this may be new low for the year. You could go back to last December and find a little bit of lower values, but complacency is just about as low as it's gotten for a long while. Really astonishing stuff. I wrote a piece last night, which essentially was kind of a thought experiment about if you were in February 27, 2026, and you were told all the things that had happened between February 27 and right this second. You were told about what oil had done, what bonds had done, how the war was going, all the information. You probably would have been inclined to short everything. And just the opposite happened. The volatility has plunged, equities have blasted higher, irrespective of the war and oil and all the rest of it. So, if some magical fairy from the future shows up, you may not want to pay them much heed, because it wouldn't have helped, it would have hurt. As far as some brighter spots for my own trading here, one of them continues to be China, FXI. March 2027, $37 puts, big position on this. And it was a little worrisome for a while, and it wasn't doing much of anything for almost 2 weeks here, but finally it started behaving itself. So here we had kind of the last thrust higher, and then down, 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 like so. And there's like literally like 220 days left on this, on these options. And it's a matter of relative performance. When I see U.S. stocks raging higher and higher and higher and higher, and the Chinese market is doing this, it's kind of encouraging. So this helped. This helped. This is going in the right direction. And I'm hoping to hold on to these things for much lower prices because, as I've pointed out, historically, these tops tend to be followed by nice slides lower, although it takes some time. The other kind of help today is in the realm of metals. We've talked about gold. Here's the long-term continuous contract on gold. We've talked about silver, SI. And as I mentioned to my compatriots this morning, long-term bullish on all this stuff, but short-term bearish. And looking at the ETFs in particular, GLD has reversed away beautifully from this trend line and from this base, from this right triangle top. And it's down almost 1.5%, which is pretty cool because just about every asset with a ticker symbol is flying higher today. So that's working out. In particular, I shorted yesterday the precious miners GDX fund. And this is down over 3% right now. And I would say it's probably got more to go. So I'm hanging on to this. I'm just tightening up stops on things of this nature. So I like that. In addition, we've talked about just miners in general. One element of that is copper. Here's HG, very strong. And this is a factor because XME includes copper miners. But I'm not especially interested in this per se because I'm not in copper directly. What I am into is this critter here, XME. I shorted this one yesterday. with a stop right there. And we're down 1.12% at the moment. And so far, so good. Hang on to this one as well. And I mentioned in passing yesterday the ratio chart. For newer viewers who may not have seen it, or perhaps you don't remember it, I'm talking about this thing right here. This is the ratio chart of XME versus GDX. And it suggests that in the months to come, that XME should underperform GDX. Today, GDX is doing better for me, but that's the general idea. You can see the broad zones of support and resistance here where these extremes are reached. Like up here, XME is extremely expensive relative to GDX, and down here, GDX is a bargain compared to XME. So it's kind of a cool cyclic wave happening there, measured over decades. Now, crude oil, I don't tend to mess with in general, and especially these days. Earlier today, there was a zip higher in crude, but that seems to have been beaten back. Looking at XLE is actually down just a little bit. It had pushed above this trend line. It's very lofty right now, though. It's not like it's some amazing base at a cheap price or anything like that. But, let's be fair. This is bullishly configured. It is suggesting strength for energy companies. I wanted to talk a little bit about stop loss prices, because we've got a real life example on our hands today, and that is Workday, WDAY. Now, I was short this, was past tense. I took a loss, but it was a really small loss. Why? Well, because I had a stop loss in place. And this is a really good kind of object lesson in stop losses. So most of my positions are just straight equity shorts, real simple. A little bit of my positions are directional, just long puts, for the long haul. I don't set stop losses. I don't set stops on options for a number of reasons, not the least of which is that the bid-ask tends to be kind of wide. They tend to be kind of positions with a long view, and I'm okay having so-called mental stops on those. Most of you know what mental stop is, but it's basically a means by which you're told, hey, something's gone on with this security, and you're like, oh, okay, let me think about if I should do something. That's a mental stop. Your broker is unaware of it. They don't do anything about it. You've got to make the choice yourself to take action based on that. So for my options, it's a mental stop. For the stocks, though, I have real stops set to the penny, and I update them all the time. Every single day, I go through all the positions, and in those cases that they need updating, I do so. And so Workday here, I came into the day short this, and things were just sailing right along just smoothly. And about an hour ago, I saw the stock spike. And I'm like, what is going on there? And actually, I didn't even see it spike before I heard the ding. I was out. I was stopped out of it, and that was odd. As we can see here, we can zoom in. Workday is up almost 20%. It's actually come off its highs there. The low today was 173, and the high got up to 227. And the reason is because Silver Lake Partners, I don't know if it was a leak or an announcement, but is interested in buying Workday. The point being this: the stop did what it was supposed to do. It got me out. And it got me out at the price that, from a charting standpoint, which was this price gap right here, made sense to me. And so my stop loss was set at 188.72, and it just snapped me right out of it and saved me all the rest of this business going on. Because if it had been a mental stop, what's the difference? Well, you get an alert, and you're like, what on earth? And you take several minutes to be like, oh, they're buying them. And it's easy to convince yourself that, oh, well, maybe it won't happen, etc. You kind of talk yourself out of it, perhaps. Or you're like, well, I'll just go ahead and enter the position. I'll enter my market order now at a much worse price. So anywho, Workday is not in my realm anymore. but it's okay because that's exactly what they're supposed to do. And I'd like to thank Silver Lake for not announcing this like at midnight tonight when I couldn't do anything about it. It's kind of handy that the stop loss was executed during market hours. So I don't know if it was a leak or not, but whatever it was, I'm glad I got out at a relatively kind price. So that's my stop loss lecture. Also wanted to say a little something about context, because I've been, I'll sometimes talk about bullish looking charts, but I always have the caveat that this is not a cheap market. And so like, this is one example. I've got 3 examples of this right now. This is Bending Spoons, obviously a very young offering here. And I'll just quickly shade out the base right there. So Bending Spoons came public, spent a few weeks building a nice little base, zipped higher and then higher and higher and higher, and just 1 and 2. So today's Thursday. On Tuesday, this was the highest it had ever been. In a 1982 kind of market where everything's cheap, this is a very appealing looking stock, but things are very expensive right now. And look what's happened since then. It is quickly undone all these gains here. And I think that's representative of the kind of pricey market we're in right now. We've seen the same thing with, I just mentioned this the other day, Cerberus. This broke out of its base yesterday. The very next day, bloop, right back into it. Failed bullish breakout. And one other example, StubHub. Here we have a beautiful inverted head and shoulders pattern. We push above it, retrace, uppity, uppity, up, and this begins degrading. From my perspective, this is where one should have gotten out. This is where, going back to our stop loss topic, this is where you would have been stopped out of the position because it violated this pattern. And that would have saved you all this agony. And down that goes. StubHub's down about 12% today. So, yeah, it's think of this when like the Anthropic IPO comes out and so forth. Things are very pricey in this market. Glancing at my screen here, it's the ES NQRT, all that green. My own positions, a slight majority of them are actually down today, which I appreciate. These are very carefully chosen positions. And don't get me wrong, it's not a great day. I'm down for the day, but by like 0.3%, so it's not too nasty. A few items which are helping a little bit last time I looked. We got Hims and Hers. This is down again, almost 3%. That's going the right way. And then we've got AAOI. This is Applied Optoelectronics, which is down about 1.5%. There's the topping pattern on that. And there, see, since we're using this platform now, I'll just remind you that I tend to use a dashed red line to point out where my stop loss value is. Here is Alcoa, AA. And in this instance, I'm going to zoom in. We've got a stop loss right there. So we had gone roaring higher and formed this top, and it cut below there, fell, bottomed like so many other things did a couple of weeks ago, rallied mightily, and then it seems to have exhausted itself at yesterday's peak. Since I'm trying to kind of recalibrate my pace because we've got twice as much time as the shows normally have. So let me just pause for a sec here and illustrate something I've talked about, just a little bit of a charting education. I can hit Control E here, and all these little letters appear. I can even hide the prices like so and the drawn objects like so, and now it's just this little constellation of letters. And what those are is the letter E is for earnings dates, and the letter D is for dividends. And I wanted to point this out because I've talked a lot about how some charts do or don't incorporate dividend data. And it seems arcane and boring and subtle. It's not. It's important to understand. So like I can mouse over here and it shows like a dividend on a certain date. So the way this works is, let's just take a very simple example. Let's say you're cruising along, you've got a $10 stock. And let's say that it pays, we'll make this big dividend just to make it simple, a $1 dividend, 10%. So all of the things being equal, the stock would go from $10 to $9 after the payment date because they shelled out $1 to their shareholders. Now, If you don't take that into account, if you're just looking at a stock that just shows the raw price data, the stock goes from 10 to 9 for no particular reason, and then let's just say they keep issuing those $1 dividends every quarter, it just kind of keeps degrading and it looks like the stock's doing terribly, when in fact it's doing fine because they're throwing out all this cash to their shareholders. And so what the chart should do is you take that past data and you wrench it down by either that absolute figure, or if you like, whatever the percentage is, to sort of mend, to stitch together, so to speak, the before and the after of the dividends. It's just like stock splits. So if you have a stock that goes from they have a 2-for-1 split, you go from 100 to 50. You don't want to look at that chart. That chart's useless. You've got this giant. It looks like the stock crashed. It was just a simple stock split. So dividends are really nothing more, from my perspective, than tiny stock splits, and those need to be taken into account. And there are plenty of places that you look at charts and they just don't bother because, like I said, it seems boring and arcane and who cares, but it really adds up. If you look at stuff like, I think Alcoa probably pays a pretty decent dividend, being a big industrial stock. If you look at any security that does pay good dividends and they don't take them into account, you are going to see a very warped and inaccurate view of reality. So just kind of keep that in mind. One other item that's doing okay on the short side is United Health Group. We've talked about this a bunch. This is a fascinating long-term chart. Of course, over the long haul, it's done amazing. This is like Coca-Cola. It's gone from 23 cents up to like $550. However, longer term, there's a couple of big things that have happened. First, this lifetime trend line was broken very sharply, and it retraced almost all the way back to the underbelly of that trend line. So once again, the old rule about how what used to be supports switched roles and became resistance. I would also point out, and let's just kind of rough out a little pattern here, is that we've got kind of an interesting phenomena right along there. And we'll make that pink just to show that it fell. This, to me, is kind of suggestive of what else had happened back here. So in any case, I'm short this. This is another good example of tracking options even after you're out of them, because one of the items that I had sold and has done really well after I sold it was none other than United Health put options, and those were also in the next year. But those have obviously nominally beaten the pants off my simple short position because it's leveraged, and it seems to me that this should just keep heading lower because we've got this nice reversal pattern, and I guess it's not as sexy as AI and hyperscaling and so forth, so it's kind of falling out of favor. But UNH is down about 1 1/3% today. Couple of other items I wanted to mention. I did scurry out of my Carvana puts and the SMH puts, but I've added a couple of new ones in their place. One of them is Abbott, ABT, Abbott Laboratories. And this is also January puts. And I like this because we have broken this lifetime trend line as well. And it's kind of a cool behavior here because we had this bullish pattern, blasted higher, and banged around for a while. And then it collapsed back into that same zone, tried to recover, and exhausted itself here. So from my point of view, so long as we don't exceed this 115.26 level, this is still prone to drooping lower because we've got the damage done with the broken trend line, and we've got this acting as a barrier to further price appreciation. So this has already had this enormous rally. I got these puts just today, and so that's a new one. The other one is a company a little bit more famous, Microsoft, MSFT, and in this instance, here too, we had this just stunning rally, absolutely huge. And my stop on this one, and when I say stop, this is your option, it's a mental stop. This is, if it crosses this price, then I would just physically go over and just get out. But is this level here, we had a shooting star take place. I guess that would have been Monday. And we're up not even 1% today on Microsoft, but these are January's as well. So that kind of rounds out my options portfolio. One other area that's been a bit of salve to today's bullish mania continues to be Bitcoin. For those of you who haven't seen it, there is a new bearish on Bitcoin video that I did. It's just out today on the Tasty YouTube channel. We bottomed on this today about 3 hours ago, but slowly but surely it's moving in the right direction, and it's all relative. Now, the fact that we're down at all on this today is pretty cool, considering the risk-on behavior happening. So step by step, it is working in the right direction. And as I pointed out in the video, the real test is going to be this monster of a pattern. Because if we can get below 60,000, I think we can talk seriously about a 5-figure price drop after that breach. But I'm continuing to be short Marathon, which is down 3 2/3% today. I am short MSTR, which is up about 2.5%, but has not violated its stop loss level. And I remain long BITI, which is barely up right now. But at least the past 5 days, we've got 5 green bars in a row on that. But the breakdown of Bitcoin was kind of squashed by the mega rally in equities. So just to wrap up here, not to put too fine a point on it, it is just bad news for the bears. Once we breached this descending trend line last week, that was a really bad sign. And there has been continued strength here from the NQ, although we're not at lifetime highs, but this is definitely, the bulls are absolutely in charge of these markets. One item to watch tonight, I don't have any particular strong feelings about it, but as the wispy trails of the last bits of the earnings season are among us, Applied Materials will be tonight's feature, AMAT, and I would say modest resistance around about 576.5, but that will be one kind of worth watching. Okay, half an hour, we did it. I will say fare thee well, and we'll wrap things up tomorrow. Thanks for joining me. Bye-bye.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. or what does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
Oh.
My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank
Does anybody
you.
ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. I'm a Mac. I'm a Mac.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We're back. You're watching Tasty Live. Final 30 minutes of the trading day here, which means that we have last call going for you. Of course, big market rally today, folks. S&P 500 up 0.7%. The Nasdaq up 1.2. PPI data this morning. Did it spark it? Was it some of the earnings yesterday, or folks looking forward to Applied Materials here after hours? Doesn't really matter. That's a 78.25 ESU6 in front of you on the screen there. And NQU6 is 30,215. Oil prices are in a little bit here, and volatility is down. Folks really seem like they're on vacation, as it were. But as we're doing all week long here on Last Call, we're bringing in a special outside guest to take us through a portion of this close. Today is Denise Scholl. You may know her because she is one of the pioneers of behavioral finance, as it were. I learned about her when I was studying for the CFA charter all those years ago, learning about how your brain can actually force you into making mistakes that cost you money. And that's really the simplicity of it. It goes a lot deeper than that, folks. But I've read her book, Market Mind Games. I'd suggest that you do so too. She's CEO of the Rethink Group. Denise, thank you for joining us here on Tasty Live's Last Call.
Thanks for having me.
Denise, I know that you have something to talk about with respect to an oil trade that you may see here, but let's just take a step back. I want to talk about process a little bit right now with you because it's so easy to actually just give out a trade call. What makes you think about going from 0 to 1 in terms of I'm ready or this is a good position to take? How do you arrive at that decision-making process?
Well, if you're doing it right, you do whatever your form of analysis is, right? And there's all kinds of different forms of analytics. But then you analyze your subjective reaction to it. It's not like the data or even the conclusion of the data. It's how you feel about the conclusion. You can't make a decision without emotion, so you have to have some form of confidence. Science has known this, by the way, since 1994. It's not me saying it. It just hasn't, infiltrated society or the trading world. You are always predicting what something is going to mean to you. So in practicality, when people are making trading decisions, oftentimes they're not actually thinking about their analysis. They're thinking if they make or lose money, or if they make or lose money, a second or third time in a row, what happens if they don't take it, how it will make them feel. So if you really want to do it right, you have to think of that subjective side as data. And then you need to learn to analyze it. And you need to act on the subjective side or the feelings that are actually about the trade, not about you.
How do you distinguish what's useful intuition then from like the simple desire or lack of desire to place that trade?
Here's a simple one, since you use the word desire. And, as soon as I say this, you're going to laugh. But think in terms of WTF. What do I want? What do I think? And what am I afraid of? And so in the end, you want to make the decision on what you really truly think, like what's in your gut, not what you want to happen. What you're afraid of is usually irrelevant, but not like completely, like that's the risk management piece, right? But if you're able to say, I want this and I'm afraid of that, the chances that you then can even hear what you really think, which is your intuition. I mean, it's a result of your work, but it's also the result of your experience. And then your body recognizing this is right. That's intuition, which, by the way, there's all kinds of research support for. You want to gain the skill of being able to hear that and recognize it versus something you just want or something that's you're afraid of for you. Does that make sense?
I mean, it makes sense to me because you hear so often a trader, an experienced trader, will often say like, "Oh yeah, this setup just feels right." How do people get there? Right? Is that just the accumulation of staring at a screen for thousands of hours, or is it a way that certain people actually think and force themselves to think?
Well, so if you start at the very beginning, like at the end of the day, trading is always about what are other people going to do. Are they going to pay more if you're long, or sell it for less if you're short? Like, really, that's what you want to know. And if you could know that, you wouldn't need to know anything else. We all have that skill. It's called theory of mind, but some people use it more than others. So like when I was first invited to trade, it was because these friends of mine at the SIBO kept saying I'd be good at it. And I'd be like, why do you guys think I'd be good at it? You guys go down there and do this waving your arms thing. But they saw that I was good at predicting other people, and they couldn't have articulated it, but they understood that that's really what it was. And when you're in the pit, you get to see the other people, right? And I forget the question you asked me because I went rambling on about theory of mind.
Well, that's fine. I mean, we're just that gut feeling of things looking right.
So I literally was just talking to a client who's in a big long only fund out of Los Angeles. When it's true intuition, actual unconscious pattern recognition based on all the hours you put in, it's calm. It's just like a sense of recognition. Now, it's not, markets move fast, and if you're short-term trading, it may mean you need to do this now, but still, the first feeling is just this recognition. Oh, right, I see what's happening here. Like you see somebody in a restaurant that you haven't seen in ages, you see their face, you go, oh, I know that's Joe, you think about that feeling. It's just the feeling of the sense of recognition. Intuition is more that than anything else.
Yeah, no, I tell people all the time, and even if you're not trading something, sometimes Druckenmiller used to say you got to invest and investigate, and sometimes to just get the best feel for something is put a little bit of money into it and just watch how it behaves. And if you do that for long enough, you'll get to a point in the future where you say, oh no, I've seen this movie before. I know exactly how this starts and ends. I know what to do. Strap in, right? Let's talk about oil a little bit here, though, because maybe there is a setup right now. This is such a psychologically fraught product, as it were. It's caught between legitimate supply and demand. It, of course, has Iran propaganda, Truth Social posts from President Trump, everything in between here right now. I've been trading this market a little bit, which I think is, it's been difficult, but still somewhat fruitful. Talk to me about how someone can get into something like oil without being scared away by the headlines.
Truth is, for most professionals who are trading for more than a few hours, oil's been impossible. I happen to have, 6, 7, 8 oil trading clients. They're either oil specifically, or they're in commodity funds, or they are in a commodity desk in a big hedge fund. Only one of them has made money this year. Because in effect, you are trading Trump's Truth Social posts. And that's not really all that predictable. Now, maybe intraday you could make money this year, but very few of them trade intraday. So I brought it up because it's one of those rare cases where, when you're thinking about the people, why is someone else going to pay more? You've had this risk factor that's completely unpredictable. Unlike anything, it's one person who can say whatever, his latest mood is, let's say, that is going to have an effect on the price of this commodity. That has made it way, 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 way harder. So most of my conversations this year around oil have been don't feel bad that you can't actually predict what it's going to do tomorrow, because you not only have Trump, you have the other side, which, they seem a little bit volatile themselves.
We're getting Lego videos online, which are directly aimed at an American audience, trying to stir the pot. So there's just a lot of propaganda. I mean, this is a propaganda. It's difficult to discern for most people.
Yeah. Another one I thought of, I don't know if your team can bring it up, but it's Woodward, WWD. It's a stock that had an earnings report 2 or 3 weeks ago. Not quite. It's sold off from 400 to 350-ish. I had a client that was long going into it, and we had this conversation, hedge fund people will do all their work. At the end of the day, they use conviction. How much do I believe the analysis I've come up with? How convicted am I in what I think's going on here? So, whatever that day was, that's... Yeah.
This looks like July 29th, probably. That gap that we see here on the screen.
Yeah.
That's the prettiest chart.
He was already long it, added to it for earnings. You can see the gap. And we spent our entire call deciding, what was he going to do? Was he going to get out of it, get out of some of it, add to it, which is oftentimes the conversation I end up going through. And it really is helping people figure out what they really think, what they really feel, the subjective side. They know how to analyze the stock, right? And in their case, they know how to analyze the earnings. And he decided that he really believes in December that the stock will be back to 450. So it was hard for him, but he not only didn't sell the rest of the position, he added that day, somewhere in the tail of that bar. So as you can see, for the first 7 days, 6 days, whatever, he did really well. It's pulled back, but he's not any worse shape than he was. And he's trading for December, which, by the way, is a thing that I see people make a mistake about all the darn time.
Go into that.
What's your time frame? Is your time frame 3 minutes, 3 hours, 3 days, 3 weeks? If you have an idea if something's going to move this much up or down, you got to have an idea what time frame it's going to do that over. And then what happens is people have an idea, it doesn't do, right? And then they change their time frame. Well, stops have to be relative to your time frame. If you expected it to do whatever in a certain period of time and it doesn't, then you got an issue. But people, and most of my clients are professional portfolio managers at hedge funds that you've heard of. And they mess up their time frames. They're just as human as anyone else. They just got a finance degree at some school that got them into a bank analyst program, and now they're at hedge fund. That's the path to that, and they happen to take that. But they're not any smarter generally than the average short-term trader. Really not. They make the same mistakes.
It's so funny that you say that, because when I first got into the world, right, I entered the world through FX. and everyone's told, the bond market guys are the smartest guys in the room. And then I got a little bit older. It's like, yeah, they may know things a little bit before other people, but okay. And now I'm in my late 30s, and now my neighbors are bond traders, and I know these guys, and they are just like the rest of us. So no one really has that big of an edge. If you apply yourself to a process and educate yourself, you can find that edge yourself.
Yes, and another thing I say that everyone, find the process that makes sense to you.
Yes.
Markets make sense to different people in different ways. I learned to trade momentum sitting next to Dmitry Balyazny in Chicago, in 1994, 5, 6 or so. Markets make sense to me in a momentum way. My husband's got a master's degree in econometrics, and he learned options trading from Tom Sosnoff. So it makes sense to him in a hedged way. Sometimes I have to say to him, buy the damn puts. Don't hedge them. This thing's going down.
When Tom was here with us, I had that fight with him too. It's please, can I just buy the calls? Why not just buy the calls? I just want to buy the calls. I want to buy the puts.
I have another client who did really well in the SpaceX IPO and has told me all about all his fundamental analysis of SpaceX. Then I walked in from having my coffee on that porch last week and saw it at 108.50, and I said to Bill, please buy some SpaceX shares. No questions asked. Just go buy them. And he knows now, when I get that tone of voice, he better just buy them, not even buy the calls. But that's how the markets make sense to him. Find the way that they make sense to you for the time that you're available, and then trade within, and don't go trade the way it makes sense to your friend. Because there's a zillion different ways to play this game, and an unlimited, essentially an infinite number of time frames. You have to find the one that speaks to you, and that you I think of it like a style of music or a style of dance.
Oh, absolutely.
Rap is different than classical.
Yeah, and just because you don't like rap doesn't mean you don't need to listen. You don't stop listening to music.
Yeah.
So you just gotta find what makes you groove, and that's a tired analogy here. Okay, we only have you for a few more minutes, and again, folks, Denise is a luminary in the field of behavioral finance. She's someone who's written a lot about this. She has a very public Twitter feed, which I've been following for a number of years. If you're interested in learning how to really control your own emotions, because that is one of the biggest problems people have, Denise. I mean, loss aversion. Folks let losers run bigger than winners. Even after losing a trade, they sometimes run into the problem of trying to execute on the next one. How do you get over that hump for most people? I think I've gotten over that hump myself. I've made and lost a lot of money over the years too. I'm sure as you have, right? So good traders know how to lose. How do you teach yourself how to lose and move on to the next one?
Well, that's a very big question. But the first is the actual thing you only have to control is your actions. You can feel whatever you want. When I first started, there was this guy, the most emotional guy in the office, jumping up and down, screaming at the screen. He made the most money. That was before I went to Schoenfeld. It's learn. What's the short version of that? It really is. Gosh, that's such a big question. Control your actions, not your emotions. Learn to think of your emotions as data and feel them and understand them. Don't act on them. So the one big one that everybody can use is fear of future regret. You're always going to be regretting. You're going to be afraid you're going to miss this trade. You're going to be afraid you're going to get out at the wrong time. Pick your poison. Say to yourself, what are the possible regrets I'll have if I do this or don't do this or add to it or subtract it, whatever. What are my possible regrets, different flavors of regret? Pick the one that you'll regret the least. Chances are it'll be right, but also you'll have less sort of mental recovery for the next trade. I decided that I was just going to take my loss on that, even if it came back, or I decided that I was going to stick with that, or I was going to add to it because I really do believe in whatever made me get in the first place. Be really clear about, if you get really clear about which regret you want to incur, you'll make more money.
She's been Denise Scholl, the CEO of the Rethink Group. I highly recommend that you follow her on Twitter. Go check out her book, Market Mind Games, Behavioral Finance Pioneer. Denise, this has been a real pleasure. Thanks so much for joining us here on Tasty Live's Last Call.
Thanks, Chris. Appreciate it.
We'll be back in just a quick 30 seconds. We'll get into the final closing bell, and we'll talk about Applied Materials. They have earnings here after hours.
thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We're back. This is Last Call, final 7 minutes of the trading day here. You're watching Tasty Live. I'm Chris Vecchio. Market here has been quite active today, so we're going to get right into the charts as we wind this thing down. 78.20 here on ES. A little bit of good news, a little bit of bad news, depending upon where you sit and what your time frame is. Short-term me, not having a great time. Longer-term me, it's a ball. We'll get there shortly. NASDAQ up 1.14% right now, 30,195. We're breaking through maybe a key resistance level on our charts here as we're cycling in to new lows in volatility. The VIX here currently looking at a 1465 handle. It says it's a 10-cent bump on the screen today. It's been low. It's been pin low all day long. You can see it in the VIX futures here as well. But this is a market rally that has breadth to it. We can go over to QQEW. The equal weighted NASDAQ right now is in at new all-time highs here, up 2.23%. If you don't like the tech stocks, you can go to RSP, which is up by 0.75%. Fresh all-time highs, which again is leading your S&P 500, the market cap weighted index. So good news for your Russell, good news for your Dow, which continue to cycle up ever so slowly, a little bit slower than their counterparts here. But Russell today did touch a new all-time high, and up here this will be a new closing high for the Russell. The breadth is widening in this market right now. More money is coming in, and it's going across the board. It's not just to the mega cap tech names, although today it's definitely about those semiconductors where Micron, for example, and that's not Micron, that's Unity. Micron here, still up about 3.92%. SanDisk is a bit off the highs. It's only up 13.6% now. My goodness. Even Western Digital here is up by 7.4%. So tech is back in vogue on the other side of CPI, on the other side of PPI. Back-to-back reports that tell us price pressures are not ratcheting higher in the very short term. The net effect of which, as a catalyst here, SR3Z6, our Fed hike odds for this year are continuing to come down. This is actually the lowest odds that we've seen of a hike towards 4% this year, going all the way back to June 17th, almost 2 months, right? So what's happening right now in the hyperscaler space, these companies, they're paying a lot of money, they're taking on a lot of debt to finance the build out of this AI revolution, and now the cost of that money is going to go up. At the moment, they're losing money to pay for all this stuff. Not right now. We're seeing that rate hike odds are being pushed back, cost of money going down. Our 2-year yields, those continue to come in here, and we go to ZT here on the screen. 2-year notes, highest level that we've seen since the first week of July. So a relief market today. Relief market defined by oil prices down 2.2% here at $80.50. But the big thing that we're talking about after hours to keep this rally in stocks going is what's going on in Applied Materials. This is the big earnings report that's coming out today. AMAT on your screen. It's a semi-cap company, the company that makes the equipment for the semiconductor makers. So if you're Micron, you're buying equipment from like ASML or AMAT here. All right, the 1DTEs. If you're trading this, folks, you have a $38.20 implied move, which currently at 533 brings you down to about 495, and we'll call it 490 on a short put spread, which only pays you $1.05 here. $1.05 is not great. Our typical tasty mechanics and what the research has showed longer term is if you stick to about a third of the width of the strike when you're looking to sell premium, that's kind of the sweet spot for you if you're operating in a short-term, medium-term trading basis. Currently right now, you're only getting $1, not even, 92 cents. 92 cents is not, well, we'd be looking for at least $1.67 here. It's almost half. You can't just do a short put spread if you think that AMAT's going to go up. At least mechanically, you're not being compensated for it in the way that we like to approach things. But how about turning this into a short iron condor position? 575, 580, capping it off on the short call spread side. That's only $1.98 in credit. That's still well below the third of the width of the strikes. So if you're playing AMAT right now, you're going to have to go in tighter. And here's the problem. These tech stocks over the past few weeks and months, during this earnings season especially, they've been doing a lot of movement outside of the expected moves. How do I know that? I was trading Cisco. Cisco shouldn't have been a problem today, right? Fantastic earnings. Everything looked great. I was in the double bull, the 112, 113, the 133, 135 positioning here. And yesterday after hours, it looked fantastic because where was Cisco after hours yesterday? I think I saw a 133 print there. Yeah, that was a 134.23 print. But then today we started testing 113. So I had to take the loss on the 112, 113 side. If we start to dip below the 113, I don't want to be assigned stock on this right now. My view is obviously wrong. So it had to go out the window. If these stocks are continuing to move to the expected move and beyond, do you want to be assigned AMAT as a potential risk? Do you want to deal with assignment risk? Because we're only at 1 day to expiration right now. As for me, I do not. I don't see enough credit here. I don't see the trade setup I like. I'm going to be avoiding applied materials today. But I mentioned some trades here in SPX because we started the day with myself, Jermal, and Mike talking about how this is a market that the past few days, if it doesn't move in the first few minutes, then it tends to get pinned. And when in a short iron condor here in SPX, this thing is done and dusted for max loss because we moved beyond the 77.80, 77.85 sides. Quick little, we'll call it a 300 and max loss here, 350, 370. It's a loser either way. But short-term Chris, he's not upset because long-term Chris is happy. The MES stuff that we're still riding here because it's a momentum sort of setup, cycling into new highs, patience being a virtue here as we continue to cycle into new highs, bottom left to top right, and the ESH7 call spreads. Those were taken out in April, now 37 points away from that 8,000 strike. What a journey it's been. We'll talk about how we're going to roll those up towards 8,400 for a final burst higher into the end of the year. But for today, it's a market that holds up firm. It's an S&P 500 that adds 0.7% here. It's a NASDAQ that adds 1.13%. Its oil prices are down by 2% on the back. PPI data that's much weaker. Overall, semiconductors are up. I know who's going to have more to say about this, and I'm about to give them a very difficult time. Unless AMAT bombs and it drags down the NASDAQ. But it doesn't matter. Overtime's coming up next. You're watching Tasty Live.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We're back. It was a banner day here for stocks. S&P pushes into a new all-time high. So does the Russell. So do the equal-weighted NASDAQ and S&Ps. But we're going to be focusing here on applied material earnings after hours. Semiconductors were really strong all day today. So let's take a look at one of the semi-cap companies right now. Applied Materials is out. We can go right to the charts. $3.50 per share in that EPS versus $3.39 expected. Gives you a rev line of $9.115 billion versus $9 flat expected. EPS is up 41% year over year. Revenues are up 25% year over year. I'm waiting to see what some of those guidance numbers say, Ilya, because the stock is down from a close of 535 down to 513 or so immediately after the report. If you call it the one-day expected move brought you down to about 492.5 now here, given the 535 or so close, and we're at 513 or so. We'll have to keep an eye on this, as it were. Ilya, I did not like this earnings trade today going into this, and we didn't put this on during last call, if only because when we were looking at the strikes here, $5 wide at both the high and the low wasn't giving you close to a third of the width on this, and so there's just nothing really to do here. I'm glad I stayed away from it, of course, given the market reaction right now. The NASDAQ getting some cream taken off the top from this. We can see 30,195. The S&P still 78.23, 24. Ilya, why were semiconductors on fire today, dragging up the rest of this market?
You know, it's frustrating because I looked at this today and seemed to come with PPI, and PPI was soft, whereas the numbers for CPI were right on the screws for the most part. PPI was much more overtly weak. You basically had a miss across almost all the numbers. The core year-on-year one came in line with expectations, but everywhere else, the month-on-month numbers, the headline year-on-year rate, weaker across the board. And when you look at the internals of the report, you get the predictable melt-off from energy. For a second consecutive month now, big declines in energy, big declines in transportation and warehousing sector. That makes sense. Obviously, crude oil is not at its wartime highs. We're going to get that kind of thing. I was looking for these numbers. This kind of speaks to your theory about the bonds, which surely we'll talk about in a second, because it didn't really hold today, our theory.
Well, oil had a lot to do with that.
Maybe. But you look at PPI here and you go, okay, aside from energy, you again get sogginess in core and you get sogginess in services inside core. So the increase in services PPI slower for a second month. The increase in the CPI numbers, again, you got the month-on-month rise in core services, but its contribution to the headline weakened. Core weakened once you take energy and food completely out of the equation. And so you go, okay, well, maybe this is demand destruction starting to happen here. Maybe we're going from cost push inflation, that is to say, an oil shock thanks to a war, to demand-driven inflation going in reverse. If you maintain oil prices for high enough, long enough, it's going to start to eat into discretionary spending. People are going to start to say, well, you know what? If I got to eat these oil prices for an extended period of time, I'm going to have to trim back spending elsewhere. That, of course, starts to be a problem for the very same reason that the first quarter GDP number was so scary. You can't just have an economy driven by the AI build-out.
Yes, we can.
For one quarter you can, but it's not sustainable because consumption is 5 times larger than business investment in the GDP calculus. If consumption falls or retrenches even a little, it's going to swamp what's going on in the business investment side. So you need the real economy to comply, or at least not to wilt. And the markets looked at the PPI numbers today and seemingly said, oh, good, no rate hikes near term. Run up the high beta names. What's the highest beta name we can come up with? Run the semis again.
Classic.
It's just, to me, it's ridiculous because the concern ought to be that inflation is weakening for the wrong reasons. But the market isn't prepared to think that here today. So I actually backed up from my exposure to the indexes. I took what premium I had left in my short calls because the idea, of course, as we've talked about, was it doesn't have to go down. It just can't break out. And I'm not about to end up in the NASDAQ in the same situation that I ended up in on the S&P, where almost all the premium I received was gone, because on the second day of vacation, the S&P decided it was going to absolutely rocket. Maybe that's, Errol made the point, maybe that's just Leopold getting liquidated.
I've been saying that.
Maybe that's what it is. Maybe that's what
People
it is.
have been saying, no, in the comments, Chris, you're making too big of a deal of this. Like, no, I've been, like, this is, you know, I've spent half my life in markets
Read Liar's
now.
Poker, folks. Sometimes big players get liquidated.
Sometimes big players get liquidated. This market loves doing that. And the fact that, like, the sequencing of events here, no one can convince me otherwise. Don't care how smart you are. I feel this in my bones. Citadel puts out a note the week of the Fed, that Monday. Rate hike's coming. You guys are so unprepared. So the market dumps the next few days. And then Leo has to tap out. And Citadel happens to be the one to buy their public book at a 10% discount. And then the following Monday note, they come out and say, well, the leverage has been cleared out of the system. We can rally. Come on, give me a
Go ahead
break.
and watch. I wouldn't normally say go watch the second Wall Street, because the first one is, in my mind, far superior. But if you wanted a nice artful play on how this works, there you go. Watch a few seasons of Billions, the earlier ones.
I don't
get
know
a sense
for certain
what kind of a crabs in a barrel situation this is.
I don't know for certain. I just know that Ken Griffin flies his helicopter over my house here, and he's the kind of like the people out here are the kind of people that do that kind of stuff for fun. Yeah. So yeah, no, it all makes sense to me.
fun.
Conspiracy Chris will go away for a few minutes, but back to actually Chris here. The market finds an over-leveraged position, hunts it down, takes it out. The market can bounce back. It's been a bounce back ever since the day this became public. Can't convince me otherwise. S&P 500, it continues to charge ahead here, Ilya. I got my teeth kicked in today at an SPX Iron Condor because the last few days this market's just been grinding around and chopping around and not really doing much more than that. Naturally, for the second time this week, instead of finishing just a point below the short strike and the short put spread, this finishes just on the other side of the both long and short put call strikes here at 77.80, 77.85. So this was a beautiful little $350 loser here today. But the good news is that I've been playing that against things that are longer term dated in MES and ESH7. So I'll take a lump along the way with these positions ultimately carrying the torch. I'm trying to figure out where we go next. I still feel like 8100 is in the cards for this particular thrust right now, my friend. And hopefully we can get there sooner rather than later, because I really don't want to be chasing a market higher into September. I always get scared of September. History has taught me that. But right now, Ilya, low volumes, low volatility, positive technical drift. If you're long, kind of like what they say when you're voting, if you're in line, stay in line. Like if I'm long, I'm just staying long here. I can't do anything to feel dismayed by what's going on. It's actually the being a little bit bored, and I should do a 0DT and SPX. That's weighing down my returns right now, because I'm not sitting on my hands patiently and let's go fishing like I really should be doing when it's a VIX below 15 with low volume and positive technical drift.
Yeah.
Mad at myself.
I agree. I mean, it's the thing that I've been trying to resist, and what I was harping about when we were talking 24 hours ago on this very show yesterday, that, you know what? I'm not trying to set any capital on fire for fun here. I'm trying to be really, really careful, because whatever flux we're in right now doesn't quite make the perfect sense. The macro relationships are a little fuzzy. We're clearly in some sort of a transition. I look at break-even rates. I see them not going up. I look at rate hike expectations fading away. We're no longer priced for one next year. That's gone versus the beginning of this week. And if you look at the way the markets responded to PPI today, it wasn't the kind of thing where the market goes, oh, well, if inflation is soft now and we don't need rate hikes now, we're going to need them later. Today, we go down across the board. Yields are in across maturities. So the markets are looking at this and going, yeah, this just means fewer rate hikes altogether. Now, later, in the middle, which to me should say, yes, we see a cyclical concern. We see disinflation downwind. Because how else do you explain it? But stocks don't care.
Not today. Not even after hours here, Ilya. Applied Materials, let's just pop back in there real quick. It was trading at 535 here before the close. Right at the close, it's now back to 518. So down and inside would be the winning move. Maybe those iron condors would have worked, but I got scared away. Ilya, we go around the horn here. I mean, XLK is still poking up, but it's really the semis right now. Semis are working out a little bit better for me. I mean, I would have liked them a little bit more at the highs right now. I'm still stuck wheeling this dang thing out, as it were, because I was assigned at 615 several weeks ago. And then I said, they're semiconductors. Of course I'm going to hold them. Why would I want to hold on to them?
As long as if you want to give me these shares and I'm bullish about the overall narrative, hey, I get it.
What's the worst that happens? It's on the follow account. I get assigned 100 shares at 615. This thing's not going to go down to like 500, right? So it's been a fun ride, as you can imagine. The bounce back to 590 continues to work. I think today this was actually my best performing position. Yeah, no, ESH7 was. But the semis, I mean, listen, I've been milking this a little bit, selling calls against it. I'm still in one for 36 days now. We'll see what goes on there. But today was really a day where it was, Ilya, what worked? It was a broad basket of things. I mean, I go back to the fact that so much of the stuff that I've been putting on recently when we were making our way into the end of July was all about reducing exposure and potential risk towards the AI trade. So I was looking in consumer staples and consumer discretionary smaller pockets, but just things are uncorrelated to AI basically. And I have my nifty little scan here, right? Folks a while back had asked me, Chris, talk about your process here on Airmore as opposed to just saying why you're buying the dip. Okay, so every single morning I run 2 scans. I run my buy the dip and sell the rip scans. Okay, buy the rip criteria is pretty simple. If it's below its 1 month, but it's above its 50 and above its 200, maybe it's a correction in a longer term uptrend. I want to try to buy that dip. And on the vice versa, Ilya, if it's below its 50, if it's below its 200, but it happens to be above its 1 month, it might be in a downtrend that is giving a little bit of a bounce back here. And so maybe I can sell that rip. The sell the rip criteria, I'm going to do I'll just run it right now. I'll pop on over to you. I'll click this button and this scan will run again here. The only 2 mega cap companies that fit that criteria right now are Tesla and IBM. There's nothing else that's like really struggling around these levels. On the other side of the equation, let me just flip that script here. Flip the script here. What fits the criteria for buying dips right now? Like a Philip Morris, technically, an AbbVie. Are these things moving dramatically higher right now? No, they bounced a little bit. Ilya, I already have positions in these things. I'm already sitting in an AbbVie 235, 240 short put spread, which was one of my trades of the day the other day. I'm also already in Philip Morris at 36 days, where we had that small pullback, and I used it as an opportunity to set an iron condor, because what has Philip Morris done for the past 3 months? It's chopped between 170 and 205. So why not make the bet that that's going to continue in the short term, totally uncorrelated to something AI? I'm looking for new things to do right now in this market. My worst thing that I did today was that I over traded, because I'm like, I got to figure out something to do short term. And if I didn't trade the 0 DT SPX, it would have been a much better session. Not that it was a bad session, it was a good session. But it was just, I guess what I'm getting at here is we're finding ourselves now in a portion of the calendar where you can find that temptation. You don't have to do things, folks.
No, you don't. And I maintain, if it's not there risk reward wise, if it's not attractive for me, I'm not doing it. I have to fight the itch to deploy capital just to deploy it. And I also have to fight the hopium of saying, well, oh, look at the NASDAQ. It's not back at the high. We were short at the high. So whatever, let's just let it ride. No. This market is way too prone to say, oh, well, I'm going to make a narrow break higher. And when you wake up tomorrow, it's not going to look like a narrow break higher anymore. And I could make the case if I had a reason to look at this and say, okay, I understand why the NASDAQ, of all things, decided to like this today, and I can make a cogent argument for why this doesn't hold. But if you can't do that, if you look at this and you go, this doesn't make any sense, because all of the makeup of the response to PPI ought to have been, we know about the energy thing. We just saw CPI yesterday. We've been watching it for months. Who didn't know that this was going to wash out of the number? Everybody. Okay, so what else is going on here that's not energy? Frankly, that's not food, because whatever, fertilizer is also locked in Hormuz. It won't matter for like a year and a half, because that's a much longer term supply chain, but markets are forward-looking fine. No energy, no food. There's weakening in core services, which is where consumer spending lives. That's almost all of the U.S. economy. Certainly about 70% of it. Domestic spending on domestic services. And that's where you get the weakening. And the entire rebound then in consumption in the second quarter, you start to go, wait, this is just the World Cup?
Well, okay.
And what's normal is the first quarter? Why would the market like this?
Okay, but Ilya, end of July, and this came out when you were away. But one of the things that I've been bandying around is like, I don't know how you can be bearish on the stock market when you see these sorts of things. The earnings growth was getting close to 50%, and at the end of July, we had a day where both the U.S. and global commercial airlines records were set. Both in the United States and globally, within a day of each other, we had never seen more flights around the world. I had taken a little jaunt over into the charting world. I had plotted airline flights and global GDP and recession periods. And when we hit all-time highs in flights in both America and globally, recession usually isn't around the corner.
Fair enough.
So I'm looking at jets. I'm looking at some of the credit card companies. I don't know why it went to VECO. That almost feels egotistical. Vecchio. Visa here at 365. This was one of my recent trades of the day because, consumers have been a little bit more resilient than I think we've been giving them credit for. The market's holding up somehow for now. I'm not going to understand how or why. Maybe it's boomers finally just passing along their money to their, millennial children who are, now able to actually afford some things in life. And so the economy continues to go on.
Hey, you can buy that avocado toast now. Go on.
Some people can. Not in this household. The avocado goes to the boy, which is probably his favorite food at this point. I digress, though. Nice. Visa here has been breaking out. It's been riding this monthly envelope, as it were. I really like this at 36 days at 340, 345. It's only at 79 cents now for for $5 wide strike. That's not great here. When this was put on yesterday, I think this was the trade of the day. Was it? Was it? Yes, 8:10, so 3 days ago. It was filled at $1.08. So it's decaying here a little bit right now. It's only at 79 cents. So I just want to talk through the trade mechanics real quick, Ilya. If this were now to decay, because I got in, and again, $1.08 on the credit here, because it's a short premium trade, as you're going to hear from everyone else, and we're repeating this all, you want to take it off around 50%. That's where you really consider taking it off. Now, if it's just a short put spread or a short call spread, I almost dogmatically, now it gets to your 50%. I don't care how much time's left. I'm taking it off. There's no reason to wait for more. If it's a short iron condor, if it's directionally neutral and we're pinned at the midpoint of the range when we get to 50%, I usually stick around for a little bit more to try to squeeze some. But here for this specifically, right, in for, again, $1.08, half of that becomes, we're going down to what, 54 cents? So if this decays in the next few days from 79 down to 54, tomorrow it's sitting at 50 cents. I don't need to hold this through the weekend and wait for a gap lower in Visa on Monday or try to squeeze out a little bit extra. I can wait for the next time it has its pullback within this trend and try to buy another dip. But I bring all that up because it's exemplary of this is a market where things are stretched right now. There are not many sell the rip opportunities or buy the dip opportunities within mega cap names as far as I define it. I'm having to expand my definition to go out to like large caps. And now I'm looking at things that have smaller market caps and smaller trading volumes, which means thinner option tapes. Do I really want to go into something like PACCAR? PCAR? I've never traded this before. This isn't a stock I want to trade. Look at these strikes at 123.60 cents.
I mean,
why are there 60
super thin.
Yeah, look at the open interest in the volume. So don't overtrade is my lesson from today. I had a good day, Ilya. Not sure about you, but what hurt me today was my overtrading, not my hand sitting. That upsets me.
Got to remember what the great Jesse Livermore said, regardless of how Jesse Livermore ended. The man is nevertheless full of wisdom.
He is very much like a do as I say, not as I do kind of guy.
Yeah. For sure.
Wasn't great with the ladies. Wasn't great with his money. Wasn't mentally all there at the end. Wasn't great with coat closets.
Wasn't great with coat closets.
One of a kind.
Yeah.
Unfortunately, we've had Peter Brandt. We've had Denise Schul today, which was a great interview. We didn't bring it up, but she was, I believe, the inspiration, and she helped with. She was never accredited for it, which is why she sued them, and I believe she won that case. But she was behind the scenes for the show Billions, as well. Which
great show.
Which you referenced at the top here. Small thing. So, Ilya, I really don't have much more to say about how I'm positioned going in for the next few days. I got my long. I'm mostly long deltas here. The market keeps going up. I'm continuing to be happy. If it stays sideways, I'm still happy. If it goes down, I'm upset. But that's really it.
I'm out of the way.
What is there to do?
I'm out of the way. I took what premium there was while it was choppy. Thank you very much. If we don't have conviction to go down in a larger way, and we're going to start to, I mean, certainly in the case of the S&P and maybe in the case of the NASDAQ after today, if we're going to get back to some sort of record-setting dynamic, I'm not trying to stay in front of that. No, thank you. I would much rather instead buy some gold, which I bought more of today, because if we're going to see fading rate hike expectations, gold and silver should do well, and they held up admirably today. There was a little bit of a chance to pick up a little bit more on a pullback to retest the immediate range, so I did. Keeping it small, using the 10Z futures to manage size in a flexible way, but I doubled my position in gold today just because if this is where we're going and this is the market that seems to follow the macro tea leaves, so be it. I'm also still short the dollar because I think that held up pretty decently as an idea here today. And again, if you're gonna keep taking away rate hike expectations, dollar's not going to look great.
No, dollar wouldn't look great in that scenario. My dollar stuff is mostly underwater right now. Some of it's working, some of it's not. Dollar needs to break down further from here for me to tap out, and we're still holding the uptrend. And Ilya, you talk about gold and how real rates were going up and gold wasn't going down. What was really driving the dollar here recently? I mean, in my view, it was rate hike odds. Rate hike odds today just collapsed to their lowest level in weeks. This is the highest close that we have in the SR3Z6 contract since June.
It's an impressive
16th.
showing for the dollar, considering. I see where you're going. Which, by the way, the fact that we have a stronger stock market helps not at all to explain what's going on here, because you could say, risk on, risk off dynamics. We know the dollar is responsive there, but that again tells you dollar should be selling off on a day like today when stocks are strong, and it doesn't want to go.
No, and so you get this dollar bounce a little bit. Gold off near 4,500. I can't say I'm surprised here. We have the former swing lows. We have the downtrend. We kind of met both of them here at the same place in both time and price, and then the market finds a reason for relief after rallying 10% in 2 weeks. We were speaking yesterday. I mean, ideal world, 4,300. Give me 4,300. Happy camper at 4,300. At 4,300, I am buying 5,000 calls for the end of the year. Just a few.
Yeah.
But I feel like
5,000
that's
is basically my bogey now. I feel like that's where we go back to, and then we'll rethink. On the continuous contract, it looks like the break is in.
But it's not even. It doesn't even be a trade like. The market prices things based on the likelihood of getting there, and like, we could probably get there. We're just on the outside expected move. No. Outside expected was 440, 55. I mean, Ilya, we go any bit further. The 5,000 calls are going to be within the expected move for the end of the year. And like at that point, this isn't a fun trade anymore because like the market priced it and it's no longer, no longer a moonshot. It's just, it was within the realm of possibility. So much for being lucky or good. You're part of the crowd. All right, we don't need to keep complaining here. Hey, let's end the show on a little bit of a funnier note here. D Jizzle 88, you sent in this really wonderful tweet today from folks to us, which I thought was really funny. We're all laughing. My friends are actually laughing here out of frame right now. Looks like C Vecchio FX. What could he be talking about? This wonderful meme of if Hassan Piker shaves his beard, he looks like Rachel Maddow. And apparently, to our lovely followers on Twitter, that looks like me. I cannot wait to put that in with the picture that our producer Matt Walsh made of me here, Ilya. All these photos of me going around. It's really nice.
And it's somehow always about shaving parts of your head.
I don't know why. What's going on?
Why are people trying to shave parts of your head?
I don't know. With that, overtime's out of time for this Thursday. We'll be back on Tuesday next week. Remember, Mondays now, Tasty Crumbs. Jim Carson, Jermal, Chandler. Sometimes I hop in there if Jermal's out. But otherwise, those two are now 4 Eastern, 3 Central, right after last call. They debate the topics of the day. Jermal and Jem, they try to figure out who's actually right or wrong and ultimately how to make money on those views. 4 Eastern, 3 Central on Mondays here on Tasty Live. Otherwise, overtime is Tuesdays through Thursdays, 4 Eastern, 3 Central, right after last call. We'll see you there next time. Until then, though, good luck trading. Ilya, we'll see everyone later.
What's up, Tasty Nation? Welcome to the show. Good morning. It is Thursday, August 13th. We just got some numbers that hit the wire. PPI, E-minis and NASDAQ were higher. NASDAQ just sold off, being up 20, 30 points to being down 20 points. My name is Mike Butler. I'm here with Jermal Chandler. Join us on the YouTube channel if you haven't already. We're streaming live there. You can throw in your trade ideas, questions along that right-hand side chat or on the bottom chat if you've got your window.